Good morning, everybody. Good morning, and welcome to today's conference, and also welcome to our virtual attendees. Today's event's being live streamed, and thank you also to our sponsors and our various supporters. And of course, today we take as our theme data, AI, and the future of financial services. And it brings to mind an interview I did recently with Vishal Maria, who's the CEO of Quantexa. And he was talking about, what are the fundamentals when it comes to this area. And he said that in his experience, people rush over from thinking they have sufficient data to trying to put AI models in place. And he said he cannot recount how many companies he's worked with where they've had to backtrack and go back to data as being the foundation of AI. And if you don't get that foundation right, trying to implement any form of AI model, whether Gen AI or going forward to agentic AI, is likely to be doomed. And there are sort of three areas, really: the quality of the data itself, and how trustworthy it is both internally and externally, and of course data governance and how that ties into AI governance. And without getting the data right, his view was that you wouldn't get the AI model past any assessment for risk management, and the whole project would become much more difficult. So when I think about today's theme, it does recall his words. And today we'll pick apart some of those elements and look at them in depth. We have a great lineup of speakers who will help us do so. I'd also just like to flag up, if I may, two forthcoming events we have, which you may be interested in. The first is on AI and data innovation on the 1st of July, where we're delighted that the Secretary of State, Peter Kyle, is coming along to speak, and we have the heads of quite a few of the AI companies speaking, and the heads of IBM, Microsoft, and other organizations. And the second event is the third edition of our AI Regulation Summit. So if you want more information on either of those two, the staff at registration desk will help you. I'm sure they will appear on the screen from time to time as well. So today we have a very good program, but if you'd like to help us improve it, there are questionnaires, I think, on all the tables. Please do fill those in. There's also an event app which will give you further information about today's program. So I will, with no further ado, introduce our chair for today, Vivian Arts. Vivian is a Senior Data Strategy and Privacy Policy Advisor to the Centre for Information Policy Leadership. She's also the CEO of the FTSE Women Leaders Review, the UK's business-led voluntary framework supported by government to improve the representation of women on the boards and leadership teams of the FTSE 350 and 50 of the UK's largest private companies. She's a non-executive director, holds a number of expert advisory roles supporting businesses in their data privacy and digital strategies, with a focus on AI and new technologies, anti-financial crime, and equality and diversity. She has had some 20 years' experience in global financial and professional services, including roles at London Stock Exchange, Refinitiv, Thomson Reuters, and Citibank. Vivian, over to you.
Thank you very much, Morris.
Good luck today.
Thank you very much. Terrific. So good morning, everyone. Absolute pleasure to be here with you. I'm just balancing my little laptop here as well. I'm trying to be a little bit more digital. There we go. So my name is Vivian Arts, and a very warm welcome to the event today. I just want to reiterate a thank you actually to our sponsors, Latham & Watkins, Alex Partners, and TLT, as well as the supporters without whom these events wouldn't take place. And then just to reiterate some of those housekeeping points, we are actually on a live broadcast, so hello everyone on the screen. You will get a recording after the event as well if you've attended. In terms of fire alarms, we're not expecting one, so if the fire alarm does go off, the fire exits are ahead of you, and then you'll be directed outside. If you haven't downloaded the event app, it is actually quite useful, so please do go ahead. And you will find that there is a delegate questionnaire as well on your table. So please do fill that in during the course of today. So, just going to do a little bit of scene setting here. So, the UK is actually the world's leading international finance centre and has been for 5 consecutive years, according to the City of London. And the financial services sector in the UK contributes about 13% of the UK's economic output, which equates to almost £300 billion in 2013. A recent City of London research paper also found that London ranks second globally in terms of innovation in financial services ecosystem, closely following New York, whereas the UK actually excels in cross-border banking, positioning itself as a leading market for the movement of capital and people. And we know that the UK is highly innovative in this space and has had that leading role for quite some time. But things have been changing, and certainly if we think back about 2.5 years, we can see that OpenAI launched ChatGPT on the world on the 30th of November 2022. There's been plenty of speculation around how generative AI and now agentic AI could revolutionize financial services and our society more broadly. Lots and lots of opportunity there. But of course, we also know that the financial services sector has been familiar with and using traditional AI for many, many years. And traditional AI, as we know, is much more focused on predictive customer and business performance analytics, on fraud detection, and on risk management. And it actually does a really good job for us in that regard. In contrast with generative AI, it's much more focused on content generation and natural language capabilities. And there is the possibility of the potential on productivity, which is highly sought after. We know that productivity is lower than it should be. And we understand that about 74% of organizations have said that they're realizing a return on investment in terms of their generative AI use, which is obviously very, very attractive. So where are we currently using generative AI? So the current use cases are actually quite traditional. They're quite sensible in terms of customer engagement and personalized marketing. It's being used for knowledge management and information retrieval, software development and data management, intelligent workflow and email processing, fraud and financial crime, legal, contractual and compliance text analysis, desktop and meeting productivity. All of these things are use cases which are relatively well understood, both in terms of the technology involved, and all of them involve, to a certain extent, human oversight, and they're relatively low risk. So far, in terms of generative AI, we've been sensible and cautious about how we're deploying it within the financial services sector. But the real opportunity here is how generative AI can be a catalyst to incorporate a broader reimagination of processes and service offerings. So how could it actually revolutionize what we do in the financial services sector? How can we consider how it can challenge established business models to materially impact the potential within our ecosystem? But that in itself is also going to raise issues around financial stability as well. But all is not lost. There is lots to think about, and that's what's so fantastic about our agenda today. Today we're going to be having a look at a full range of topics, including navigating tech regulations in the UK and the EU. And actually I'm really pleased that's our first session, so we're actually going to set out the landscape there. We're going to be looking at the future of data and AI strategy in financial services more generally. We're going to be looking at digital assets, which has been around for a while, has been, I think, slower to progress than we had originally anticipated, but it's clearly not going away. And also, what do we mean by trust in terms of digital assets? It's had a bit of a rocky ride so far. We're going to have a look at agentic AI, which is the new kid on the block. How is this a game changer? And what are the risks and opportunities that it brings? We're also going to be looking at digital identities. Digital identity has been around for a while. We've talked about it since the 2000s. We've been talking about digital identity. It hasn't had traction yet, but finally we're seeing that the tide is turning. And I understand that over 50% of people now are much more supportive of digital identities, and that's for a number of different reasons, not only positive, but also defensive reasons as well. We're also going to look at the FCA's approach to regulating AI and the FCA's role in international cooperation. If there's one thing we know about financial services, about data, about technology, is that it is absolutely borderless and that international cooperation is essential. And then finally, we're going to look to the future. So what does the future hold in terms of AI and data for our financial services sector in the UK, which also operates globally? So we have an impressive lineup coming today. So in terms of our first session, as I said, our first session is called Navigating Tech Reg in 2025, a journey through key milestones and obligations and the practical implications for your company. I'm delighted to welcome Fiona McLean, who is a partner at Latham & Watkins. Fiona is the vice chair of the firm's technology industry group, and she advises market-leading clients and on complex technology transactions and data privacy compliance, with a particular focus on AI, cloud computing, and data strategy, the magic mix for today. So Fiona, please come up and say, everyone, could we extend a warm welcome to Fiona? Thank you.
Thanks, Vivian. Good morning, everyone. I'm delighted to join you here today. As we've heard, today's conference will explore key legal and compliance issues regarding AI, digital assets, digital identity, data innovation, and the opportunities they present. And before we get into the detail on these topics, we just wanted to set the broader tech and data regulatory landscape for you, looking at some of the legislation that's coming through in the EU and the UK so that we can put these regulatory issues into context. So, the regulatory landscape has never been more crowded or more consequential. What we used to see as, the odd update from Westminster and Brussels, etc., is now an almost constant, steady flow of sweeping and overlapping and often global obligations that they are imposing on data and tech issues. This timeline shows the key milestones for UK and EU data and tech regulation this year and up to 2027. There's a lot of significant regulatory change coming up, which is building on existing established regimes such as the GDPR, the NIS Directive, and other financial services and outsourcing frameworks. In this session, we are going to briefly look back at some of the major legislative acts which have come into effect in the last 12 to 18 months, and then look at some of the forthcoming milestones under those pieces of law and explore how legal and compliance teams should be thinking about data and tech regulation in this new frontier. The EU AI Act, now in its implementation phase, introduced a tiered risk-based framework for artificial intelligence systems. It imposes transparency, human oversight, and documentation requirements on everything from recruitment software to credit scoring and autonomous systems. A key milestone that occurred this year, a few months ago, was the ban on prohibited AI uses under the EU AI Act, which came into effect in February. And that barred the use of AI in a handful of narrow but most harmful use cases. Also coming into effect in February was the AI literacy requirements under the EU AI Act. Now, whilst the literacy requirements are unlikely in and of themselves to give rise to significant regulatory enforcement, it is possible that supervisory authorities will look at that in the broader scheme of compliance with the AI Act and consider it in investigations triggered by higher risk AI activities. Another key milestone coming up under the EU AI Act is the obligations for general purpose AI under the Act come into effect in August 2025, when the final GP AI Code of Practice is expected to be finalised. There is, however, some doubt as to whether or not that deadline will be met, because there has been increasingly a lot of negotiation regarding the final text of the code. Assuming it does come into effect in August as expected, the code will shape the practical implications of the Act for GPAI model providers and for downstream deployers of GPAI in areas such as copyright, guardrails, transparency around training data, and systemic risk assessment and mitigation. Perhaps the most significant of the milestones on here, however, in relation to the AI Act, actually comes into effect next August, when the requirements around high-risk AI systems come into force. The high-risk use cases may arise in the context of credit checks, personal insurance, biometric identification and recruitment, among many others. And so the scope of these are broad and particularly likely to be prevalent in financial services. They will have practical compliance implications for both providers and deployers of AI in this context. Whilst these obligations don't come into effect until next August, and so in many ways seems like quite a long time away, that's not much lead time given the extent of these obligations and the potential operational and strategic implications that they will have for businesses, particularly when you take into account the complex interplay between those requirements and many of the other data and tech regulation that we'll be talking about throughout the course of today, such as the GDPR, the Digital Services Act, the Data Act, etc. We're also already seeing EU data protection authorities taking enforcement action in relation to the use of AI, albeit they're very much at this stage focusing on the large Gen AI providers. And so whilst some of these milestones may still be a little while away, it's not too soon to be thinking about the steps that are necessary to reach compliance. Here in the UK, AI and copyright is the current legal hot topic, and we'll hear more about the wider regulatory strategy for AI in financial services later today. Another key milestone, if we go back to the beginning of the slide, right on the end there, was the introduction of DORA in January this year. DORA came into force as part of the wider EU Cyber and Resilience Framework, regulatory framework. I'm sure that many of you in this room are familiar with DORA. It applies a range of resiliency requirements to EU regulated financial services entities and to designated critical technology providers. These critical providers are expected to be designated in October or November this year and will be required to implement bespoke DORA compliance plans. DORA also indirectly impacts nearly every provider of tech-related or data-related services to financial services. They extend to providers established outside of the EU even. We'll therefore start to see the enhanced requirements introduced by DORA flowing right through the data and tech supply chain. Another key watch point this year related to DORA is going to be DORA's interplay or the intersection with NIS2. So particularly around financial services, fintech and cloud. NIS2, which builds on the original NIS directive, significantly expands the scope of the NIS cybersecurity regime and enhances mandatory cyber standards and incident notification. It also introduces enhanced response requirements and significant fines. It's being implemented at a national level, and although the deadline was last year, many jurisdictions have yet to fully implement it. For those who have implemented it, Q1 of this year introduced the deadline or the milestone for national registration requirements coming into effect. And so many organisations will have already gone through that process of assessing whether or not they're subject to DORA and in which jurisdictions they need to register. So there will already have been some regulatory scrutiny around that compliance. NIS2 and also the NIS regulations, which are expected in the UK, which are expected to be updated later this year to align with NIS2. So for those who have been following the regulatory journey, NIS obviously was introduced prior to Brexit. We have NIS regulations from the NIS directive in the UK. When NIS2 came into effect, it was post-Brexit, so it didn't have effect in the UK, but we are expecting the UK government to bring changes in line with the NIS2 changes. And you'll see that both NIS2, NIS regulations and DORA intersect in many ways. There's systems, network, and data security, supply chain security, and incident response obligations covered in all of those pieces of legislation. Whilst the regimes are not fully aligned, it's certainly risk-based if you look at them across the board. And so it is proportionate to take measures which address each of these pieces of legislation in addressing or approaching your cybersecurity programme. And it could be an effective approach in facilitating some sort of efficient engagement across each of those pieces of legislation to try and streamline the obligations across the data and tech supply chain. Looking towards the end of the year, the majority of obligations under the Data Act come into force in September. In addition to connected products and the Internet of Things, the Data Act introduces requirements for cloud and edge computing providers around service switching, functional equivalence, interoperability, and preventing unlawful government and international data access. In practice, it will be important to address cybersecurity, resiliency, and interoperability protocols, which again, based on what I've just been saying, overlaps and intersects with some of the other pieces of regulation that we're seeing coming through. So again, these are sort of obligations that you need to think about through your entire tech supply chain, but in particular where you're using cloud providers. The Data Act is going to have a direct impact and should be viewed alongside those other competing pieces of legislation such as DORA. Also to keep an eye on this year is the progress of the Data Use and Access Bill, or DUA Bill, which is expected to receive royal assent later this year, with the majority of the provisions coming into effect in early 2026. Just last month, the Commons rejected the majority of the House of Lords amendments to the bill, many of which related to transparency and the introduction of AI provisions through that bill. That was rejected on the basis that the Commons didn't really want this to become an AI act through the back door. And so the bill is now back with the House of Lords for further consideration. But sort of hanging over this back and forth between the House of Lords and the Commons is the potential expiry or the sunset clause of the UK adequacy decision. So earlier this year, the EU extended the UK's adequacy decision until the 27th of December 2025, so a 6-month extension, essentially to allow for the progress of the bill through Parliament and to ensure that it was fully enacted before it was taken into consideration in relation to the UK's adequacy decision. But the EU Commission has warned that further dilution of the safeguards applied under the DUA bill could jeopardise EU to UK data flows. So that's something that's very much being kept, under a watchful eye for any organisation, which I think is every organisation who needs to think about EU and UK data flows. And so that will remain under scrutiny as the bill continues through the dialogue process. So that is simply a handful of the milestones that are coming through in the next year or so. So against this backdrop of significant regulatory change in such a short period of time as well, it's critical to keep an eye on the big picture. And so, as I've mentioned already a number of times, there is a lot of overlap, and so you need to think of the tech regulation landscape in a manner which is comprehensive and looking across the various different strategies to ensure that there is consistency in the way in which you're facilitating innovation and data through your organisation. Across these frameworks, it is helpful that there have been a few core obligations that are emerging and therefore can be taken away as kind of consistent themes to run through a compliance programme. One is proactive governance. Whether it's under the AI Act or DORA, it's very clear that regulators expect structured oversight. That means risk classification, internal policies, named responsible people within the organisation, and critically, a move away from reactive compliance. It's got to be design stage governance at this point. Also, documentation and accountability. Very clear throughout all of these pieces of legislation that the kind of core principles that were established under the GDPR, that accountability and record keeping are critical, continue to be very clear throughout these new pieces of legislation. Essentially, if you can't prove it, you can't claim it. And whilst that is, very much sort of in the blood of financial services entities who have had formal compliance in place for years, it's quite novel for some companies outside of regulated sectors who have not necessarily had that level of structure in their data and tech compliance to date. Another very clear theme throughout all of these pieces of legislation is transparency. So whether you're classifying high-risk AI, disclosing platform content moderation rules, or explaining automated decision-making, the transparency bar is rising. And that's not only in relation to your engagement with your regulators, which, as I said, they expect clarity and auditability, but transparency to the end users and customers. And then finally, sustained and adaptive compliance. So most of the obligations under these pieces of law are essentially ongoing obligations. They are not tick box exercises. They require regular risk assessments, market monitoring, ongoing resiliency testing. The compliance has to be continuous and must be budgeted, staffed, and resourced accordingly. So, what does this mean on the ground? So keeping up with so many milestones is obviously going to be a challenge, even for the most well-resourced compliance teams. And approaching the next few years with some sort of kind of key principles in mind can certainly help, both in terms of the internal messaging to businesses, who I think we're going to increasingly see business just feeling like they're being bombarded with new regulatory obligations, but also helping just to ensure some of the sanity, I think, for those of us who are operating in this space. So a couple of things just to take away. Tailor compliance to your risk profile. It seems like such an obvious thing to say, but obviously don't treat all laws equally. Treat them proportionately based on your business model and the risk exposure associated with them. Building ops into tech delivery is going to be critical. There is no longer an option for companies to have kind of legal sitting in a silo. Compliance in 2025 and beyond needs cross-disciplinary capabilities. So thinking about turning legal obligations into workflow and utilising tools and audit trails which will assist with that compliance and help meet those upcoming milestones. And using regulation as a differentiator. That's certainly something that we think is a message which may be helpful when seeking buy-in from those jaded business people who are constantly being bombarded with these requirements. Especially under the AI Act and under DORA, we think that companies can really use their compliance, essentially demonstrating that they are trustworthy and they are across all of these requirements, as a way of gaining a commercial edge. Whether it's through transparency reports or resilience attestations or third-party audits, essentially good compliance now equals good business. And then finally, staying agile. We're very much in a period of flux. As we've seen from the AI Act, for example, guidance is key. These pieces of law, as they come through the regulators not always very clear in terms of what the actual requirements are. And so while guidance is still being issued and standards are still emerging and national authorities are still interpreting these rules in different ways, you need to be capable of flexing as required to meet those standards. The approach doesn't need to be perfect, but it needs to be thoughtful, it needs to be evidence-driven and risk-based. So, in conclusion, navigating tech reg in 2025 and beyond is less about sort of chasing compliance and meeting those requirements, but very much also about building that legal resilience and compliance into the fabric of your organisation. That's really the only way in which meeting this ongoing and evolving regulatory landscape is going to be possible. The milestones are plentiful and the impact is significant, but with a well-considered, diligent and flexible approach, like I said, keeping a pace with the data and tech regulation in 2025 and beyond should not be insurmountable. So thank you for your time. We do have, I think, maybe only about a minute for questions, but if you do have any questions, very happy to take them now or later in the day. Okay, thank you very much.
Thank you very much, Fiona. That was actually an excellent setting for today's discussion. And it is actually incredible just how much legislation is out there. And I think you very helpfully pointed out the intersection between all of it. It can't be seen in a siloed way. You can't just look at UK legislation. You need to be looking beyond, because what we do is impacted by legislation in other jurisdictions and also the way in which we operate, whether it's where our clients are, where our suppliers are, or where our businesses are located. And I think some very sage advice there as well about being much more strategic in terms of how you implement those obligations in your organisation, that risk-based approach, being intelligent about it, being flexible about it, rather than treating all the legislation the same. And the final thing that I thought was an excellent point as well, which is how do we automate that compliance when we're building out our systems now? Super, super important that we're able to actually implement that compliance into our processes and operations, that it doesn't sit on the side like advice as something separate, as an additional step you have to take, but that it's actually integrated and part of what your organisation does and how it does it, which is absolutely super. So thanks very much for those insights. We're now going to have a series of 3 keynote addresses from an amazing group of experts. After each of our experts finishes their keynote, I'm going to invite them to go and sit at the podium up there. And then when we've finished hearing from each of the 3, we'll have an opportunity to do some Q&A with the audience more broadly. So for our first keynote, I am delighted to introduce and to welcome Stephen Armand. Stephen is the Executive Director for Regulatory Risk at the UK Information Commissioner's Office. If you don't know what that is, that's where data protection sits. And he focuses on how do we actually implement information rights into new ideas, technologies and business models as part of our digital economy. Stephen also is the UK ICO representative for the Digital Regulation Cooperation Forum, which is an interesting grouping of the ICO, the FCA, the CMA, and the, telecoms, Ofcom, thank you, that's it, the 4 of them, which is actually a really unique regulatory grouping that's being modelled now in other countries across the world, recognising that the technology, the AI, the data piece doesn't just sit with one regulator, it sits across all of them. Stephen has an illustrious career prior to being at the ICO, including working at the World Economic Forum. But please join me in welcoming Stephen to the podium and to hear a little bit more about what the ICO is doing in this space. Welcome, Stephen.
Thank you, Vivian. And good morning, and thanks for the invitation to join you today. Look, it's no exaggeration to say that the financial services sector is undergoing a profound transformation right now. Data is no longer just a byproduct of business operations. It is actually the engine powering everything from customer engagement to credit risk modelling to fraud prevention to product innovation. This transformation itself brings enormous potential, but it also brings with it a challenge. How do we build and maintain public trust in the systems, the services, the decisions that rely on that data? And at the ICO, our role is to make sure that this data-driven future is one that people can trust, not by stifling innovation, but by enabling it to happen responsibly. That's why we're working closer than ever with our regulatory counterparts, including at the Financial Conduct Authority, to ensure that data protection is helping, not hindering, to deliver better outcomes for consumers and for innovation across the sector. So let me give you a bit of a flavour of what that looks like in practice in different areas. And I'll start with the consumer duty. We've heard very clearly from firms that there's sometimes uncertainty about how to reconcile the expectations of the duty with the requirements of data protection law, especially when it comes to supporting vulnerable consumers. I need to be crystal clear on this point. Data protection is not in any way a barrier to upholding the consumer duty. And in fact, actually, we see at the ICO that the aims of both frameworks are aligned to ensure that people are treated fairly, transparently, with respect. We've already taken joint action with the FCA to reinforce this. In 2023, we issued a letter confirming that firms can contact customers with neutral, factual information about better savings rates, even where those customers have already opted out of direct marketing. It's common sense in many respects, but it's also good regulatory alignment. Then, in November last year, we published a joint statement with the FCA and the pensions regulator, clarifying how data protection law supports customer communications in pensions and in retail investments. Again, our message was simple. These regimes aren't in tension, they're complementary. And that actually applying data protection law to your thinking about how to engage your customers is going to get you to the best outcome. But we recognise that firms continue to value clarity. And as flagged in the recent Digital Regulation Cooperation Forum, DRCF work plan, the ICO and the FCA will be continuing to work together over the coming year to deliver this. We held a joint roundtable last month with various financial services stakeholders. And we're going to be looking at what further advice might be necessary to support coherence in relation to the consumer duty, whether that's on data sharing, whether that's on data minimisation and concerns about how much data you might need to gather in order to fulfil your obligations under the consumer duty. Our aim is to give you the confidence to collect and to use the data necessary to protect and support customers whilst maintaining high standards of data protection. This is just one illustration. I'd like to turn to the question of fraud as just another, because the same principle applies to our approach to fraud. We know that FS firms are under intense pressure to detect and to prevent fraud. And we've heard concerns that data protection law is sometimes seen as an obstacle to sharing information quickly and effectively. So, in November again, we issued a joint statement. With it, the very clear line, data protection is not, and frankly should not, be an excuse for inaction when tackling scams and fraud. We've provided updated guidance that explains how firms can share personal data lawfully and responsibly to detect fraud, to protect consumers, to meet their regulatory obligations. We're working very closely with the FCA to dismantle the lingering myths that sometimes exist within the sector and to give firms the absolute confidence that with data protection law they can act to protect the public interest. The public rightly expects that regulators and firms have their back and that they work together to reduce harm. We at the ICO are playing an important role in making sure that that outcome is delivered. Another area where we know, as indeed the title of today sort of alludes to, that many are seeking clarity is in relation to artificial intelligence. From credit scoring, investment decisions, to chatbots and consumer due diligence, AI is already reshaping financial services, and its footprint is really growing. Now, we've been providing the clarity that firms need to use personal data responsibly for over a decade, and with new legislation on the horizon, we'll continue to do so, with fresh guidance coming up on automated decision making and bias mitigation. We'll be working really closely with the FCA to ensure consistency and coherence in our approach. But AI is also advancing in new directions. The rise of generative AI models, including LLMs, raises fresh questions about responsibility and accountability, especially where foundational models are being developed by one party and then deployed by another. It's an area that we've really heard from firms across the FS sector. It's an area that Start's got concerns about in terms of actually who's going to be responsible for what. So, following an extensive consultation last year, we have published a position statement just before Christmas, setting out our expectations, including guidance on how to allocate accountability and liability across AI supply chains. And just last week, in time for this, we published our broader AI and biometrics strategy, setting out our intention to ramp up supervision of AI technologies to prevent harm, to promote innovation in a variety of different areas, including across both generative AI and automated decision making. Our focus at the ICO remains on providing practical clarity so that innovation and investment isn't held back by uncertainty, but it's propelled forward by a shared understanding of what the standards should be. And we're not stopping at guidance, I should say. We've also built a suite of innovation services to support firms from the start of their journey. Our innovation advice offering provides rapid, informal input on novel uses of personal data, where projects involve more complex or higher risk processing. Our regulatory sandbox at the ICO provides a structured, hands-on engagement process where you can work through challenges and co-develop solutions with us. These are services which are all about accelerating responsible innovation, not slowing it down. And we're working similarly with the FCA in its own innovation services. So where data protection issues arise in its own regulatory sandbox or in its tech sprints, the ICO is present, engaged and ready to help when data protection issues arise. We've gone even further in our collaboration through the DRCF on our AI and Digital Hub pilot, which is a joint initiative with the ICO, the FCA, Ofcom and the CMA, which provided innovators with early, informal advice on cross-regulatory questions, helping them identify and resolve issues before they became barriers. We're currently learning the lessons from that pilot, ensuring that we can continue to provide innovators with the best support possible, and we'll be updating you, hopefully in the not too distant future, on what will follow from that. We believe that this kind of joined up preemptive support should give you confidence to move fast and hopefully to help you get it right for the first time. Looking beyond AI and innovation then, towards other areas of technology, we're actively shaping many of the data foundations that are going to be needed for the next generation of financial services. So, for example, on digital ID, we're working with the Digital Regulation Cooperation Forum and other partners to ensure that identity systems are interoperable, secure, trusted. Later this year, please watch out and please join in a cross-sector symposium that we'll be hosting on the very particular topic of digital ID. On smart data, we're building on the lessons of open banking and continuing to work with the FCA and with others to support the safe expansion of data portability into other sectors. We think this is about empowering people to use their data to access better services without compromising their rights. And we think there's a huge area of opportunity for learning from what's already happened within financial services and to translate that to other sectors too. Turning to digital assets, we published joint research with the FCA to make sure that we really understood consumer expectations and concerns. And next month at the ICO, we'll be issuing our first guidance on how data protection law applies to blockchain, the very foundation of how many of these assets work. In each case, we're bringing the ICO's strengths in governance, in protecting rights, in ensuring consumer trust to support innovation that's scalable, sustainable and fair. So let me return to that central theme. At the ICO, we don't see ourselves as some arm's length enforcer. We see ourselves as a regulator that's here to enable good outcomes, innovation that's safe and trusted, services that are smart and inclusive, a financial system that commands public confidence. We'll continue to work hand in glove with the FCA across the regulatory ecosystem to reduce friction, to provide clarity, and to help firms deliver on their ambitions. Put simply, if data is the fuel of your innovation, we want to make sure that trust is the engine that takes you forward. Thank you.
Thanks very much, Stephen. I just had to finish writing that down. So data is the fuel and trust is the engine. So thank you very much for that. Really great to hear the work that the ICO is doing in this space. I mean, I remember years ago chairing different industry bodies and finding it very challenging to find that cooperation, collaboration between the FCA and the ICO, and it's absolutely transformed in recent years. And I think you managed to touch on just about every single innovation area where actually data is so crucial and fundamental. And you're absolutely right. There is so much concern that businesses have about, can I use the data in this way? Am I still going to be able to comply with my obligations? And it has a chilling effect. Organizations are then overly cautious in their approach. They're not using data as effectively as they could and they should, and it's having a significant impact on innovation as well. So thank you very much for that clarification. And again, really useful to have the partnership through the Data Regulators Cooperation in Forum, which is bringing those key regulators together in this collaborative effort. Our next speaker, I'm delighted to introduce, is Gareth Oldale, who is a partner at TLT and also head of the London office, and he's also head of the Data, Privacy and Cybersecurity team. I saw this in his bio and I couldn't resist reading it to you. Rather than my words, why don't you listen to the words of the Legal 500, which note that Gareth is fantastic and pragmatic, endlessly impressive, a powerhouse in his field. Now, we won't tell this to the competition people, but they also say having him on your side feels unfair. So, Gareth, you've got a lot to live up to today. Gareth acts as an external data protection officer in addition to his work for his current clients for a number of organisations, including the Financial Conduct Authority, the Payment Systems Regulator, and the Financial Reporting Council. So please join me in welcoming Gareth up today. Thanks, Gareth.
Thank you, and goodness me, with introductions like that, you've got to be able to deliver, haven't you? I should add that the person who provided that quote to say that having me on their side feels like it's unfair didn't clarify whether that was a positive thing or a negative. I've followed up on that just to make sure for the next edition that there's some certainty provided. But anyway, thank you so much for having me this morning. Goodness me, there's a lot to talk about in the world of AI and data in financial services right now, isn't there? I'm just going to spend a few moments talking through how we see the corollary between GDPR compliance, Data Protection Act compliance, and financial institutions taking their first steps into AI adoption, and where there may be some beneficial learnings from one arena into the next. I thought I'd start with two obligatory things for any talk about AI. One is to show that there is a human involved, so that's me at the bottom there. Two is to show that AI doesn't always come up with the best quality output, and so it definitely still needs the human intervention. This was me playing around with Copilot yesterday, asking it to provide an image that talks about the tension between innovation and good governance, which is a lot of what Stephen's been talking about as well. This was iteration number 5 or 6. I wasn't blown away by the quality, but I thought I'd show it in its raw format so that you can see that there is still a role for humans in this innovation and governance tension too. And I guess the starting point for me when considering that balance and that tension between the two is why bother with innovation in the first place? I think it's hopefully a self-evident answer to the question, but nonetheless worth unpacking. And Stephen's already touched upon some of the use cases that we see across financial services. I've put some of the key ones that we see and that we're asked to advise upon most frequently there. Fraud detection, absolutely. Combating fraud is somewhere where an area where we're seeing AI being used more and more frequently. And also aligned to that, also defending against cyber attacks, whether that's in a fraud context or more broadly. Some of you may have seen in the Financial Times over the weekend, there was a full 2-page spread on the rise of AI being used to generate cyber attacks on businesses, but also the flip side of that coin being that AI can be used as a defensive mechanism as well. And so this is certainly one area that we're seeing lots of focus and where it is deriving good business benefits. Algorithmic trading, I think machine learning there has been around for quite a while. Probably the single biggest area that we're seeing focus on at the moment is personalization, and banks and other financial institutions using the data sets they hold to deliver better outcomes for their customers. A clear correlation there to the consumer duty. And so using AI to, as Stephen was saying, not as an inhibitor to regulatory compliance or as an inhibitor to innovation, but on the contrary, as the engine room to turbocharge that compliance. Overall, what we see is over 60% of financial institutions using AI in at least one function. Excuse me. But as I say, perhaps the area that's of most interest from a privacy perspective perhaps is that personalization arena. And so that is something that we're spending a lot of our time on at the moment. This pie chart derived from an NVIDIA survey earlier this year, just showing some of those areas where we're seeing key investment made by financial institutions. And again, it rather reflects the slide previously. So a lot of focus on fraud detection, customer experience. So we're seeing a lot of chat room usage, a lot of call center operative utilization of AI to transcribe calls, to in some cases look at emotion recognition active. And the bit that I've underlined there at the top, I think really illustrates what Stephen was saying and also what my own view is, which is that there ought not to be an inherent tension between innovation and good governance, but actually one can enable the other. And that's exactly what it says in the ICO's strategy, and if we wanted to look as to why GDPR is a good place to start when you're thinking about your AI compliance position, point one would be because the regulator agrees. You've got this balance that needs to be struck, but between protecting fundamental rights of individuals, but also enabling innovation, driving the digital economy. And so I think from a user perspective, if I may say, it's very helpful to have a regulator who recognises that balance and is willing to safeguard it. Some of the other areas that again Stephen's already touched upon, but Gen AI foundation models are bound to be an area of particular focus, and likewise automated decision making. And those of you that are following the progress of the Data Use and Access Bill, and of course you all are, who wouldn't, will know that ADM is one of those areas which is being looked at, and where there may be some changes introduced if and when that bill comes to pass in the next few months. Again, just to demonstrate and illustrate that point around the ICO's recognition of that need to balance, and it is that recognition that innovation is necessary, is required to support sustainable economic growth. However, that's not to come at the cost of compromising individuals' rights. And so if we're looking at where are the governance challenges for deploying AI, well, I guess the key ones that occurred to me were things like bias and discrimination. And I think perhaps just broadening that out slightly, I'd maybe say it's things like unintended consequences, so not just pure bias where there's some kind of ill effect on a certain category of people, but also where things that aren't intended, it can be the best of intentions but have an unintended consequence. And just to give an example there from a completely different sector, so we support a number of elite sports teams and advise them on the data protection matters. One of those looking to deploy an AI tool to predict when their players are going to suffer injuries. And you would think, that the best of intentions there, that's looking to protect the health and safety of their employees, their star players. But there is a potential unintended consequence there, which is, well, if you're predicting that I'm going to be injured and my contract's coming to an end and I'm then trying to negotiate a new contract, is it going to have a serious impact on me as an individual because my value's diminished? Or if I'm looking for a move, what happens then? And so, again, sometimes at first blush, the AI tool can look like something which is absolutely a force for good, and it generally is. But it's understanding where those risks of bias, discrimination, or unintended consequences come in that's key. Lack of transparency, I've put a few examples there. I think, again, those of you grappling with this day to day, there is by no means an established position yet as to controller and processor roles and how those map to, for example, the language used in the EU AI Act, or how supply chains map to GDPR-style language. But perhaps the biggest issue that we see from a transparency perspective is knowing where the AI is used in your supply chain. If you're a bank or a financial institution, very often it's not your first tier supplier that's deploying the AI, it's 2 or 3 tiers down the supply chain structure. And so having clarity on that, and also the ability to instruct as the controller to process the scenario, the ability to instruct in accordance with your Article 28 obligations is something that's really important to map out. A few other points on there, perhaps won't dwell on them all because I'll return to some of these on the later slides. One point I did want to call out, again, it's impossible to talk about AI in June 2025 without talking about agentic AI, but I need not dwell on it because I know there is a session later on which will be box office viewing, I am sure. But we are seeing agentic AI pose new threats, but also new opportunities. But areas where we're seeing that have an impact is, for example, agentic AI being used to create clones of your boss who's contacting you, asking you to authorize or instruct for a payment to be made. And on the other side of that coin, AI being used to mimic customers and, again, request funds to be moved, that kind of thing, with ransomware tacked onto the back of it. So this homogenization of cyber security risk, which has been there forever, GDPR risk, pretty similar, and then this additionality that AI brings to that mix is something which is certainly posing some governance challenges for a lot of our financial services clients. Fundamentally, as we say at the bottom there, it's ensuring that AI systems are fair, transparent, and compliant, but also ethical as well as, excuse me, as well as legal, is the big challenge that we're focused on here. And so, how can GDPR compliance help? Well, I've just tried to map from some of the earlier slides those key areas of risk from an AI deployment perspective, and then map them across to what you will no doubt already have well established within your your GDPR toolkits. So bias and discrimination, well, again, no doubt everybody in the room will have their template DPIAs, legitimate interest assessments, which won't give you the full answer, but is perhaps a useful starting point or reference point. Lack of transparency is an issue in AI, but again, you will all have transparency notices, privacy notices online or in your employee handbooks or wherever it may be. Where data misuse is concerned and you're worried about what's going to happen with the data that's being used to feed the AI tool that you're using, GDPR talks a lot, doesn't it, and as does the ICO, around technical and organisational measures that can be used to protect personal data. There's all sorts of training materials and certifications that are available for GDPR compliance, again, which have some read across into AI. And of course, the law still applies. You know, if the AI tool is processing personal data, then the Data Protection Act will bite. And so the criminal sanctions and other sanctions enforcement activities that are available to the ICO, the FCA and others will still apply. If your concern on AI deployment is around data auditability, then again, we still have records of processing activities, data breach logs, other GDPR artifacts that can help there. Supply chain risk management, we've got Article 28 clauses, SCCs, IDTAs for international transfers. The need for oversight and approval of AI use cases, again, of course, there's a DPO role that will be present in, I suspect, all of your businesses. But also, there will be existing governance frameworks that are in place across your organisation, which the key question that many of our clients are asking is not, can we just shoehorn AI into that existing structure, but rather, how do we use the structure that we have and avoid duplication by streamlining AI governance with GDPR and data protection governance and oversight? They don't need to be a complete solar eclipse in terms of the Venn diagram, but there is certainly some overlap there. And then in terms of accountability for decisions made using AI tools, again, accountability is, of course, as you will all know, a fundamental principle of GDPR compliance. And there's a number of other GDPR principles which are very relevant to AI use as well, including data minimization, purpose limitation. It feels like I've made that sound too easy, and I think perhaps the point I ought to emphasize from this slide is that use of data and privacy teams when you're considering AI deployment is, of course, very important. But I don't think it's a panacea for everything. And I think, again, we spend a lot of time speaking to clients, particularly in the financial services sector, around how to structure AI legal advice, AI compliance, and AI decision making. And I think a lot of in-house lawyers actually feel reluctant to be the ones to say that we're the absolute arbiter for ethical decision making and deciding whether or not an AI tool is appropriate for use within our organisation, particularly on the back of things like the Horizon scandal and the Post Office inquiry. There's so much more focus now on when legal functions, both in-house and external, ought to be intervening on decision-making like this. And I guess the answer from my perspective is that it can't be placed with any one person. There needs to be a multitude of different disciplines feeding into that decision-making process, and that requires good governance. As Stephen's already touched upon, transparency, explainability, rights and redress for individuals are all absolutely essential when you're looking at AI deployment. And I guess, again, learning from GDPR compliance, the more that organisations are able to embed compliance within their AI development roadmaps, so something similar to privacy by design as a GDPR concept, the more that compliance journey becomes an enabler for innovation. And just a couple of final thoughts to round out with. One is, and again, Stephen's already touched upon it, there's an abundance of regulatory guidance out there to help in drawing those two sides of the equation together, both the ICO, the FCA, others, depending on the nature of your business and the regulators that you're regulated by. And also, as mentioned in the AI strategy published by the ICO last week, there is an intention for a statutory code of practice to be brought forwards, so that will certainly be something to have regard to as well. Final challenge, which nowhere near enough time to cover in this session, but very happy to discuss in more detail afterwards, is for many of you, again, I know you will be operating across not just the UK market, but EU as well. And so the spectre of the EU AI Act comes into play as well, in addition to the fact that EU GDPR is soon to undergo its own potential reform, and we have the Data Use and Access Bill here in the UK as well, leading to some changes to the UK legislative regime. That's a lot to manage all at the same time, without even layering on top of that things like cybersecurity and resilience bills or Digital Markets Act, Digital Service Act, that explosion of digital regulation that we've seen over the last 12 to 24 months. So I think if you're grappling with that challenge at the moment, my simple message would be looking to establish a minimal viable product for both your compliance posture but also your innovation posture across the markets you operate in will be absolutely key, in addition to tracking those legislative changes that are coming forwards in the next 12 months or so. And the final word I'll finish with is just to say that very similar, I think, to the message Stephen was delivering, which is that innovation and governance are not mutually exclusive, and on the contrary, embedding a strong governance matrix within your organisation will foster sustainable and ethical innovation moving forwards. Many thanks. Sure.
Thank you, Gareth. You did not disappoint. That was super, super comprehensive. Really very much appreciated. And I can see that there's a lot of follow-up in terms of additional questions that we'd love to have there as well. Our third keynote speaker in this section, I'm delighted to introduce Onur Can-Kolkutu, and I apologise if I got that wrong, but you can. I rely on you to tell us what your correct pronunciation is soon. Onur is actually a policy advisor for technology strategy at the Dutch Central Bank. So delighted that you're able to join us today. In your role, you collaborate with European and international authorities to craft policy visions, monitor market developments, and identify emerging or growing risks, as well as publishing guidance. So if you wouldn't mind to come up and join us now, thank you very much indeed, Onur.
Yeah, it's Onur Can-Kolkutu, but I forgive you for mispronouncing that. So, as promised here, I will be taking the pro-innovative regulatory approach, which you have discussed by previous speakers already, from theory to practice. So what does it look like when we are actually supervising an AI model, or when we go to an institution and we want to speak to them about the risks of AI? What does that look like? And I know in some circles, when you say pro-innovation regulation, it sounds like two antonyms, two opposites of each other, but we believe that's not the case. It may actually be the opposite of that, because we held a survey for the households in the Netherlands. So we sent out a survey to 10,000 households, and we asked them there what they thought of AI usage by their financial institution, so their bank or their insurance company, and how they feel about it. And it was around 25% positive, 25% negative, and around 50% either had no opinion or they didn't know what to think of it. The next question was, how do you feel about your financial institution using AI, if it's under supervision by DNB, the Dutch Central Bank, or by the AFM, our conduct authority? And then it was like 70% positive. So what we see is the role of supervision in stimulating innovation, in actually enabling innovation in the market by giving trust, by creating this confidence in it. Another case that I would like to start with, why we are taking this approach. So a few years ago, even before the AI Act, we had a neobank in the Netherlands, which was very advanced, actually one of the most advanced in Europe, which completely revolutionized the banking industry in the Netherlands. They tried to change the traditional approach to CYD or KYC within the Netherlands to a very automated AI system. So in the Netherlands, if you go to any bank and you want a new account, you want to start a checking account there, you have to wait at least 1 or 2 months until a complete thorough check has been done on you and you can be accepted into the bank. So this neobank had found a new system and they could let you in 3 minutes. So you had a new account in 3 minutes. So our supervisors automatically had some questions raised about this. How can it be that the other banks take 2 months and you can do that in 3 minutes? It didn't sound very trustworthy. So they started an entire investigation on this neobank. And in the end, the conclusion from our supervisors was, we don't fully understand how the system can do all of the things that you promised that it is doing. So we rule out that you can use it. So it was basically said, you have to stop using this AI system. And where a different bank might have tried to keep positive relationships with the central bank and would have said, okay, we will stop using it, this neobank was completely made of technology experts and data scientists, and they were not of the traditional system. So they said, we do not agree with your premise, and we will take this to court. And this became a very public and actually very marketed system of the neobank against the traditional order. And it was like a whole takedown of the financial system. But the courts ruled in favor of this neobank, and they said the system that they created was actually sufficient enough, or at least that the central bank did not have sufficient proof that they were not sufficient enough. So they were allowed to use the system. What this meant for us was, okay, we made a big mistake. We said they can't use something, and now we look like the big bad guy who's against innovation, right? And this was also how it was publicized in all the headlines. So we had to go back to the drawing board and start looking again at, okay, how do we approach innovation in our supervision? How do we approach this regulation, and how can we make sure that we allow innovation to happen, and how do we prevent this situation to occur again? So then we start from, well, what do we have to look for? The very first thing is, what are the risks of AI? If you are looking at an AI system, we have to start from the risks. We have to map the risks, we have to supervise on these risks, and the question is, how do we look for it then? What kind of approach is more enabling for innovation? And how did we come up with the system? So, first of all, when we look at the risks, we map them into the categories or phases that they occur in their life cycle. So we start from input risks, then you go to throughput, output, and overarching. So input in this case means everything that goes into the model before the model is actually deployed, before the model is started. So the data you use to train it, the model choices that you make, those are the input risks. An example from this is Amazon used a new system for their recruitment, for their hiring processes, and the thing they trained it on was all their historic data on everybody that applied for a role at Amazon and who got the job. So they told the AI, look at all these applicants, look at who got the job, and there you can find who is the most suited person for the role. And then they deployed the system, and they had to take the system offline in 2 days. Does anybody have a guess what went wrong? So the mistake was, if you train the data on historic data, which they did, so they had like decades of data of everybody who applied and everybody who got the role, basically what you're automating is the bias of the person who is choosing the perfect applicant. They're not maybe looking at the resume, they may not look at who is the most qualified. So what happened within those 2 days already was they saw that they were only accepting white men. So they looked at the system, do we only get white men as applicants? No, but this was what the system had learned from this decades of data, from the bias that was apparent in people. So what you're doing at that point is you're automating systematic biases. So that's one example of input. Throughput might be something like a black box model. That's the risk that we see there. Like you deploy a system, but you don't know what it is doing exactly. Output, then we're talking about discriminatory results. This is mostly in government uses, for example. And overarching risk, we are really looking at the risks that are apparent in all phases. So you may think about reputational damage, you may think about cybersecurity, about lack of fairness, and that's more in general. So from here, we apply supervision to those phases. So supervision of input would mean, for that Amazon use case that I just described, you would ask the company, okay, did you look at bias in your data? Or what did you do to test for bias in your historic data? So for each of these phases, you would have to look through this. For example, for the throughput, about the black box model risk, you would go and ask, is there a human in the loop for each decision that's being made? Can you explain the decision to your customers? The most important part in supervision, we think, is that we want to keep going from financial supervisory regulations and not from, for example, the AI Act or all these other data regulations that are coming up, which Fiona gave a nice overview of. We believe that financial supervision in our mandate, so such things such as risk management, governance, customer protection, product development, these are already within our mandate, and all the risks of AI that we have just mentioned and you can think of are actually applicable within these categories. So we want to start from there, and we want to see the AI Act mandate that we receive, or the DORA mandate that we receive, as an extra enforcement tool or as an extra supervisory tool for us, but we want to keep going from the financial regulation. Then this is the AI Act, but this was already slightly explained before. So we have a risk-based approach here as well, and we want to take this risk-based approach to our supervision too. So what happens in the AI Act is certain applications receive more attention or have more requirements than other applications, and we want to take the same approach towards our supervision in the entire financial sector and use it to only supervise those models the most when we see the highest risks there. So then we come to actual supervision of AI. So there are two decisions you can make. You can look at the supervisor at the code, you can look at the model, or you can look at the governance. And they both have their own benefits or risks. We could give the example of this Amazon model again. The Amazon model, the code could be perfect. It could be perfectly made to be fair and very correct in statistical output. But if the governance isn't there, then you miss the bias testing part, which would be so crucial. But on the other hand, if you only look at the governance, that could be perfect. You might have perfect bias testing systems in place, but the code might have some drift or some bias in it, which you might miss. So we see that this is a two-tiered model, that we need to take both approaches. So this is the phases of supervision. The way we would make it risk-based is by first only making it so low enforcement possible by starting just with a risk indication with surveys. So we will send out surveys to the entire financial sector, and we want all these financial institutions to fill out these questions, and we will give them automated scores. And if they have automated scores that show very low risks, then we don't look at these financial institutions. So we really basically try to keep the supervisory burden at a minimum. Then the next phase would be risk testing. So if we see that a certain institution has high risk in these surveys, then we will have to test either the model or the governance, as we saw in the previous slide. We need to come up with methods to look at these and understand where these red flags are, understand where the risks for the customers may happen. And the last one is risk mitigation. As you see, it's out of the slide because we don't want to focus too much on it. No, it's basically a mistake, but it's risk mitigation. The idea is we will give recommendations. We don't want to move on to enforcement too fast or to actually using our mandate in that. We just want to ensure that these red flags are understood by the institution and they are taking measures to handle it. Only in the case that we are really not seeing any type of cooperation there, we might move on to enforcement. So how does a survey like this look? So how would we define or decide where the red flags in the financial industry are that we can supervise on? So we send out questions like these. So one of the questions on the top is, to what extent are there structural capacity and facilities available for exploring AI possibilities or conducting pilots, AI applications into production? So this has a weight of 30%. And the answers we would expect, so these are not answers we have received, but these are model answers that we expect from institutions, and then we compare their answers to these model answers into seeing how far they are in their AI adoption strategy. But the most important question is, well, how have you established a governance structure of AI in your organization? So things that we want to see there, you see the considerations. Have you embedded AI in your policies, in your risk management systems, in your decision-making systems? Do you have boards or ethical boards? Do you have all these systems in place? And then you get a score from 1 to 5. If you have none of them, you have a 1. If you have all of these things, you get a 5. And only if you really get a 1 or a 2, you would get more attention from the supervisory authority. So this makes it so that it's very risk-based and that we don't impose more enforcement or more regulatory burdens onto companies that are already doing things the right way. Then we come to the model analysis. So imagine we find a risk score, a high risk score for the AI model questions. Then we have these technical tools that we want to use the models on. This is very tricky, and this is very much a new way of supervising, at least in the financial sector. So for us, this is also something that we really are experimenting with and growing with. But I think could be we could analyze the technical documentation of a model, or we could do interviews with these institutions. But this would still not really give us insight into what is going wrong within a model if there are certain mistakes happening. So what we can do then is we can test with synthetic data. This is something that we have tried for a certain fraud detection model in the banking sector. So they were using this a machine learning system in which they we're going to try to find the money launderers and the terrorism financiers, etc. So we have this data in much more aggregated capacity, and we can synthesize this data and use the synthetic data to test the bank's model on our own premises. So we are not giving this data to the bank. On our own premises, we are testing their models with our data because we have access to more data, basically. And then we can find if they are still having the same flaws or not. And then we can actually give concrete advice on where the model is outperforming. Other systems are like challenger models. That means we take the exact same application, we make a challenger model, and we see why they receive different outcomes than us. So this is a very technical method of supervision. But if you go to governance, this is where I think the most important part of the pro-innovation regulatory approach comes into play. Because what you can do with governance is to go back to the example of the bias testing, or to go back to the example of fairness metrics. There are more than 20 definitions of algorithmic fairness. And we as a supervisor can say, you have to use this one, and you have to use these metrics, and only if you fulfill these conditions, you are fair, or only if you fulfill these metrics, you can use your system. Well, if we would do that, then we would be freezing time, so to speak, because the technology is changing all the time, but also the societal expectations of this technology is changing, the responsibility of institutions is changing, and this is basically changing every day. So if we would look at our expectations today, and we would create a certain metric or a certain definition, a certain guardrail within which they have to operate, we would be freezing the moment that we are in right now, and we would not allow for changes over time to occur. So in this case, our approach is more about asking, for example, for AI literacy, do the relevant teams have adequate understanding of AI risks? But it's not up to us to decide what adequate understanding is. We want them to be able to provide us with their understanding of what adequate AI risk is. And so we want them to justify to us what their decisions are. So the most important one, I think, is incident response. So you are talking about handling of incidents. If you can handle an incident, or if you have an example of an incident that occurred, a complaint you received, something that went wrong, how did you handle that? Then you actually have to go through all these other steps anyway, because you have to be going to model risk management, to transparency, to the roles that are in place, liability that has been accounted for, and only then you can handle an incident like that. So that's the first question we would ask. Can you show us an incident that occurred, and how did you handle this incident? So an example to do a deep dive is bias testing. In the AI Act, so we go back to this Amazon example, how would they have prevented that? Or how would we, as a supervisor, would have asked them to go on with this? So the AI Act has an obligation to do bias testing. You have to make sure, or at least in a reasonable manner, to reduce bias in your AI system. Well, our message is we cannot prescribe an ideal fairness metric. This depends on the context, depends on the model, depends on the technology. But you do have to have something you have done to measure bias and reduce bias. So in this case, we set out certain key expectations. Our expectation is that there is a policy on what fairness means. So you get to choose a definition, but you need to have a policy on what it means. You have to have a process to test for bias in your input and also in your output. You have to have the expertise, so the right people in the right places to interpret the trade-offs of this bias. You need to have a mechanism in place to act on these findings. So this goes back to the incident handling. And you need to be able to justify in a well-documented manner why you chose for which trade-off. So it's also not about removing all bias. We understand that's impossible, or that would make the data set unusable. It's about the trade-offs that you have to make a decision between. So actually our approach is the absence of a process is more problematic than an imperfect process, and it's not up to us to expect at this stage of AI adoption perfect processes and perfect situations in governance. We as a supervisor are more interested in seeing the effort and seeing the justifications from financial institutions towards us and to explain to us. So if we would take this approach back to the neobank situation, which I explained all the way in the beginning, then we would have asked them, okay, how do you use your KYC systems? How do you think that this fulfills the conditions, instead of telling them the conditions that they had to fulfill? And then the problem at the court at the end wouldn't have happened, but also you would not have had blocked innovation for a certain number of years in the Dutch financial sector. So this is how we believe that regulatory approaches can actually be pro-innovation. Many thanks.
Super, thank you very much. I like the the learning approach that you went through at the central bank. And yes, I think in the UK we certainly have a number of online banks who are able to go through the KYC process extremely quickly, far more quickly than it used to happen. And it is, you know, it's interesting to ask the question, so how do you do it? How is it effective? You know, are you going through, what processes are you going through, et cetera, et cetera? And I think you're learning to, you know, what are the right questions to ask in order to get to the right answer is super, super important. We have an opportunity now, about 15 minutes or so, for Q&A. So I'm going to actually open it to the floor for questions that you may have. But while you're thinking, I have some questions of my own. So just a couple of things. Gareth, I wanted to come to you first. And it's a question about your experience in relation to your clients and others on the AI in supply chains. So I'm always fascinated with the supply chain piece because, you know, you as an organization, you put in a huge amount of effort to control the governance and the processes within your immediate control. But how do you know what your supplier is doing in terms of AI, how they're using it, and then their suppliers as well? So are you seeing a proactive approach on behalf of those suppliers, telling organizations how they're using AI, which would seem to me to be sensible in terms of the transparency principles, or is it still like pulling teeth out of a chicken?
Yeah, it's a really good question, and the answer is it's still a mixed bag. In truth, I agree with you. I think where we're advising AI developers or suppliers who are integrating AI into their service delivery methodology, the advice we give them is that, one, you should be transparent about this, and two, there's benefit to you in doing so. You know, I think there's often a fear at that level of the supply chain that the answer will be no. But often I think, and particularly in an FS context, we see clients challenging us and challenging other service providers that they use to demonstrate where you are using AI, because we want to see innovation, we want to see cost reduction, and AI is a big driver of that. So I don't think the answer will be an automatic no if you're looking to deploy AI. It's the message we give to our supply chain clients. But moreover, demonstrating that you're embracing good governance, good compliance by, for example, coming forwards with an FAQs document or something that will help the end client conduct their own data protection impact assessment, for example, is a really good sales tool, and it helps to reduce that flash to bang between first engagement and contract being signed or variation being signed. So that would be the ideal. I think from the customer's perspective, that on the customer side of that equation, it can be like searching for a needle in a haystack. You know that as you rightly said, you know, often the supply chain can be very fragmented, and knowing who's deploying which bit of technology, whether it's AI or anything else, can be really difficult to track. And so having really proactive approaches to supplier outreach and supplier management, and also audit rights within contracts, that's one of the areas that we're seeing kind of beefed up through AI standard clauses that our clients are deploying in their contracts.
Super, thank you so much. Just one more question before I throw it open to the floor. Each of you mentioned the ethical element of AI ethics and advisory boards, and there's actually quite a few lawyers in the room, I can tell, and it often comes to the legal team. You know, is it the right thing to do? And actually the legal team is there to tell you if it's the legal thing to do or not, and whether it's the right thing to do perhaps should better sit with the business. It's a leadership, it's a cultural, it's a risk acceptance approach, and so on and so forth. I wonder, Stephen, if you could sort of comment first, and then Onur, just in terms of that AI and ethics piece. I know the UK ICO years ago put out a paper on sort of what an ethics board might look like. How is that evolving and developing, are you seeing, or would you suggest from a regulatory perspective?
So I know I'm going to give personal view before I give ICO view on this. I try and keep ethics out of regulation, and in as much as what we're charged to do is what's set out in the law here, and what kind of goes beyond that in terms of value judgment is a judgment for each business, exactly as you say. That said, I think the law is extremely clear in some places around there are some things that you probably shouldn't do, right? And actually we're finding through the wave of digital regulation, whether it's what's emerged in terms of privacy legislation, and whether it's actually more recent additions in terms of AI, for example, that legislators are very, very keen to impose some of their ethical principles, I suppose, in the law, and to make those not just a sort of a generic business choice, as it were, but actually to be saying, you know, look, principles like fairness, etc., you are going to have to demonstrate how you have embodied those. So, you know, I think, yes, there's a degree of business discretion around this, and I'm not going to comment around the choices that individual businesses make, but actually there's quite a lot now in the law.
That's really helpful. Onir, how about you?
I think I have quite a different perspective on this, because I believe indeed that as supervisors we are here to enforce the law, but I think there's also cases that we, especially from a financial supervisor, we are also here to protect financial stability and trust and ensure that the consumers can believe in the institutions that they consume from, and I think that goes further than the law. It goes into areas where regulation hasn't caught up yet. I think AI, even though indeed there are certain points that point towards fairness, there is way too much abstract, vague details that are not very clearly set out. An example I can give it is zip codes in insurance. If you have a motor insurance in your city, you might have to pay more than if you are in a rural area. But this can also mean within cities, if you are using zip codes, certain zip codes might have to pay a higher premium than other zip codes. This is very prudentially explainable. You live at a higher risk area, you have to pay a higher premium. On the other hand, these zip codes can also become sort of proxies for places where minorities live, or places where people with low income groups live. Well, does this become discrimination or not? You know, these questions, I don't think they are black and white, and I don't think they are very easy to answer, but I do think that it's still within our, if we don't look at it, nobody else is going to look at this. So I think it's still within our broader mandate of financial stability and consumer trust to address these issues and try to figure out some responses to this. How to do that? I'm not so far yet.
Okay, well, that's actually quite nice to have some different views on the panel. I'll now open it up to the floor. Do we have any questions from the floor? I'm happy to take a couple at a time. Yes, please. If you just wait for the mic, that way the people online can also hear. Thank you.
Thank you. Just in relation to the model testing you were talking about in the last session, I was wondering how kind of you're finding with suppliers, how up for that they are, and also on what basis the kind of testing's being done, if there's kind of contracts happening or NDAs, etc.
Yeah, so actually the institutions we've spoken to so far have been very open to it. I think it's also because the AI Act is very new, and especially the high risk applications of the AI Act will only come into force next year. So they are very much in the preparatory phase. So in that phase, they are very willing to cooperate with us because they want to know the limitations of their applications before the regulation goes into enforcement. So right now we have this open playing field where you can ask anything to any institution, and they are very willing to show us everything they have. I assume indeed that next year, once the regulation is enforced, that this will start to change the dynamics of it. But that's why we are now trying to experiment with different methods while we still have this open field and eagerness from the sector. And I think the point for us will be to choose the methods that are least intrusive for these institutions, but still give us the most information.
Fantastic, thank you. Another question over here.
Thank you. Thanks for all the contributions. I had a question about how the changing political environment you expect is going to change implementation. In the EU, of course, we have focus on simplification. We've had the challenges with the development of the Code of Conduct. So both in the EU, but also where the UK is going, how do you think that will actually tangibly change the expectations of people in the market?
Oh, who would like to take that one?
She was looking at you, Stephen, but I'm very happy to. Very happy to offer you. I mean, look, from my perspective, we've certainly, things like the DPDI bill that was there before, and then that reincarnating as the DUA bill. I think a lot of the messaging that we're seeing come through from the current government is that support for the digital economy, that there's an imperative on all regulators to enable financial growth, drive economic growth, and I think that's coming through loud and clear. I'd be very interested to hear Stephen's views on it. But for me, I think that there are some empirical things like the fact that the DPDI bill never got through in time, and then that's had to be reincarnated. There have been some changes there that no doubt have been politically driven in terms of my own personal view, seeking greater alignment to the EU position under the DUA bill as compared to the previous incarnation DPDI. But actually, for me, it's that economic growth piece which I think is the strongest, felt the strongest, and yeah.
Look, in a UK context, absolutely, there is a very clear focus on growth. I would say for the ICO, that is not especially new. We have had economic growth as part of not just our statutory duties for a hell of a long time, but actually if you go back a few years and look at our ICO 25 strategy setting out where we wanted to be by this year, one of our 4 objectives that we set for ourselves as a regulator was around enabling responsible innovation and sustainable economic growth, and it has been imbued through everything that we do. So ultimately, yes, I'd say that the external messaging around this might have changed a little bit. I would say the ICO has been doing this for quite some time. You can see new things that we've said that we're going to do in response to this. It's sort of latest push, but that's part of us continually challenging ourselves on how we can go further. The particular example I think that I'd really draw out in an AI context in relation to this is our commitment to take that 10 years of leadership on AI governance and translate it into a statutory code of practice that has been committed to by us, and if the Data Use and Access Bill passes, will be something we'll be accelerating towards.
Super.
And for the European Union, I can also answer that the move towards simplification. I mean, the AI regulation in Europe, the AI Act, has so many authorities that are linked to it, and who can publish guidance. Like, you have the AI office and we have the AI board, and the role of the AI board is to publish guidance for the AI office. But every time the AI office wants to publish some official guidelines, it has to go to each directorate in the European Commission. So you can imagine that the simplification is really needed here, because we see that the final document, so they had this definition in the AI Act, which was a definition which did not give any clarity on multiple models, whether they would be AI or not. So everybody was very excitedly waiting for this guidelines on the definition. And then when it was published, it was so much removed from any substance at the end, because so many directors had to go through it. It still didn't give any clarity on which models fall under it or not. So right now the Commission is writing up a simplified AI Act note, as far as we know. And it should be clearing up this entangled mess of all these authorities that are influencing each other. So we hope that this comes. It may also postpone the enforcement of the August 2026. They may put it later, but we don't have any insights on how that is looking right now. But in our opinion, the simplification is really needed.
Yeah, it's incredible actually how much complexity there is in this area, and it's because AI impacts all sectors, all aspects of both business and personal life, and so actually everyone's got a say. But simplicity is the key, otherwise we'll go absolutely nowhere. We've got time for one more question. Yes, please.
Hi. So one of the kind of questions that I've seen come up a lot at these kind of events, and talking to lots of our clients about as well, is this sort of perennial question of who owns AI within organisations, and who owns AI risk, and who owns AI governance. And I think we have certainly seen, or I've certainly seen, a kind of increasing acknowledgement that actually that's not just one person. That it requires very much a kind of holistic and kind of multidisciplinary approach. And we're seeing lots of our clients set up AI committees and working groups and focus groups, etc., to kind of allow for that holistic approach. But I think one of the challenges with that is I think there's a really fine balance to be struck between making sure that all the right voices are in the room, but not having kind of too many cooks, I suppose. And so I'm just interested, I guess, in insights from the panelists on kind of what they've seen that's been effective in that sense to address that balance. What are the sort of best practices in that you're seeing, or the not so good things that you're seeing in that area?
Happy to dive in. Look, we're seeing a huge amount of digital regulatory convergence at the moment in terms of the legislation, and in terms of what I'm seeing within firms, it is driving that same degree of convergence internally because of the overlapping requirements, frankly, between the different areas of legislation that are coming forward. Lots of organisations that I see, from the very big to the small and medium, have really struggled with some of that transition and have quite often gone through a bit of an iterative loop of trying to get the right configuration that works for them. But where I see people settling is eventually they start to settle around a much higher degree of integration than they ever had before, in order to reduce, exactly as you said, kind of having to speak to different parishes within the organisation in order to get a decision, and finding that that's just becoming too clunky and actually not delivering the best result for them as an organisation, because they're not charting an integrated path through different regulations where they're going, okay, here's the sweet spot, here's where we could land and deliver the best value, but actually they're ending up with trying to please lots of different areas and a lowest common denominator approach, which then doesn't really work for the business. So that's been certainly my experience. I'd love to hear everybody else's.
Yeah, I mean, I think for me it is that multifaceted approach is absolutely key. You can't just sit with the CTO, because everybody thinks, well, AI was a technology tool, so CTO, you can just own this. But then if you're using that for monitoring employees or some kind of internal function, then HR are going to be interested. If you're using it on your customer call center, then your service delivery directors are going to be interested. If it's being used to help inform lending decisions, then your chief lending officer will want to be involved. Legal will obviously be concerned, likewise the DPO. There's all these different elements that all need to be fed into it. That all sounds very good and collaborative and collegiate, and it is definitely the way to go in terms of internal governance, but there still fundamentally has to be somebody who owns it. And I guess if looking for trends that we're seeing across the market, one thing that we have seen a lot over the last 12 or 18 months is people appointing chief AI officers to sit alongside their CTO and their chief data officer, but somebody who specifically owns at the board level the mandate for facilitating and enabling and managing all of that within the organisation.
Absolutely agree about the multifaceted approach. I think one thing we do have to be careful for is this fallacy of liability, I could call it, or fallacy of accountability, where even like a third-party AI tool that's being used in an organization, you have to be accountable for it as the organization yourself if you're using it. And it's, of course, also in regulation points out that even if it's an outsourced tool, you are accountable for it yourself. But even for something you built yourself, as long as you have like somebody who's accountable for it, like somebody who is the fall guy, so to speak, if something goes wrong, well, I think this creates also some kind of false trust, because there is somebody who's accountable for it. I think it's still important to not really go towards the tick-the-box compliance, we have somebody who's accountable for it, so we are accountable, I think it's more about really looking at it in a more holistic way, as you said, who is relevant to which tool, and to keep it in that way, instead of just putting everything under one accountability manager.
Yeah.
Fantastic. So there's actually a lot of wisdom and expertise on this panel, and I think I'm going to come away and say that things are a lot clearer, but they are certainly no less complex than when we started. So please join me in thanking an incredible panel for sharing their insights with us today. And also a big thank you to all of our speakers for keeping to time. So we're bang on schedule, which is absolutely super. And we have one more keynote before our first break this morning. We're going to be hearing from Muneeb Ali, who is a partner at Alex Partners and who leads the regulatory compliance practice. Muneeb has over 25 years of experience in financial services regulation, and he brings a unique blend of regulatory, industry, and consulting insight today, having served as a chief compliance officer, a senior advisor at a global consulting firm, and of course also being a former regulator. And Muneeb is going to tackle the topic of digital assets, data, and AI, reshaping the foundations of trust in the financial system. And as we've heard, trust is the engine, data is the fuel, and digital assets is perhaps the future. Please join me in welcoming Muneeb.
Well, thank you for the kind introduction, and thank you for having me to speak about this topic today. So, as Vivian mentioned, we have mentioned the word trust a few times already today, and I'm delighted to be speaking about how these three aspects, how they come together in the matter of trust. The way I see trust is that it's the invisible infrastructure that carries the financial services industry. Because, of course, without trust, the consumption of financial services will decline and potentially end. And that's going to have a detrimental impact on society. So trust is very important. Now, we obviously get very embroiled in the detail of regulation, of market practices, of economic developments, technological developments. We often need to step back and think about what is defining trust, which, as we mentioned, is so critical to the sector. You may have seen that the FCA, when it published its strategy for 2025 to 2030, one of the things it focused on was its objective to deepen trust in the financial services industry. And I think the majority of us probably skimmed over that phrasing, but actually it's so important to think about trust in the system. And it's important to take actions that enhance that trust. So with that in mind, I'm going to be talking a little bit about how the equation for forming trust is changing in the industry, and the reasons why the firms that embrace more quickly these three aspects that we're talking about will be the ones that successfully retain trust in their institution and will support trust in our financial services industry. So right now, trust is under pressure from all angles. We see geopolitical volatility, which is leading to volatility in the financial markets, and that's affecting trust. We see very high instances of fraud and cybercrime. It's one of the biggest risks currently in the financial services industry. UK Finance, I think last year, estimated that £1.17 billion in the UK was stolen through fraud. £1.17 billion was stolen. Of course, that's going to impact trust in financial services. Then we have misconduct. So market manipulation, for example, financial crime, AML, money laundering rather, all of that impacts the trust in the firms that you work for and the financial services industry at large. And of course, technological disruption itself, the sheer speed of technological change impacts this trust, because consumers will be thinking, if we're having so much change, which technology are we trusting? Can we trust that change? Now, this is what I want to talk about in terms of the equation of trust. Traditionally, what's created trust in the markets? One is the conduct and the controls that firms have in place. So the strength of your control framework, that's an important part of trust. Secondly, regulation. Society has been leaning on regulation to make sure that consumers can trust the financial services industry. And of course, audits, internal and external audits, and the reports that come out from that help establish trust in the sector. However, today we're seeing a shift in that equation, because those three things I've just mentioned are still very important, but there are two very important new things which are impacting trust that consumers of financial services are relying upon. One is automation and coding, which I'm going to talk about, and real-time transparency, consumers are increasingly expecting coding and automation, partly because it's available, but they're expecting it now, and also they're expecting transparency as well. So consumers are no longer expecting to give you their trust based on time, because those first three things are established over time. If you have a good record, a track record of good conduct and controls and establishing good regulations and audits, over time, they will give you their trust. But it's no longer just about time. It's about immediate availability of coding and automation and transparency. That's what's driving the new trust in the sector. So let's talk about those three things: digital assets, AI, and data, and how that relates to this new formula, a new equation of forming trust. So, digital assets. So, this is about trusting in the code. So, digital assets, especially those that are built on distributed ledger technology, is embodying this shift which I'm talking about. And let's take, for example, tokenized private credit. Tokenized private credit is now valued at about $13.4 billion. $13.4 billion. And that is only there existing because that's what consumers are now expecting. They're expecting tokenization. That's what's going to form part of the trust in the financial services industry, is the ability to tokenize. When a bond, for example, is tokenized, its logic is embedded into the smart contract. It's embedded. Who can hold it, when it pays, what it's worth. There's no need for a consumer then to trust other parties in the ecosystem. They don't need to trust your back offices to make sure that it operates in line with what they're expecting. It's all coded into the smart contract. The contract executes itself. And that technology allows you, the financial services industry, to build compliance and customer expectations into the contract itself. So it's built-in compliance, it's built-in rules, and that's what consumers are expecting, which firms have to respond to in order to retain and build the trust. And of course, the other thing which consumers are expecting in this ecosystem around tokenization is real-time valuation. They get real-time valuation through tokenization, so they'll expect that to give you their trust. And that's an example. I used bond tokenization, an example of the new form of programmable trust. You can program trust into your products. Now, that sounds like it's very simple, but it's not. There are many hurdles for us as an ecosystem to go through still to make that become even more relevant for society. So despite that significant growth that I gave an example of, there are many more hurdles to go through such that it becomes an industry-wide practice. Because the code which goes into digital assets requires scrutiny and requires protection. And at the moment, there are still risks to the code we are learning to control. So if bugs and malicious code get into the system, then, or indeed having insecure code, that causes serious harm to the products and to consumers. And so the protection of the code is critical to this. And we're still on a journey to being able to make sure that we can protect that code. But what we need to be doing, if we believe in the importance of trust, we need to be investing in control frameworks around digital assets, around the coding that goes into digital assets, to make sure that we are aligned with that trust, that new trust equation. Then we have artificial intelligence. So AI has already matured, going from machine learning through deep learning to reinforcement learning, and now we're in the age of agentic AI. That's big development, and very quickly that we've got to that stage. And that AI has the ability to generate information and to perform real-time analysis and pattern recognition. That's a lot of capability. But that's really important for the creation of trust, because what consumers of financial services expect us to do in financial services is to use that capability now for better speed and consistency of operations, because we can use that for more efficiency and effectiveness. And they also expect us to use that capability to detect, and also now moving towards prediction of misconduct. We mentioned earlier how trust is being threatened through misconduct and fraud. Well, we're now being expected in the financial services industry to use AI to detect and even predict. I've spoken at conferences in the past where we're talking about how we can use AI now to predict misconduct. There are lots of questions about that in terms of, whether we should go there, because there are ethical considerations to in the play as well. But we certainly are going towards the capability of being able to do that. Now, however, there are lots of hurdles still to go through before we can respond to that trust equation when it comes to AI, because we need to make sure we can trust AI. And that's going to be something that we're going through a journey of at the moment. And of course, there are ethical and legal considerations to give as well when it comes to the usage of AI, for example, for predicting misconduct and fraud in terms of the data that we use, but also in terms of whether we want to be supervising individuals as closely as we might need to if we're going to be using AI to predict misconduct, or even stop it from happening before it happens as well. So there are lots of questions there. We spoke about governance in the previous session as well, which I'm not going to go through in detail, but that's obviously a big topic that we've been discussing with our clients as well. And then the third one, data. So data is the fuel behind the trust. Data is the fuel behind this new equation. We are generating more data than ever before, partly because of digitization. And this means that customers can and do expect improvements in the customer journey. The customers know we are collating more information and generating more information and data, so they're expecting us to provide better service and, importantly, a more transparent service as well. Now, the other thing about data is that because we're generating more data than before, it allows us to assess risks and spot anomalies and act faster than ever before. So this data is so valuable for us, but it's also so valuable for consumers as well, because it means they can get a more transparent and better service, and consumers can expect organizations to protect them much better than before as well. Now, the risk landscape is really important to understand. I've spoken about how the trust equation is changing, but the risk landscape is also changing, and we need to bear that in mind as we move forward as individuals, as an industry. So in the new equation, and because we have the advent of more data, AI, and digital assets, bad actors are more empowered than they have been before. So we have more empowered bad actors. We have control pressures to be able to manage risks in real time now, because the bad actors are acting very quickly and in very sophisticated ways as well. So we have control pressures to perform our controls in real time, and that's a risk if we move too quickly. We have reliance on third-party code. We spoke about third-party suppliers just now, so I'm not going to focus too much on that. And of course, black box decision making. These are real risks that we need to address if we're going to respond to the new trust equation. And of course, we have a fragmented regulatory environment. I'm going to be doing a fireside chat with the FCA a little bit later on today, which will be interesting. I'll touch on that. But we do have a fragmented regulatory environment when it comes to digital assets, when it comes to AI, for example. And the need to remain resilient, auditable and ethical is very high at the moment. This is our risk landscape now. These are the risks now we're talking about, in addition to the traditional risks of credit risk, market risk, operational risk, and what have you. The regulatory perspective, I'm not going to touch on too much, also conscious of time, but it's fragmented. It's adapting, but it's fragmented at the moment. But the other thing to bear in mind is that, as we just heard earlier from the Dutch Central Bank, supervision is also going digital. Supervisors are themselves employing AI and more data than ever before to supervise organizations and making that more effective. But the framework around regulation is changing, but it's still fragmented, and that itself is a risk for us. So, in the last couple of minutes, what should firms do now? Well, the first thing is that I think firms need to continue to be willing to invest. Investing in a risk management framework that reflects this new trust equation. When we look at risk appetite statements at the moment, when we look at risk documents, risk management information that goes to boards, they're still very traditional at the moment. They're still talking about the traditional risk types, and they're plugging in now AI and digital and data. But what we really need to do is think about trust and the risk to trust. And so thinking about the new trust equation in the way you manage risk is important. It's a new measure of risk that we need to be thinking about. And think about investing in digital native AI-powered controls. We need to continue doing that. That's moving, but probably not quick enough, in my view, in alignment with how the trust equation has already changed in terms of what consumers are expecting. So think about investing in digital native controls. Now, some of the newer tech organizations, and I'll give the example of crypto firms, they're actually, compared to traditional banking institutions, much better at this. And that's why traditional large banking organizations, they are under threat by the new tech organizations, partly because those new organizations, like crypto firms, they are listening to this new equation of trust, and they are engaging in digital native controls, so that compliance controls, for example, are embedded within the product itself. They're not thinking about post-product launch controls. They are already embedded in the controls themselves, in the product themselves. And of course, continue investing in data management. More than ever before, we are hearing from organizations saying we now need to fix our data problem. We've not shied away from it, but we haven't resolved our data issues. But now, because we need to deploy AI in the most effective manner possible, we need to now fix our data issues. And so data management has really, even though it was on the agenda for the last 3 or 4 years, has risen with the boards that we're discussing this with. And AI governance and controls, again, as we discussed earlier. So number 2, as I mentioned, think about building trust into the design of your digital initiatives. I think most organizations that are represented here will have digital initiatives. And I think what firms need to do is to build trust into the design of those initiatives. Think about what we've been discussing in this presentation. Thirdly, break down the silos. So I've written here between compliance, data, technology, and business. We see silos in the organizations we work with, between compliance in the first line and compliance in the second line and the business. There's a lot of, if you just take data, for example, there is a lot of data that is created and used by the different functions in organizations. At the moment, generally speaking, they're not brought together in the most effective way from what we are seeing. Those silos need to be broken down. And the last thing is encourage collaboration within the entire global ecosystem. What I would say, and I presented on this previously, is that the criminals who are threatening trust in the system, they exploit weak chains of information. That's how they exploit the system, by utilizing weak chains of information. We have a fragmented system when it comes to regulation, when it comes to authorities, etc. And we're moving towards deglobalization in the way the geopolitical world is moving. We need to think more than before about how we're going to make sure we're collaborating between the different parties of the ecosystem, between organizations and regulators, to make sure that we are limiting those weaknesses in the chains of information. And I'll just leave you with a thought that trust used to be earned through reputations, people and processes built over time. But it's now built through automation, coding, a real-time transparency. That's how trust is now built. And so we must therefore cross the hurdles to embracing these three things we spoke about quicker than we are at the moment, in order to make sure that we are deepening the trust and retaining trust, not just in our firms, but also in the financial services ecosystem as a whole. I'll leave it there. Thank you.
Thanks, Vinny. Super, thank you. That differentiation between what is traditional trust and how it's earned, and then emerging trust, I think is really important. And thank you also for the provocation around identifying how we're managing risks and not just applying our old traditional concepts, tools, and mechanisms to an environment where we're actually thinking we're being highly innovative and embracing new technologies, but in fact we're not actually using the tools and such like to do that effectively. So an excellent reminder and provocation there. Thank you very much, Munib. It's now time for our networking coffee break. So to everyone online, please feel free to dash off and grab a cup of tea or coffee. Let's be back here at 11:45, so you've got just under 15 minutes, please. And then we will have 2 further sessions before we break for lunch. But thank you very much to the audience and also to our speakers for a very fantastic start to today. See you soon.
And if you ask, your source,
Oh, no, I'm going to resist. No, down here first. Okay, hello everybody and welcome back. Thanks so much for coming back, and I hope you enjoyed the coffee break, and welcome again to our participants online. Just in case you didn't know, there's over 100 people online as well. So we have a full grouping today. So we now have a fireside chat. How is agentic AI changing the game, and what additional risks and opportunities does it bring? I'm delighted to introduce the moderator for the panel. When I ask Emma to come up, then Emma can bring together her panelists, and Emma will introduce her panelists. So Emma Erskine-Fox is a partner at TLT law firm in the data privacy and cybersecurity team. She's a well-known expert in her field, having been recognised as a key lawyer in the Legal 500 UK and named as one of the UK's top 25 up-and-coming female lawyers under 40 by law.com in 2021 as well. Emma, welcome. And if you'd like to bring your panelists and introduce them, that'd be absolutely super. Thank you.
Lovely. Thank you very much for such a kind introduction. I'll hand over to Paul and Grace to introduce themselves in a moment, but I am really delighted that they have agreed to do this with me, because I genuinely think you would struggle to find two more knowledgeable voices about AI than Paul and Grace. So perhaps, Paul, if you're happy to introduce yourself first.
Great, thank you, Emma, for that introduction. Paul Donga. I'm head of responsible AI and AI strategy at NatWest Bank. And by responsible AI, we mean all things necessary to mitigate the risks of AI, including ethical risks and any regulatory risks. And as head of AI strategy, I have a team that lay out the bank's long-term strategy for how we use AI, and predominantly generative AI.
Amazing. Lovely to meet you all. So my name is Grace Briody. I'm a technology specialist. What does that actually mean? So solutions architect is another title we tend to get given in the tech world. I currently work at Microsoft, and before that worked at Amazon Web Services, so enjoyed the reference earlier to some of the issues that were had. My role is to work at the moment with customers in the FSI space to design, mostly it tends to be the applications, the coding systems, the kind of the tooling that's going to help them build and deploy their applications. But obviously, as you can imagine, in the last 7 months I've been at Microsoft, and before that the kind of 18 months from the Gen AI explosion at AWS, very centred around artificial intelligence and particularly generative AI. So working with effectively, a lot of what I tend to do is customers come in not with I need this system, it's we have this business problem. How is technology going to solve that, and how are we going to use generative AI to solve that? So my job is to somehow tap into the many different technologies out there and piece together something that works. But obviously a big part of that has then been the data and the remaining ethical and compliant, particularly in the FSI space. So that's kind of the background I'm coming from.
Brilliant, cool, thanks guys. So we're going to talk about agentic AI, which has obviously already come up. Those of you who've been here this morning so far, agentic AI has already come up a few times in discussions, which I think is kind of emblematic of how much of a hot topic it is for 2025. Gareth, who's a colleague of mine, mentioned earlier in his slot that I think it was over 60% of FS firms are using AI in some form or another. Deloitte, at the end of last year, predicted that by the end of 2025, 25% of the companies using AI would be launching agentic AI pilots in 2025, with that number rising to 50% in 2027, or by 2027. So that's part of the reason I chose it for this panel today, was because it is such a hot topic for 2025, but I also think it's a really good example of how quickly AI moves and how quickly the technology develops and how difficult it can be to keep up with that pace of change from a legislative and regulatory perspective, but also in terms of kind of internal governance and how you sort of future-proof that for these kind of further developments that now, there will be things happening in AI 2 years down the line that we can't even predict now, that we just don't know what that's going to look like. So, so it is really taking off, huge opportunities there. Again, we touched on that a bit. Already today we'll come on to some more examples of how much opportunity this brings shortly. But yeah, so I'm really excited to kind of delve into some of that today with Paul and with Grace. And I think, you know, we talk about, the title talks about agentic AI changing the game, but I think just to sort of take a step back initially and kind of set the scene, I think it's really helpful just to talk about what we mean when we talk about agentic AI. You know, it's one of those terms that you sort of think, well, what does that actually mean? What do we, you know, we've got generative AI, we've now got agentic AI. What are we talking about? So, really interested to hear from Grace and Paul as to, you know, what do we mean when we talk about agentic AI, and particularly what makes it different from what we've seen already in the AI space, and what makes it a kind of game-changing development. Grace, if I can come to you first on that.
Yeah, it's an interesting. So agentic AI, so obviously generative AI, I think we got a really beautiful explanation earlier about we'd kind of moved from that traditional artificial intelligence to generating things and using human language. So that idea, you know, the first big boom was kind of images and poems and songs and stuff. And so when we think about agentic AI, you'll hear the term agents or AI agents used constantly. And AI agents are effectively kind of tools that we create that are able to replicate tasks is the easiest way that I break that down. So I'm going to give you an example rather than kind of a big long explanation of agentic AI of what the difference would be. Claims handling or complaints handling, it doesn't matter what industry you're in, we all have it, but we know it's a big problem, of course, in the FSI world. If we imagine there's loads of processes there that can be automated, right, using generative AI. You can search a whole knowledge management system, you can bring back a summary of customer information, you can help to write emails, you can compare, you know, complaints sort of issues against your FAQs or against your compliance or your regulation. There's lots here that we know. We could use AI and we could quite easily automate a process that might have before been done by hard coding something in a system or getting a person to read documents or sort of review things. Where we move from that, generative AI can handle each one of those tasks individually, agreed, right? We could use and we could see how we could apply it. When we think about agentic AI, we're thinking about AI having an understanding of all the things it's capable of doing, all those subtasks kind of conceptually, and then being able to make more autonomous decisions within actually the own kind of, you know, AI framework. So if we imagine we have lots of AI agents and each agent really should just do what it's good at doing, and that might be replying to a customer, responding to some sort of case issue. And when we think about agentic AI, certainly in the way the lens we look at it through kind of in our work, is actually saying, right, let's imagine we build a system where, depending on what the input is, what the, you know, maybe the customer question is, or the kind of the complaint or the content of it, there's lots of different routes I could take through this system using different AI agents depending on what I need. And I'm going to do that kind of more autonomously and make those decisions based on the input, rather than just sort of having, right, here's an agent and I invoke that. So I think hopefully that helps kind of how most people understand it. And that's a huge leap forward because obviously, and we'll get into this, that's really exciting. It means that we're moving away from very linear processes where there's no flexibility. It also means we're putting trust in systems to make the right decisions and know that it's being built correctly and securely and ethically. So of course that's kind of the flip side, and we'll go into that.
Yeah, does that kind of align, Paul, with your sort of, you know, where you're coming at agentic AI from, your perspective on it?
Yeah, absolutely. No, Grace, I really like the fact that you illustrated it with an example. I think one thing to be aware of is generative AI was launched once ChatGPT really came into production. So that transformer architecture, which is the basis for how that model works, was really new. I mean, that was groundbreaking to a point. Agentic AI is not introducing a new technology, so I don't know how many people are really aware of that. It's not like there's been another transformer architecture. Agentic AI is using generative AI, but as Grace says, to do more things than generative AI just does on its own. So we use ChatGPT, you ask it a question, comes back with a response. I guess people have figured, well, if you can talk to it in English language and it provides an equal response, why don't you just chain these things together and have these things talk to each other and maybe interface with other systems that are not AI systems? So like a database, go and retrieve some information. And then someone decided to call it agentic. At least that's the way I see it. But in all seriousness, there, as Grace says, there are a few things that comes with that. So one, the ability for generative AI to use different tools to call out to a database or to another system, retrieve some information and bring it back. It has, one would argue, more autonomy because it's doing a number of things, either sequentially or parallel. And I think the other key thing I keep hearing is it, because of that autonomy, it possibly has less oversight. So I think I'll just leave it there. I think at that rather than delve into the more detailed differences.
And I think that's a really helpful. I love that, Paul, that concept of, like, you know, stepping away and just remembering this isn't actually a new technology. It's a new development in a technology, and it's a new use case for a technology. And I think that becomes really important when we talk about this from a kind of legislative and regulatory perspective, because actually the legislation and the regulation we're seeing coming out around this is, you know, it is neutral to those types of developments. It's regulating the technology, and actually the underlying technology is the same. It's a different way of using it. It's got an increased level of autonomy, as the name would suggest, an increased level of agency to kind of do more things itself without human intervention. And that's the bit that kind of brings the risks and the opportunities, I suppose. And so just coming on to those kind of opportunities, I think, you know, as I say, we talk about this being a game-changing development, and, you know, you've both touched a bit on some of the use cases. Grace, again, I loved your example. But I suppose, where are we seeing this at the moment used within financial services, and what do we think are the opportunities here and some of the ways that this can be used within the sector?
Yeah, I mean, Emma, from my perspective, I think it's really early days, right? I would struggle to see if agentic AI is being used at scale or in any serious sense, certainly in the circles that I mix in. However, agentic AI is being experimented with, prototypes are being built, and proof of concepts are being built, and we're doing that at NatWest. Many of the big tech providers have now built agentic AI frameworks, so development components within their model development suite that allow you to create agents and spin them up and have them send messages between each other. So we are experimenting. I think, just maybe illustrating another example, if you think of quite a well-defined process within a bank, like credit lending, right? It's what banks do. There are very well understood, rigorous steps in a process between receiving an application for a loan and actually granting a loan. Although the decision is yes or no, there's actually quite a lot more to it than that. And I think where we have well understood business processes that are comprised of sequences of steps, as Grace pointed out, some of which can occur in parallel, if you could deploy agentic AI to execute those different steps with appropriate guardrails, you are looking at the possibility of automating quite complex business processes that otherwise would have taken humans quite a long time, with validation, handoffs, emails, spreadsheets, and so on and so forth. So you can kind of see that if agentic AI can do one of those steps quite fluidly or fluently, that it could probably sequence together the rest of them to undertake that end-to-end process. So I think credit lending, as an example, I think KYC, know your customer, kind of legal processes, complaints handling is another one, although actually generative AI on its own seems pretty good at that from what I've seen and what we've done at the bank. So my key takeaway is, if there is a well understood business process, have a look at that and see to what extent these agentic AI frameworks can be built to execute those. But the one caveat is there's far more guardrails that need to be put in place, far more than we have with generative AI.
Yeah, and we'll come on to some of those in a bit, I think. Grace, what are you kind of seeing when you're working with your clients in this space on agentic AI solutions? And
so absolutely yes to all those types of use cases, 100%, but both in sort of banks and insurance tend to be most of the customers I tend to work with. So all of those things in terms of, and I think that's really well explained, the well documented processes where actually it's not difficult then to kind of take each one of those, break it down and say, well, what do we need to kind of like think of as an individual process, you know, in order to sort of chain them together. I think one of the big ones I'm seeing though is that, and it's interesting because I have a little bit of chat on the breaks about this, is from that tech lens. I work with a lot of tech teams, and a lot of the big banks that we know have got a lot of legacy tech debt, and there's a lot of things on the to-do list and the wish list that need to be achieved. So a huge space that we're working in at the moment is around developer productivity, improving application development, application modernisation. And although that's not just an FSI issue, it is an issue in FSI when some of these systems were built 60, 70 years ago. There's applications that are 30, 40 years old that I'm not entirely sure what they do, and you know there's not documentation necessarily there, and you know we know that they do something, and we probably shouldn't turn them off, but we're not quite sure kind of what the implications
none of those at NatWest. We ain't got any of them at NatWest.
Listen, I personally never worked in NatWest, so absolutely not insisting on it, but no, yeah, and so we know that actually what we're able to do at the moment is find ways to speed up how much the tech teams are able to achieve so they can start working through the legacy debt in the systems. Because I think anyone that knows their tech teams and has to deal with them know you can at most kind of keep the lights on and try and innovate, but let's not even look at the backlog and let's not look at the list of things to do. And so, you know, we get into these conversations around, you know, are we going to replace, you know, developers is always a big one. And I'm, you know, going to put that subject out there because everyone talks about it. For most of the banks, the idea is it's definitely not going to be a case of removing the number of people in the tech team, but if they could actually catch up with the tech debt and get innovative and clean up some of the, you know, years of legacy technology to be able to compete with some of the newer banks that have kind of been able to not deal with that. Yeah. Because they launched in a cloud native market and were able to kind of just hit the ground running when the innovation came. So that's another area that particularly in FSI we're seeing huge amounts of investment and success with the use of these types of tooling.
That's so interesting. It's so interesting to hear that because I think, yeah, when I think about the use cases, my mind goes to some of the kind of more customer-facing ones, I suppose, that you touched on, you know, customer complaints. We're seeing it in kind of customer service context, you know, automation of those processes and things like that. So it's really interesting to have that kind of other spin on it and the sort of internal productivity, which actually often is the most useful way that these technologies can be used, I think.
Well, yeah, and of course, and you know, it was touched on this morning about data. It's you know impossible to bring some amazing new innovation in without the technology often being lined up or the data platforms being ready and providing all of that. So actually, you have to kind of look at both because it's very hard. You know, a big thing with insurance and banking, of course, is often there's multiple applications for kind of different products, trying to create single user interfaces. Now, generative AI is great for that. The idea that you can kind of call across all these systems and create like a one experience for your customers, that's lovely in concept. However, if the technology doesn't line up and isn't modernised and isn't able to achieve that, then no amount of investment in the kind of next stage of innovation kind of can really be meaningful.
Yeah, I agree totally. There is a certain amount of kind of housekeeping and data cleanup that has to happen, I think, before you really get the benefits of generative and agentic AI. Yeah. I mean, I've lots of parts of the bank have approached me and said, I've got a really interesting use case for Gen AI. And they tell me about it. I said, well, it sounds really great, but you know, your business processes are quite fragmented. Your data landscape is very fragmented. And there's a lot of data remediation you do manually. So you kind of, AI is just not going to solve all of it. So there is a certain amount you have to do to prepare before you're ready to, I think, get the benefits of generative and, I think, agentic AI. Yeah. And at the same time, people are looking at agentic AI in the same way as they looked at generative AI, thinking it's going to achieve a lot for them. I'm not so convinced, right? I think it's a lot harder to get this concept of agentic AI to work as people would want it to do. Where we're seeing a lot of cases, and I don't know about you, Grace, but we're seeing a lot of cases where people are still asking the question about what is my return on AI, and my return on investment of AI. Yeah. For Gen AI, that's still a question mark. So I kind of think, yeah, agentic AI sounds alluring, but it's
a bit more
difficult.
Work that needs to be done.
Oh, I think a lot more. Yeah. I think for developer productivity, totally agree. Right, it's going to automate some stuff, but there again, generating the code in an IT project is 20% of the entire duration of the project. It's not everything. There's so much more that goes on creating business solutions that IT teams do. It's not just writing the code. So I think yes, for developer productivity, we've seen benefits, but there's a lot more work that needs to be done to integrate that into change management.
And I think that's the bit that's interesting though, because I completely agree with you. A lot of people think of generative AI and it's kind of just the writing of the code. It's not normally my go-to be honest. I don't talk about that too much because it isn't really, it does help, absolutely, it can speed things up, but it's been things like, for example, code reviews, architecture reviews. So we've got a couple of customers I'm working with that are building architecture co-pilots that effectively are going to be able to look at all of their existing patterns, all of the recommendations, all of their regulations, obviously depending on where they sit, kind of all the, I guess, like the golden templated best practice. And when new projects are going to be visualised or kind of, you know, being imagined, instead of sitting there and kind of, you know, manually going through and drawing up these architectures to say, look, can we have an agent that's going to speed up the creation of the documentation, the templates against all your best practice? You know, big one's been around, you know, when people submit code, actually, can we look against our individual standards and kind of review that and go through like a faster deployment cycle? And actually, those are the ones we worked out. Some customers I spoke to were waiting sometimes up to 2-3 weeks for someone to review a document to say, yeah, that looks kind of okay, ready to go to the board for review. Or, you know, that can, we can, you know, look at committing that up. Those were the areas that really was speeding up that ability to kind of get projects off the ground. But no, I completely agree. And I think, and that's the bit, is thinking outside of the box a little bit on the areas that, you know, we've talked a lot about kind of the writing code, but there's lots of other places.
There are in the software development.
Yeah.
I mean, compliance in code, I think, is really exciting.
And we talked
Sounds
about
a bit
it earlier,
dull,
didn't
but
it? Yeah,
oh,
it was a
Okay.
core thing earlier, was the code has to be secure, right?
Yeah.
It's a massive, massive challenge area. But actually, the idea that you would sit and have a human read through all the code and sort of hope that they remember all the standards and all the best practice, when surely an agent would do that much quicker, and you could go through this iterative cycle with the developer so that actually they're getting that feedback really quickly while they're still writing it before actually then sticking it up in you know, their repo to be reviewed. There's small optimizations like that have been quite game changing actually in sort of how things are working.
And I think the other thing that's kind of stood out to me from this discussion is to come back to what you said, Paul, about, you know, people coming to you and sort of saying, you know, we want agentic AI to solve all these problems for us. And it's that typical, you know, you see it all the time with AI and with any sort of emerging tech, that people jump to the solution before they've identified the problem. So, you know, they want, whenever there's anything that's hyped up in the news and that has a badge like agentic AI, which sounds so exciting and fun, and, you know, as we've talked about, can be enormously helpful, there's always a risk that people get very caught up in it. And we've seen it with Gen AI. You know, we've seen clients have, you know, mandates from above that, you know, they have to implement 50 Gen AI solutions within the year or something like that, and almost that's the wrong way around to be looking at it. You need to be thinking, well, what are the actual issue, you know, what are our pain points, what are our problems? You know, I sound like a broken record sometimes when I talk about this, because it comes up whenever I speak about this. I'm sure that, you know, you need to be led by the needs and not by the tech, and not just immediately jumping to agentic AI because you think, oh, this sounds really exciting, we need to be doing this.
Oh,
So
completely.
identifying the problems first.
We've had times where we've you know, come in and we've actually said, actually that's just traditional AI ML you're talking about.
Yeah.
That's not even a Gen AI thing, to be honest.
Or maybe not even AI, document
Yeah.
automation, you know, things like that. Again, we see it a lot with our clients as well.
Okay.
Yeah. It's quite a neat kind of segue, I suppose. We've talked a lot about the opportunities, we've touched a bit on some of the risks, but you know, helpful, I think we have talked about how this, you know, this development, not this new technology, this new development brings additional risks with it. Be helpful, I think, just to touch on what some of those additional risks are that we are seeing or that we are anticipating, and perhaps just mindful of time to kind of loop into that. You know, how can we actually move forward to addressing some of those challenges as well, and what are the kind of effective risk mitigation strategies we're seeing, or that, you know, Grace, you're discussing with clients, things like that, you know, perhaps how we can look forward to kind of future-proofing the AI governance frameworks and the AI strategies that we have in place now for the rise potentially of agentic AI. Paul, if I can perhaps come to you first on that.
Yeah, great. Thanks, Emma. I think my big takeaway is agentic AI introduces more risks than generative AI. It elevates existing risks from generative AI, but then introduces some new ones. So I'll just maybe mention just one of each. Hallucinations. You know, we know Gen AI is prone to doing that. Some people call it confabulations. There's a real simple one, that if you have multiple agents sending messages between them, you're just going to compound the impact of one hallucination. And that's, you know, that's been well documented, and that's a big risk. There is no solution to an hallucination. There just isn't. In generative AI, what generates that hallucination is exactly the same capability that generates something really, really good and really convincing. So that you can't engineer out a hallucination. You can obviously capture it on the output and mitigate it, do something about it. But what was the real intent in that message? What was the real meaning? What should it have been replaced with? So I think that's something we're still grappling with right now. And putting those guardrails in place is key in Gen AI. So in multi-agent systems, I think that's a good illustration of a risk that can compound. And I think the other risk that it brings is security as a risk. I said it's a new risk. It's kind of an existing risk. But where you have, for example, an agent talking to potentially another AI agent through something like MCP or A2A, there are questions over whether the system that's receiving a message knows whether the requesting system actually has authority to receive the data that it's requesting. So where's the role-based access, and how do each agents authenticate that the other agent is the genuine agent that it should be talking to in respect of the request? So I think those kind of examples of authenticity, accountability is another one. So where you have let's say a network of agents, we'll call it a multi-agent system, that solves a problem and something goes wrong, who was responsible for that mistake? Where did it occur in that chain? Who didn't do what? I think what we've got in workflows in certain financial institutions is that kind of stuff's really well documented. We have well understood role-based access for different systems. Only certain people can access certain systems to do certain functions, and there's sign-offs and so on that happen within systems. There's 4 eyes principles. There's all of these guardrails that have been introduced into these enterprise systems over years. And it's taken time to get there. I personally think with multi-agent systems, how do you reinforce or replicate all of that? So I'm seeing security come through time and time again, authentication, accountability, and I think there are just other risks, maybe less technical, but the impact to people, the impact to jobs. You know, there are teams out there that do that function. I talked about credit lending. Imagine a multi-agent system that's able to pretty much do that. How does a team of credit lending officers work with a team of agents that in effect is doing what they do? How do you carve out those responsibilities so that that works well with people and the AI working hand in hand? And I think that's something, I think the business process impact and the change on people's roles needs to be figured out so that it works well. So agentic AI is just not going to go out there and solve stuff. There's much bigger problems around how to actually integrate it within large companies.
Yeah,
Leave
for
it
sure.
there for now.
Yeah, no, that's all super helpful. And Grace, you'd already touched on the sort of people risk, and that question always comes up. But there are sort of other things that you would add to that in terms of the risks and how you can mitigate them, future-proof going forward.
I mean, I think it's, be naive to not completely agree with all of those risks. Of course, they are absolutely valid, and they are. And they're things that I think, and I'm not saying this on behalf of, I work for Microsoft, yes, but like just as somebody who's working in the tech space and has worked at a few of the tech companies now, I guess to pick a few of them, I think the first one is around kind of, what the hallucinations is, of course, an issue. I think that training, fine-tuning, understanding how to achieve that is a really key part, kind of on an individual kind of, that specific thing. But I think I just kind of want to go back out and come back in. The wider thing here is that we shouldn't be looking at replacing, in my view, like end-to-end processes where there is such high risk that things like, for example, lending going wrong, etc., to be able to take some parts of it, or to be able to take some bits where it makes sense, especially while we are still learning as an industry, to find that sort of fine balance between innovating and making use of the technology, but doing it in a way where we know that the risk profile is low enough, or we've got enough control. For example, and this then also feeds into, that kind of around people's jobs and around that element of it, because in my view, and we're not in a place where an agentic system should be replacing what an entire person's role is. However, is there bits of it that actually they're very, smart brain should be better used for, and it's probably not searching and reviewing documents and information and compiling reports, it's doing things with that information once they have it. Can we focus on making sure that we, I think optimise the right parts of the process? I think from the technology lens, one of the things around authentication, could not agree with you more. I'm a big advocate for people to understand the importance of that. It isn't just it's you are legally compliant. You have to make sure that data is secure. You have to do that. I think the key thing for customers is to speak with the technologies they're consuming and understand how that works. So, from the Microsoft lens, and I will give it on that perspective because we're, obviously talking about technology, we use these systems ourselves, therefore I've had to work out the exact same questions. I'm not going to be allowed access to my senior leaders' reports anytime soon, so as we embed this technology, and you take Microsoft Copilot as an example, we've had to overcome those authentication challenges. We've had to think about how you do it. I think when you're dealing with, for example, the cloud world, authentication is much easier, and particularly with your third-party SaaS solutions where there's really established connectivity between them. However, internal systems where you might have kind of self-built identity or kind of authentication methods, or actually really bad classification at the moment around your data, or kind of controls that are questionable as to how secure they really are, there's no amount of kind of cloud or SaaS technology that can overcome some of those. That being said, we've worked with customers enough, and I know personally, to kind of say, well, actually, we've seen that work, and why don't we try and bring that in? So I think, there's lots of sort of answers, and but I think that the main big thing for me is that there are lots of risks. I think the biggest one right now is, and I would agree with you, is trying to replace kind of massive end-to-end processes when there are so many variables still to be worked out, from fine-tuning to authentication to the ethical issues around kind of job replacement. But it doesn't mean not to lean into the opportunities. It's just really finding that balance so that you can continue to grow and make it scalable. Because you know, one of the things we're seeing is teams won't support building things that they don't fully understand the kind of implications it's going to have on the wider business. And I think getting that buy-in is really important.
I think I agree. I think getting and that's really where I guess some aspects of my role really become important. It's kind of drawing the line on a per use case basis over whether you should or shouldn't proceed to look at it, where there's an ethical implication, where there's the possibility of an unintentional bad outcome. That's really key, I think. So I chair the bank's ethics board as well, and we take use cases through the ethics board all the time. And it's always to look for the unintended. There is no use case that ever comes to the board, you know, where it's intended to do something.
We're proposing to do some really horribly unethical thing.
Subliminal advertising or, you know, social engineering.
Yeah.
None of that ever happens. It's always really good stuff that's there to benefit either the business or our customers. But it's always the unintended. It's the blind spots that we look out for. And a lot of, and I think the same is true of generative AI and agentic AI. There may be different and potentially bigger blind spots. Is kind of what I'm getting at.
And I think what I was going to say, we have flashing red at us to say we're out of time, which is a shame, because I'm really enjoying this discussion and feel like we could go on for ages. But just to round it off, I suppose, I love that you finished, Paul, on that kind of note about ethics and thinking about the ethics of, you know, I'm a data protection lawyer at heart, and that, you know, fairness is such an overarching concept in data protection law that we always come back to with these AI solutions. So perhaps just to kind of go back to the title of the fireside chat, I suppose, you know, so I think where it sort of feels like we've landed, I guess, is that, you know, agentic AI has got the potential to be really game changing. There are tons of really helpful things that it could do, but it's very early days. A bit of caution needed at the moment, and always being driven by the need and not by this sort of desire to kind of, you know, just run off with the technology and do whatever. So I would, again, I think we're out of time for questions, unfortunately, but I will certainly be around at lunch. And no, it's been a great discussion. I will certainly be around at lunch if anyone wants to come and find me. And yeah, thank you so much. It's been great.
Thank you. Thank you very much.
Thank you so much to Emma, to Paul and to Grace. That was absolutely super, and it was great to have a common sense approach to agentic AI, some of the realities, and I love the fact that you said, you know, so many use cases, actually it's traditional AI, it's nothing more sophisticated than that, but we do need to be extra cautious about the agentic AI because it is so new, so novel, and the opportunities and the potential scalability of risk is quite significant. I'm now going to ask the next panel to come and sit, please. So we have Julie Dawson, who's the Chief Policy and Regulatory Officer at Yoti, Adrian Field, Director of Market Development at OneID, Laura Foster, Associate Director, Technology and Innovation at Tech UK, and Nicole Sandler, Head of Corporate and Regulatory Affairs at the Centre for Finance, Innovation and Technology, otherwise fondly known as CFIT. So if you'd all like to take your seat, and I shall pop over. No, I need a seat too. 1, 2, 3. I'll get with that end. Fair enough. Here we go.
I'm going to sit down. We can move down if you want.
No, it's fine. I'll pop myself in there. That's great. Good stuff. We all squeezed in. Super. Terrific. Excellent. Terrific. So we're now going to be looking at enabling the use of digital identities in the UK and beyond. So let me just do a little bit of scene setting, and then I'm going to come through each of our panelists for some of their thoughts and views as well. So digital identity, we've touched on it a couple of times already this morning. You know, if you wind back sort of to the 2000s, there was a lot of energy and interest in digital identities, but culturally, certainly in the UK, it wasn't something that was particularly attractive, and even though we had a draft bill and so on and so forth, all fell a bit flat for a very long time. But actually it has come again, shall we say. It's been featured in the Data Use and Access Bill. There's a piece in there about digital identity, and it's estimated that if we move down this road of embracing digital identities, it could unlock about 1.8 billion of economic value to the economy by 2031. So digital identity isn't just about verifying identity, verifying who you are, or certain characteristics or eligibility. It's also an innovation and an opportunity to achieve tremendous growth within our economy as well. And I think one of the biggest drivers for digital identity and it's the greater interest in that space is actually around the need for both individuals and organizations to verify who they are. So it's estimated that if we move down this road and actually embrace digital identity or verification, we could save about £3 billion in terms of the amount that's currently basically leaking out due to fraud. Interesting data point, 40% of all crime in the UK is currently fraud. So it's not a minor issue, it's not a would-be nice to have, it's actually a really, really big issue. And so much so is the interest that there are over 50 certified digital ID and attribute service providers which have now registered with DCIT, which is the Department for Science, Innovation and Technology here in the UK. So I think that there's been a real shift and a move in terms of the ecosystem, so not just public appetite and a need in terms of digital identity theft and the need to prove who you are in the growing digital economy. The economy is growing enormously, but also there is an explosion in terms of innovation and those who are able to support and supply those services to us as well. But I'm not the expert. That's why I have everyone here. So hopefully that gave you a little bit of a flavour of sort of what it's all about. But basically, I'm going to ask my panelists to share just a little bit about the organisation they work with, because each of them works with a completely different type of organisation. So what does your organisation do in relation to this digital identity piece? And then what do you think are some of the key points that we should be thinking about in terms of digital ID? But to set the scene, I'm going to ask you, Laura, first, actually, because you're at Tech UK, because it's probably quite helpful to have, as we did when we started the morning, a bit of a landscape in terms of laws and regulations, and that's something that Tech UK has been doing. So tell us a little bit about what is Tech UK's perspective on digital identity, and what does the landscape look like now?
Of course. Can everyone hear us at the back? Thumbs up? Yeah.
Just pull it forward.
Good. So, as said, my name is Laura Foster. I am the Associate Director for Tech and Innovation at Tech UK. Now, if you aren't aware, Tech UK, we're the UK's Tech Trade Association. Essentially, what that means is our job to represent the UK tech sector, including some of the fantastic companies that are on this panel, and showcase how technology, when properly implemented and backed up with the right regulatory and legislative things in place, that tech can really help drive change and allow businesses to thrive. So what do we do in digital ID? Well, we've been working in the digital ID space for a very long time, and it's split across the Tech and Innovation Programme, which I look at, and I specifically look at what that technology needs to be able to grow in the UK, the very specific tech regulatory barriers, and it's also split across our Financial Services Programme at Tech UK. My colleague James is just sat over there, and if you want to know specifically about what we do in financial services, he's the best person to talk to. So that's what we do at Tech UK. So the question was, what is actually happening in the digital ID ecosystem here in the UK? And you mentioned that there's been this step change in recent months, which I definitely agree with. But what I will say is that step change has taken a very, very long time to get to. So in the UK, we have fantastic businesses who are developing digital ID solutions, products and services. But I'd actually say it's the adoption side of things which tends to be a little bit slower here. And that is because up until very recently, we haven't had the right legislative or regulatory processes in place that have enabled businesses to have the confidence to be able to adopt this technology or the processes that go behind this technology. But what has happened recently that's enabled this change? Well, it has to be two very important things. One, you've already referenced, which is the trust framework. The trust framework is a set of rules that's been developed by Ofdia, which sits within the Department for Science, Innovation and Technology, that shows what good digital ID looks like, and private sector businesses have signed up to that. So it gives that level of assurance and trust into the products that they are offering. The trust framework is currently in the Data Use and Access Bill, and bar a little bit of a ping pong going on right now, hopefully that should be passed very soon, and that will then become part of legislation. And that gives the confidence for people to adopt these private sector digital IDs. And then the second thing, which has happened very, very recently, is the commitment of UK government to go for a mixed model approach of digital IDs. What do I mean by that? Well, any individual digital ID or ID which is currently provided by government will be provided on a Gov.uk wallet. So, for example, if you have a physical driver's licence, I always keep mine in the back of my phone, well, by 2027, that driver's licence should hopefully be on the Gov.uk wallet within your phone. And that is the recent step change that we have seen in the UK, where government have finally, and this is central government, have finally set out what they think the approach to digital ID should be in the UK. So what does that mean for financial services? And then I'll hand over to some of the fantastic businesses on the panel, is that it's great that we now have that level of certainty coming from Ofdia and from UK government. But what actually now needs to start happening is understanding, right, how do we get this into the different industries and sectors that can benefit the most from this technology? And that is going to be central government engaging with the sectoral regulators and the businesses operating in this space. And I think also enabling use cases, which actually is some fantastic work happening by CFIT, so I'll probably pause there.
Super, thank you. So this is both a public and private sector collaboration opportunity. So Julie, I think I'll come to you as the Chief Policy and Regulatory Officer at Yoti. Yoti's been around for a while, and you've been involved in digital ID. So tell me a little bit more about what you're doing at Yoti. I think when I was familiar with you a few years ago, it was very much around individual identity, but I think you're doing much more in that space. And what is your sense about the opportunities for digital ID in the new legislative framework within the UK?
Thank you very much indeed. So yes, Yoti has been around over a decade, right? Myself too in that role here at Yoti, and we were set up really just to look at how people, individuals, could prove either their age or their identity to others. And wind forward now, over 10 years, 15 million people have set that up. But also to enable businesses to check that. And there are instances also we work not only B2C, B2B, but B2G. So, for example, in the states of Jersey, over 55% of adults have set up a Yoti to do the equivalent of login to pay their taxes. In Scotland, similarly, people logging into the improvement services of digital arm of the Scottish Government to access public services. So there are a whole range of different areas, be it right to work checks through the trust framework, right to rent checks. 1 in 5 people in the UK for DBS checks is using digital identity, 1 in 4 for right to work checks. And we work jointly with Lloyds and the Post Office, operating interoperably around digital identity. And I think one of the big things that we're seeing is that there are now sea changes in terms of other legislation in other areas. So what's unusual this year, we will have the Online Safety Act, and over half of the British population will be proving the fact that they're over 18 to access adult content. It could be social media, it could be to choose to verify themselves. And later on in the year, Peter Kyle famously did an advert at the end of last year, Beermas, so that all of us going into bars, pubs, clubs, supermarkets to buy alcohol should be able to use some form, we will still find out the finer details, of digital identity to prove age. So those are 2 big use cases involving each over 50% of the British adult population. Those are real game changers for digital identity. And back to your first point with regards the percentage GDP increase, the original sort of de minimis assessment was done on quite a small number of use cases. Way back, McKinsey cited a 3 to 7% GDP increase. And I think some of the new supplementary schemes, as well as KYC AML, could look at home buying, home selling, and there's been great work done on business identity by the CFIT team. We're looking at things like verified video calls, allowing people across the network to do a match and see if you can ping, is this person someone that's set up a reusable digital identity so that they have been verified. And not many fraudsters want to leave an audit trail behind them. So I think that gives you a little bit of a flavour of some of the sectors that are involved today and that will be involved going forwards. If you look across other trust frameworks such as Canada, EU, Australia, where we are looking at that wider interoperability, I think we're starting to see where e-signatures with age and identity also comes into the mix. So there's lots of different angles of verification. Back to the previous panel where they were wanting to know which agent does what. I think there'll be many instances in different parts of the economy where we want to look at which business, which individuals within that business are undertaking different processes, and who simply is on a call and signing the contract. Are those the right people, or are they also fraud vectors? So yeah, that's an initial starter, but must pass on, allow time for some of my co-panellists.
Thanks very much. That's absolutely super. Adrian, I'm going to come to you next. There's lots of different parties in this ecosystem, and I'd love to hear a little bit more about what OneID is doing. But you have, the identity providers who hold the identity attributes for users. You've got the users. I had no idea it was, Julie, as high as, over 50% of the population will be needing to prove that they're over 18 or over 21 going forward. So the users are absolutely there. And I think that could be a person or an organization, although you focused on the person bit there. And then, of course, there's the relying party, so the organizations that's seeking to rely on the information or the attribute because they need to be able to prove it. And if we think about the Online Safety Act, that's a particular piece in terms of age verification, particularly for younger people, really, really important for their protection. But Adrian, could you give us some insights as to what you're doing at OneID, please?
Yep, sure. So great to be here. So OneID is a simple and safe way to prove who you are online. And we've actually leveraged open banking in the UK. So there are other countries, so Sweden and Norway have a bank ID model where the banks do this kind of service. It's me in Belgium where the banks and telcos enable this. So we offer a service where we're regulated by the FCA as an account information service provider for open banking. We can connect to all of the banks, and then we partner with NatWest and some of their banks to actually get more data than you can get from open banking. So it's a commercial API. We pay, there's a business model, we get paid by our corporates. There's a revenue share back to the bank for the data, and you put the customer at the centre of it all. So they see the data that's flowing across. They consent to share their verified data from the bank to a new service provider that they're trying to get to. And all this makes it really easy. I'm just clicking buttons on my mobile, do strong customer authentication with biometrics, so you know that's me, consent to share my data through the process. And that's a very easy way of getting through it. And through this, we can prove your age, we can prove your identity, we can prove your name and address, we can do connect that into the payments world. We can even do things like affordability because we can get the bank transaction data. So if I'm looking for credit online, embedded finance, you can start to connect all of these different APIs together. And for me as a customer, I'm just clicking a couple of buttons and I'm in. But it's all safe and secure. I've shared all the data you need for that transaction. It's all auditable, traceable as to which data came from where. We've constructed it to be a kind of real-time service. If you get all the data that you need with consent in that flow, but you don't actually need to store the data. So we don't store the data. It's held and protected by the banks. So it's a very secure model of layering different security layers. And actually, where the government comes in with their framework, it's an open competitive framework, as is open banking. They publish the rules around all the different roles that you can play in these ecosystems. One of which is the identity service provider, who's the person that says, that is you. They've got a new one that's coming in that they're calling a holder service provider, which is a digital wallet. It could be an app on your phone, it could be a cloud wallet, where I can store my personal data. It's protected and I can consent to share it through that process. And then the last main role is what they call an orchestration service provider, which is the data broker. So we do that as well. We're a network. We connect to about 15 different international schemes. So you can go through our process to verify who you are from NatWest or Lloyds Bank or from Bank ID in the Nordics. So we've set up all those things as well.
So is that done sort of real time in terms of, because you said that your organisation doesn't actually store the data, but you're that connecting hub between the individual, the relying party, and then whichever organisation it is that holds the data about the individual. So we've already provided all our information to the bank, so they would they would provide that. So you do that in real time without storing it?
Yes, exactly. It's all real time with biometric authentication through the flow. So you go to where the source of the data is. Who's the trusted authority? So that could be a bank in the UK. We're talking to the FCA about can I share my permissions from the FCA registry in a provable way, because you can't do that at the moment. We're working with CFIT in terms of Companies House. Can I prove I'm a director from the Companies House registry? I can't do that in a digital way at the moment. Can these source trust registries give me a digitally verifiable credential that I can prove I'm Adrian Field? I can prove I'm a director. I can prove I've got IFA. I'm an investment advisor. I might be able to prove my permissions from the FCA. You can start to piece all these things together to start to remove investment and scams, things like impersonation, fraud.
Okay, fantastic, super. Everyone's mentioned what CFIT is doing, and CFIT has been doing a lot sort of across all sectors. But could you talk a little bit about what you're doing in terms of the digital identity space, and is it just corporates or is it corporates and individuals?
So firstly, thank you for having me here today. It's always great to be on a panel where people are saying what CFIT are doing. But for those of you that don't know who CFIT are, we were created off the back of the Khalif Review. And essentially we're there to help accelerate innovation between the public and the private sector. So when we're looking at what we should be focusing on, I'm quite visual. So I think of a Venn diagram. And on one hand, you've got your policymakers, your regulators, your supranationals. Then you've got your industry. And industry is very broad. So it's established financial institutions, challenger banks, fintechs, large technology companies. And so where there's an intersection in this little bit, we say, what is it we could be doing? What is of interest? Where can we be adding value? How can we co-create technology solutions and policy recommendations? So for those that know me, I love a bit of audience participation. So just out of curiosity, how many people in the room have either been the victim of or attempted victim of fraud, or know somebody who has been the victim of or attempted victim of fraud? So you can, I want to be you. So you can see that this is a complicated problem where it affects lots of different people. So we looked at the problem of fraud. You mentioned 40% of all crime in the UK, reported crime in England and Wales, is fraud. 6.8 billion is lost per annum to the UK economy because of fraud. 34.2 billion is spent by financial institutions on compliance. I used to work at Barclays. I can tell you that we would have liked the money to be going elsewhere. So we thought fraud was a really interesting area. We then also thought digital ID, digital verification, was a super interesting area. You've mentioned that in the past it's been a bit more challenging to look at digital ID from a political perspective, but that tide has really been changing. We said there's lots of people looking at personal ID, customer digital verification, but what about on the company side? So how could company digital verification help fight economic crime? So what do? Well, we're a convener. So we pulled together over 70 different organisations, experts, a number sat on this panel with me, to say, how can we create something that will help SMEs fight economic crime? Now, I don't know how many people in the room are SMEs, and I'm not going to keep asking you questions, but we looked at a proof of concept for the onboarding process for SMEs. Now, I said I worked at Barclays. I was not involved in opening accounts, but I was told that for an SME, you have to answer 150 questions to open a bank account. 150, that's a lot of questions. What that means is SMEs go, you know what, this is actually very challenging for us. It's a lot of time, we don't have time, and therefore we're not going to do this. What does that mean? That means they don't get bank accounts, they don't get loans, and that's not going to help with the government's approach of wanting to grow the economy, economic growth. So that was our proof of concept, and we essentially pulled together the different organisations, and it included Companies House, as was referenced, and that ultimately led to a number of different recommendations, because when you're working with something, that's when you can see where the challenges are coming up, and there were lots of challenges. Now, I'm a lawyer by trade. I was told at 2 a.m. one day that every challenge is an opportunity, so there are lots of opportunities that come up in this space. One of them, for instance, is on data sharing. Now, I said I worked at Barclays. If a bad actor has been onboarded at Barclays and then they're offboarded, you might go, hang on, the fraud can stop here. No, it doesn't, because they can go to HSBC and do exactly the same thing because that data is not shared. If you want to scale a prototype, how do you do that? One of the biggest challenges actually when you're looking in this space is you can create a proof of concept, but how do you actually scale it? How do you make sure it's interoperable? That is all of the work that we were doing with our excellent partners to help look at how a company digital ID can fight economic crime. Now, I'm also conscious of time, and I know there's other areas that we want to be speaking on, but that in essence was what we did. And we did a delightful, if you want some light reading, about 100-page report on company digital ID to fight economic crime. It included our recommendations. It set out what the different enablers were, what the challenges were, and ultimately what we want is for the UK PLC to have something that they can export. There was a time, and I say this respectfully for any policymakers in the room, that the UK was the front runner when it came to innovation, particularly from a policy perspective. You look at open banking and you can see what the UK exported to other jurisdictions. But there are other jurisdictions now that have taken the lead, particularly when you talk about digital verification. A number have been mentioned on this panel. What we would like is the UK to also have something that they can put forward and show that they are leading. And just lastly, you asked what we're doing outside of company digital ID. So our next coalition will be likely to be on open property. How do you improve the home buying process for anybody that's bought a house or a flat and had to go for a mortgage? It is a very painful process on something that should be so enjoyable. It's like one of the biggest life events, and honestly, I found it atrocious. But how could a customer digital ID also help during that process? So those are the different sort of things that we're thinking about at the moment.
Super, thank you. An awful lot going on in this space, and what we've heard about is the individual piece and the corporate piece. Julie, and then Adrian, I'm going to ask you next. Could you just talk a little bit about how they interrelate, that individual identity as well as the corporate identity? And we're talking today about financial services, and it's in a unique nexus point for digital ID. But how does this also work a little bit more broadly across other sectors as well? So, how is this useful for other sectors? So, Julie, can I come to you first, and then Adrian?
Certainly, yes. Well, I think, one of the key things really is looking at what are the roles and role permissions, as was a topic that was brought up in that previous panel. And it will be different if you look at the corporate ID for an SME versus, an organisation that's much greater. And I think that was why you started for a simpler, smaller SME as the starting point. But you're wanting to look at what are a whole range of different risk vectors if you're a bank. It might be that the identity element is just one element of the things that you're checking within that. But the actual identity of the directors is really something that, if you look at the moment with the Companies House process, is one step in the process. But there are a whole range of other, sometimes real-time risk elements that will need to be looked at. So you're probably the best one at describing the final outcome of where you've got to with the CFET work. We know from our perspective that working with organisations of many different sizes and scales, that they are really interested at looking at different verifiable credentials. It could be that, I'm a forklift truck driver and I've got a specific qualification and I've got digital and physical access. But similarly, if I'm a company director or a treasurer or another person that's got a role for a company, that I've got different permissions, both online and offline, in different areas. So looking at what are verified credentials versus in what other instances of your life could be self-asserted credentials, and then looking at how those verified credentials can stack together to be part of what's required, and that will be different. So we know one of the things that's challenging for the financial services sector is looking at what are the myriad of different regs that they're obliged to look at for the FCA. But what we're trying to get through our joint working is that after the Data Act is passed, there is a supplementary scheme that will look at KYC, that will look at AML, and will look at the previous good practice guide, will look at where the Data Act has taken us, and will look at what the FCA and the financial services organisations need, but see how can this fit in that chain. Where in the value chain can it fit? Where might it need to be supplemented? What additional fraud signals? But what is the constructive part that a verified corporate identity, as well as the individuals within that, can play? I think Adrian's been the representative from your team on this work.
Yeah. No, it's been a super interesting project as well. So we're using individual identity from any of the 50 companies that has a reusable ID, and I think it's around 10 of them have some kind of wallet or cloud storage where you can prove your credentials. We can use those as building blocks to say I can prove as an individual who I am. You can then connect that through Companies House to the legal entity. I can claim that I'm a director on there. We have to do some data matching at the moment to do that. But then you've got a kind of secure chain of trust in terms of who's who in that network. For the corporate ID, if it has 10 directors, I can verify all of them individually. I can verify the persons with significant control, the shareholders in that, and the beneficial owners. You can start to have more trust and transparency online by verifying these things. And it enables, for us, long term, it kind of enables mutual authentication. So any transactions online, fraud happens at the moment because you just don't know who you're transacting with. There's no way of digitally verifying if I get a text from the police or HMRC or an invoice from Tech UK and I need to pay that, but then you send me an email to say, oh, I've just changed my bank account details. Can you pay that money into this account? How do I verify that any of those things are true? Well, the way you do it is through digital credentials, so public key infrastructure type things. I need to be able to read a digital certificate that's issued by Yoti, OneID, Tech UK. I can go and check it on Companies House. I've got a source of verifying all these things, all of which happens digitally in the blink of an eye, and it comes back with a green tick to say, yes, it's a valid Tech UK invoice. And that way you can start to push out fraud. And I always say it's not fraud prevention, it's fraud displacement. You always push it out to things that are less secure, but that in itself creates an incentive for people to adopt the secure channels and services. If I'm using these things, I know I'm safe.
Super. So I'm hearing lots of interesting things here in terms of there's a need to be better sharing data, and there's a need for the breadth of data as well. So I'm waiting for all the universities to sign up as well. I mean, if I have to go for another job interview and have to go back X number of decades to go and find my school and university certificates, you know, it's quite hectic and hugely laborious. And if that could be securely stored in one place and so on and so forth, it would just speed up that process enormously. And I'm hearing also sort of across sectors, so lots of different uses across different sectors in different ways, both the corporate as well as the individual. Now, I just want to make sure that we do have time for Q&A from the floor, so I'm going to throw it out there and say if you have any questions, please put your hand up and we'll get the mic to you. But while you're having a little think, I have one more question for all of our panelists. Laura, I'm going to just start with you on this one and then come to you, Nicole, which is really around the international perspective and interoperability, because we've talked about, you know, in the UK we're moving ahead, we're doing better now. We've got a legislative framework for digital identity, which is really important, but we also know that digital identity opportunities and legislation is popping up in lots of different places in the world. The problem is around interoperability as well. So could you give us a couple of insights into that sort of global landscape? And then Nicole, I mean, part of what CFID is doing is it has to be an interoperable solution, particularly for corporates operating on a global scale. And so what have you been bringing to that discussion from a CFID perspective? But Laura, to you first.
So I think the international point is really important. As a little anecdote, the other week I was visiting my brother-in-law in Sweden. He's officially a Swedish national now. He's got on his phone his passport, his driver's license. His wife, still a British national, though the fact that she lives in Sweden, she can't do any of that. And it's just, for me, looking at that, it was a really great example of how some nations are really pushing ahead, and those who are still relying on the UK are kind of falling behind in that. So we've already mentioned that the UK has a trust framework, and then Julia's already said that other nations are developing their own trust frameworks. What is really critical is how these trust frameworks all interconnect. Obviously, all of those are really important. The one that I would highlight is the EIDAS scheme, which is being developed in the European Union. We've had a long wait to figure out how the UK's trust framework is going to interconnect into that. We are starting to see movement on this. Just a few weeks ago, Ofdia have gone out with a consultation to industry to figure out what the technical challenges around that will be. This is incredibly positive, but if we want things to be moving at pace, that should have been done ages ago. We should be seeing how these are going to connect. I think EIDAS and the European wallet goes live at the end of 2026, so we don't have a lot of time here to start figuring out how these connect and come together. Finally, very shameless plug, Tech UK have got an event on this entire issue on the 18th of June, so if it is something you do want to look more into, I'm happy to share a link with you afterwards.
Super. Nicole?
Yeah, so the interoperability, I said earlier that we looked at some of the challenges that came up, and interoperability is definitely one of them. To be honest, domestically and internationally, it's not just interoperability on an international stage, it's how can you be interoperable with, you don't want to just have one digital ID, so they have to be interoperable with others. So that really played into our thinking when we were building out our coalition and our proof of concept. But one of the other challenges that really came up, and this I also think of this as an interoperability point, is the regulatory framework. So I've worked in regulation for a very long time. You can imagine how fun I am. And I think of it very much as a jigsaw puzzle, right? So you've got a jigsaw, and if you want to create something, you need to have an idea of what that jigsaw looks like right at the end. Now, when it comes to digital ID and lots of different innovative solutions, that jigsaw puzzle it's missing pieces. Some of the pieces are broken. Some are duplicative. Some of them I've literally got no idea what they are. Some need to be created. And until you can piece all of those different pieces together, you're not going to be able to create the vision that you want to create. And you know, when I think about digital ID, I actually think about the role of privacy-enhancing technologies. I was at the Best Data Analytics Challenge last month, and actually Google's first fraud and anti-scams conference last week in Dublin, or the week before. I'm now losing track. There's quite a lot going on. And it was really interesting to hear about the role of the different technologies. And actually a lot of people in the room weren't thinking about, not at Best, but at Google, how the regulatory framework was going to work with those privacy-enhancing technologies. How will the new data regulation work with past data regulation in other jurisdictions? And that is a real challenge that we need to be focused on. We have a number of working groups set up to try and help solve some of these challenges. I love that you said earlier about there's lots of different players that are working on this. I said we had 70 different organisations. We have that because you need to have all of the different voices in the room, because you're only as strong as your weakest link. And actually, if you're not working together, you're going to have a problem on the interoperability side. You're going to have a problem also on the international stage, because if you're only listening to people that work within the UK, you're going to be very closed door. So those are the different things that we're focused on, but I appreciate we want time for questions.
Super. Well, that was terrific. Could I ask if there's questions from the floor? And if you just pop your hand up, we can bring the microphone to you. Don't be shy.
Whilst they're waiting, I can just add that we also have, one of the things we also looked at was the different use cases that should be built out for the company digital ID. Because again, that helps you with the regulatory framework and also with interoperability, and aligns into the trust framework. So we're working with a multi-stakeholder group to look at the different use cases, which involves both the public and the private sector. Because if you want to be able to regulate this appropriately, you need to be working in this space. I work in the private sector. It's very easy, and I'm British. It's very easy for me to complain. I can do it for Plum about what isn't working. But in order to know how to make something work properly, you have to be working with it. And that's why the use cases are so important, and why convening lots of different players all together and looking at the cross-sectoral element is really necessary.
And just talking about the international piece, Adrian, I don't know if you just want to add something about what you're doing to achieve that interoperability on a practical level.
Yeah, so we connect about 15 different international EID schemes, as I said, the bank IDs. So we've got the technical plumbing done to move data from A to B in a safe way. We know where it came from, and it hasn't been tampered with en route. So that's the technical thing, to how you get the data across. There's also the governance layer. So the G7, the G20 have been looking at these things in terms of what's data equivalence of personal data between, not just from a protection point of view, but from a level of assurance. How much checking have you done that this person is person A or that person is person B? So we've got
the quality varies.
Well, there's intentional. So in the UK, there's levels of assurance from low, medium, high, very high.
Yeah.
How confident are you that that person is who they say they are?
Yeah.
And you can build in more checks to get yourself further up the assurance chain. It's the same in Europe with the IDES. I think they've got three levels. Other ID frameworks in different countries have these different levels of assurance. But then you look at Europe and say, is a high in Europe the same as a high in the UK? Well, that's up to the two governments to decide the equivalence. So the G7's written a document around, US, EU, UK, Japan, about 7 different territories to do that level of assurance mapping. And that enables us to then pass through an identity from Sweden, say, to a UK service provider and say, I know it's this person because it's done to that framework.
Yeah, I think that level of assurance is super, super important because not everything is equivalent or the same, and using different technologies, different processes, different types of data, different levels of checking. And I think, you know, certainly back in the 2000s, one of the biggest issues was liability behind it. I think we've switched that round and not talk about liability, talk about assurance, I think is a really positive outcome in that space. Was there a question? Yes, here we go.
Hi there. Really great conversations, really interesting. And it's encouraging to hear that the political and regulatory will is there. And I think sort of actually the cross-section of panellists, the will there to progress digital ID. I suppose the missing ingredient that it feels like it's been there for the last decade is the drive from consumers and business to sort of push this agenda forward themselves in terms of driving adoption and wanting these tools to then encourage creation of these tools. Interested in the views from the panel, do they feel like that position from a consumer and business buy-in is changing, and what might need to happen to accelerate that now?
Absolutely, you know, really, really happy to feel enjoyed. Did you have a point there, Laura?
I was going to come in really quickly that I do think a lot of this is around the use of the word digital ID itself. There's been some really interesting statistics that have come out which said that people may not necessarily have a great understanding of digital ID, but once you actually talk to them about what digital ID is, they're very willing to actually then have a conversation around, great, what does this look like for me? What does this mean for my privacy? How will this help me in my day-to-day life? So I think this kind of brings up two really important points. Firstly, what language are we using to talk to consumers about digital ID on? And secondly, we should be focusing on those use cases which really put digital ID like at the heart of people's day-to-day lives. I do think the GovUK wallet is going to be one of those use cases that really opens up understanding of what digital ID is, because if you've got people interacting with it on a day-to-day basis, they will start to feel more comfortable with that. And Julie's already shared some fantastic statistics about how adoption can really help. The one that I have that I would really highlight is this technology around mobile driver's licenses has been in use in other nations for a very long time. One use case was in Australia and New South Wales, and I believe they had a 70% uptake in the first 2 years of using mobile driver's licenses because they could see the opportunity where it is there for them. So yeah, to summarise, I think language around digital ID and looking at those use cases is really important. Sorry.
Not at all. No, I was actually going to quote that same statistic in Australia, but I think that the key difference we will see in the UK is the age element. So if you look at the percentage of people online by volume, 30% of people online globally are under the age of 18, and they're all doing things and in places that are not always the right ones. But in the UK, for example, since the last 4 years, young people have been able to use a digital identity to share an over 15 in cinemas. We now have over 1 million age checks that we're doing daily for a range of different large global platforms. So I think we're going to see a major change in the next year, and utility is that key element. In the states of Jersey, it took just under 2 years for 55% of adults to start using the same reusable digital ID, which could be just sharing they're over 18 at their Glastonbury equivalent, which is called the Weekenders Festival in Jersey, but they could use the same thing to pay their taxes, the same thing for online sites, but also for right-to-work checks and others. So I think what we will see is as this utility kicks in, but these two other major changes in the UK economy of age for online services in general and alcohol are going to be the big game changers. So come back next year and you will see more.
Yeah. And if I may, so one of our recommendations was actually to have government adoption, because trust is such an important part. When I think about Sweden, we've been talking about stats, 98% of the population apparently use the bank ID, which is both public sector led and then working with the banks, so the public and a private sector element. So if your government is adopting a digital ID, that should give trust to those consumers and to business as well. But it also needs to be ease. So I'm going to give you a very quick story about post-COVID. I remember going back to Barclays, for must have been like my second day back in the office, and there was someone stood in front of me at a coffee cart, and they needed to pay for their coffee. They had a mask on. They took their phone out, they put their mask down, and they used Apple Pay. And it wasn't working, and they did it like a number of times. And I sat there and I thought, just take your card out and do contactless. But because for ease, they had got so used to using Apple Pay that that's what went through their head. if people get used to using a digital ID because there's an ease of use, they will keep using it. And so you need to have the trust and you need to have the ease of use, and then it will become a way of life like it is in Sweden. You're looking at India, where it's really growing out as well. There are lots of jurisdictions where we can learn about how they've managed to bring this, make consumers, make businesses trust this more and want to work in this space. And you're definitely seeing the shift. We've seen it at CFIT, which has been an absolute delight.
Can I just add, yeah, so building on that, I've got a cards background, but I see this as like the shift from chip and pin to contactless. You give someone some new technology, they try it, nothing bad happens, it was easier, it was more convenient, it was still safe. Why would I go back to the old way of doing it? And digital ID is like that. If I can click a button to get to a service, why do I want to do some form filling, scan a document, take 10 minutes to do something, and then it becomes a competition thing. So we've got a business in the financial services sector, their onboarding rates are up 50%. We've got a football club, actually Millwall is one of our first customers. Their data quality has increased because nobody's typing it in, they're getting it from the banks. So they're having sold out stadiums now, they know who their fans are, they know which countries their fans are from, they can do better sales and merchandise and things like that. So it's a competition thing, I think it would drive it for the businesses.
Gosh, well, I think the future is definitely digital verification and digital ID. I think we're at time, so I will call it there because we now have our lunch break. But please join me in thanking our incredible panelists, so Julie, Adrian, Laura, and Nicole, for their excellent contributions. And if you haven't got a digital ID or verification services on hand, I think you need to find one soon. So thank you so much. As I said, we'll break for lunch now, and to our online audience, we will see you at 2 p.m, please, for our panel discussion led by Brett Carr. Enjoy and see you in a little while. Thank you very much. That was great.
I think so. We're just doing like a test. Can you hear me?
So at least we got this side. Yeah.
Are you doing a test speak as well?
Yes, we're
Now.
this one. To the top. Yeah.
Hello, can you hear me?
Oh, that's it.
Oh, you can hear me? Perfect. Yes, they can now. Awesome, that's good news.
I was saying I have these headphones, but if you can hear me, I'd rather not wear them. They're kind of hot.
Yeah, we can hear you.
We can hear you.
Yeah.
So everything is gonna work. So,
Do you think it needs to be turned up a little bit? Yeah. I'd say a little bit. She's a bit quieter than Tanya.
That'll be her end, so I don't know if
Right.
I think she's just looking at her settings.
So my computer, my audio is to the max in my computer, but that
I think when everyone's quiet, it'll probably be
Okay, perfect.
just speaker and microphone, speakers, microphone, same as system microphones. How is this? Is this any better?
We can hear you well, yeah. We think it will be fine when everyone's in the room and it's quiet and stuff, because at the minute we've got lunch.
Okay.
So yes.
Tatiana, will someone take a picture? I need to send one to the Center for AI and Regional Policy if there is a picture.
Yes, we can certainly take a photo, not a problem at all. There is another virtual speaker who is joining right now, so you're not the only one. Hi there.
Hi there.
There's another speaker.
Do you want to have your now?
It's okay, no, I'm keeping this one, yeah. Have your mobile phone number, we're trying to reach you. So Aicha is speaking a bit later than you, so she's also joining us virtually. We just tested her audio and everything. So all should work well. I'll quickly just want to check with you, Aicha, whether you will be. You said you will be sharing slides if you come to that. If you have enough time. If you want to just see whether it works, your presentation here and how it's gonna, we can check it now quickly.
Sure, let's do that. Even though I highly doubt that I'm going to really actually get to the slides, I was just going over the kind of stuff that was happening. Literally, we're talking the past 2 weeks. But, let's just try it just in case. So, I go to sharing. Can request sharing for this meeting. Because I need to be able to share. It seems like in the text, I have to share information. Oh, right now I can share. Okay, let's see. Okay, I see it. So,
Yeah. I can see your screen. Isabel, can you see the screen there in the room?
Yes, yes.
Yes, excellent.
do you see a present? Oh, I see what you're seeing, I think. Is the raw vision is what I see. So the top shows up, right?
Yeah, I can see the first slide.
But
you can use arrows to go up and down.
So, super nice. Thanks very much for your LinkedIn. You sent one to me, so I've accepted. Yeah, good. Had a photo. Thank you. Take care.
No, everyone is.
Hello, nice to meet you. Great to If you want the audience to see you as well, then you would need to change the view to slide by side since you are sharing your own slides. Or if you don't want to be seen, then obviously you just have this as full screen.
Oh, I see.
Yeah. That you are sharing it, your decision how you want
want to be seen and how you want your slides to be viewed.
Okay.
I think we're good in here, so I reckon we should stand away from the show.
Apparently there's another speaker as well.
We've just done two, we had to.
Oh.
Okay.
Okay, I am probably not really going to get to this, so...
No, that's great. Thank you. Thanks for having a good afternoon. Bye.
Yeah, this is the only way it seems like I can really share right now. Let me try one more time.
Hi, Brad. How are you? Good to see you. All good? All good, all good.
I think it could be because it's this platform you are using for your slides.
Yeah, it's fine. I mean,
that's probably yeah.
busy as ever. Even more than ever. While we're launching these reports that were quite I mean, we did the breakfast in Parliament last week.
Hi Claire, can you hear us as well on the Zoom? Perfect. Claire, can I just get you to speak for us?
We're starting the session.
Yeah, that's perfect. Thank you very much. We will see you shortly.
Good to see you again. Just a quick message from our organisers. There is a delegate questionnaire. It's in your app and it's also on your table. Do remember to fill that out, possibly as you go. It's worth the effort. You get to go into a prize draw for a bottle of champagne, which is no bad thing. So do fill in your questionnaire as you go along. It's an opportunity to provide some feedback in terms of topics, the speakers, the format, and so on and so forth. So that would be greatly appreciated. We have a jam-packed afternoon ready for you. And the first session is looking at the opportunities for innovation in payments and open banking in the UK, navigating the latest changes while balancing customer demands and regulatory compliance. Yes, it is as difficult as it sounds, but not to worry. We have Brett Carr, who is an associate in the London office of Latham and Watkins, and who is also a member of the payments practice and the fintech industry group there, who is going to lead the panel discussion on this. Brett is a leading advocate for the sector, and he's also an active member of the Payment Association's Regulatory Working Group and the Open Banking Working Group as well. Brett, I'm going to hand over to you and your excellent panelists, and I think you also have somebody online as well who'll be joining you. So over to you. Thank you.
Thanks, Vivian, and hello, everybody. Thank you for returning after lunch. It's always a win to have some people come back. It is my pleasure to moderate this panel today, and I am privileged to be joined by a really esteemed group of panelists. So as Vivian said, I'm a senior lawyer in the fintech and payments team at the global law firm Latham & Watkins, and day in, day out, we advise clients across all verticals and across the world on the legal and regulatory issues that arise at the intersections of law, technology and financial services. So hopefully I'll have something interesting to say. I am delighted to introduce Dr. Claire Walsh, who is joining us on screen today. Dr. Walsh is Director of Education at the Institute of Analytics, the global professional membership body for analytics and data professionals. She is one of the world's leading academic voices in data analytics and AI. Her mission at the IOA is to help people in any field feel empowered by technology and understand the benefits. Claire is joined by Richard Fenner, Senior Director for Corporate Affairs and Public Policy at Euroclear. Euroclear, of course, is the pan-European financial market infrastructure that runs the UK's central securities depository and the CREST settlement system. Richard has a focus on the digitisation of securities markets and how new technologies will shape future market structure. Finally, Riccardo Todaro-Ricci. Riccardo will be known to many in our audience as a guiding voice for the payments sector. He is the Director of Policy and Government Relations at the Payments Association, which is the trade association for the UK's payments sector, serving more than 250 firms and counting. I think we'll all agree that this event, and particularly this panel session on innovations in payments, is timely. We're undoubtedly experiencing a prolonged period of innovation, not only in payments, but across all financial services. In the preceding 15 years, which we probably all admit is a short space of time, even if it doesn't feel like it, the UK has led the world in the launch of the UK's faster payment system for real-time payments. We then laboured through the construction of a complex, layered services system in the first of its kind open banking regime. We've launched a number of private blockchain and DLT networks for wholesale payments, and now we find ourselves amidst a ferocious pursuit of stablecoin adoption across public blockchain networks, whilst being in the early stages of the deployment of agentic payments and other pioneering AI use cases. So we've certainly been busy. We could absolutely dedicate a panel to each of those topics and still only scratch the surface. And I didn't even mention CBDCs or digital ID, but I'm sure we will. I think that with innovation, there must come discussions of utility, security, and liability. And by that, my view is that we must always question what we're innovating for, how we do it, and who is responsible. And I think one of the challenges we face is that those discussions might take place in an isolated way. For example, amongst technologists focused on the utility of a technology, or amongst regulators focused on risk mitigation or risk elimination. So all of this is making for an incredibly complex regulatory environment, which probably isn't an enabler of the technologies. an enabler of security or providing a clear allocation of liabilities amongst participants. And I think the knock-on effect of all of that to the speed at which we can innovate and the competitiveness of those eventual use cases really cannot be understated. So with that, that's enough from me for now. And I'm going to start by asking each panellist to make a choice. And Claire, I'd like to start with you. What do you think is the key innovation or innovations in this area, and how could it give the UK a competitive edge in payments?
Thank you, Brett. I think I would repeat what you have already said, actually, that by moving away from what and the technicalities of how we do this to how we implement it, there are a lot of opportunities for the UK. When we think of these technologies, they're very incomprehensible to the vast majority of the population. But there are values embedded in them that we can perhaps exploit. So if we think about distributed ledger technologies, these come with values like rules and accountability and transparency. And if we can broaden the discussion to identify use cases where people value those things, for example, a humanitarian digital coin, where international aid comes with a set of rules that you can spend the money on water and food, but not private jets, or things that the everyday person can get on board. We might then start to create broader use cases, and we can see how that might translate to other, more everyday situations. It's not just humanitarian aid, for example, where people value transparency, rules, accountability. There are plenty of payments that take place between families or within friendship groups. And I think when we start to see the cultural context of these technologies and the potential, that's when we can really start to focus on how do we better serve the populations that we're delivering. So I think it's to reiterate what you've already said, Brett.
Thank you, Claire. And Richard, what would you add to that? If you were to pick an innovation, which one do you think is currently leading the way for payments?
Yeah, thanks, Brett. So, we sit as Euroclear in an interesting position. We're a financial market infrastructure, we're critical national infrastructure, and so we operate at a huge scale in terms of being a systemically important institution. To give you an example, about 800 billion sterling passes through our systems each day. That's about half of the volume that passes through real-time gross settlement at the Bank of England. So everything that we do needs to be very resilient and well trusted by market participants. With that in mind, one of the things that I think is going to be reshaping payments in the future is the extent to which the Bank of England is leaning into this agenda. So that includes RTGS renewal, but certainly not limited to that. I mean, I think it's fair to say that Euroclear and the bank have taken a similar approach in modernizing, on the one hand, RTGS and also our CREST settlement system, insofar as the fundamental rails are not going to be built on DLT, but it's going to be a more modular system in the future where DLT applications can plug in. So that's a long way of getting around to saying some of the things that are happening with the digital security sandbox, with the new omnibus account functionality in the Bank of England to support on-chain payments is crucial, because having that public-private sector partnership in terms of innovating in a way that can lift and shift a whole ecosystem. So I'm really excited about the potential for these experiments to enhance the efficiency and the resiliency of payments in the wholesale capital market space.
And Ricardo, what would you put as your key innovation for the payment sector?
Well, at the moment, I think that it's the realization from the political leadership to understand where they want this country to go. Like, we can see that in the world, many jurisdictions have already taken quite bold decisions. China has been the first one to issue a central bank digital currency with the digital yuan in 2019. I mean, not the first one, but the first big jurisdiction to do so. We have the European Union that's made it clear that they're going for a digital euro. On the other side, the United States, since January, has decided to ban retail CBDC and allow a new course with stablecoins, so like basically the same kind of thing, but privately issued. And in the UK, despite lots of noise about what should we do, what are we going to do, no one has made a clear decision. So I think this is about time that we have this decision to come through. Otherwise, we can have all the regulation we want, and regulation is coming, but it's not going to be aligned with a clear political trajectory. So whoever runs this country in the Treasury has to make a decision. Do we want stablecoins? Do we want CBDCs? What are we going to do?
And these are, I was listening to Richard and thinking, that all sounds really expensive. So to make these decisions, they are very big decisions.
They are.
There is no turning back once you've made them.
No.
And we have some examples of, whilst well-meaning, some bad decisions having been made in the past. Look at check image clearing system being expensively built. Nobody uses it. How do we make sure we might make those right decisions now and in the short term, but still be bold and have UK at the edge, being competitive?
Well, I think this is a little bit different from the classic examples that we can give, right? Because we are not the number one into making the decision. We are just joining a sort of global race. So everyone else has made decisions. So I think we should make our own. And it's about deciding whether you want to do this from a state perspective or if you want to let it be done by the markets. There are now enough use cases to say that stablecoins are not just an off-ramp, in and off-ramp from crypto. We can see it in pays in, pay out. There's a stronger case for usage from corporate treasury. There is the entire enabling of the AI ecosystem. Like, you know, how are you going to have AI payments will only operate through stablecoins? The same thing happens in the so-called RWAs, so real-world assets. All of these new trends are not just payments, it's beyond payments. So these are the new sectors of the future where you can have growth, where you can have investments, where you can lead the new standards coming in. So it's not just like you say, well, we're looking at a niche aspect of regulation. This is like sort of fundamental decision-making that are demanded by the market. So like the market is there to ask clarity about where we're going to go. So I think that on this, the government should be a little bit more confident that we're not going to waste time. Everyone else has done it already, so it's just about catching up.
And Claire, how do we do that? How do we make sure that consumers, businesses, government are informed and able to adopt these technologies, which then makes the decisions much easier for politicians, for Treasury, for regulators to push ahead and make those bold decisions that Ricardo's looking for?
And I think as well, it's about how do we maintain systems as well once they've been set up and established. The reality is we have a massive skills gap, and in two of the core areas where in the UK we are missing skills are in distributed ledgers and cryptography. And I don't actually have specific numbers, but they are shocking. They're around about 1 in 4 to 1 in 2 companies experience a skills shortage. And then within that definition of skills shortage, very often we are layering these technologies on top of complicated existing systems. We're introducing smart contracts and layering technology upon technology, which requires a huge amount of novel skill development. People are often implementing these technologies during their learning curve. We have a very young population who perhaps need time to develop leadership and all of these other skills that we are told by our senior members are needed to be able to take a leading role in this. And so one of the crucial areas in terms of making this actually happen would be to have a more intentional plan to develop the skills that we need. But this is not something we can introduce quickly. This is something that takes time to evolve the level of expertise needed.
I think those are really fascinating points, and you don't necessarily think of the UK in being behind in terms of education and technology and financial services skills, but I think just the pace we're moving at, it's almost inevitable. I think that leads on really nicely to hopefully, and Richard, I hope you don't mind me saying this, but I would say Euroclear is a phenomenal technology company as well as a financial services company, making big decisions every day on resiliency, upgrades, modular adaptations to its network and technology. So how do we get that right at a national level?
Yeah, so the Euroclear approach to adopting new technologies is very much driven by client demand. And the fact that it is driven by client demand is indicative of the sort of private sector discipline that we take in terms of evaluating a business case. So to take one example from the government's digital roadmap and ambition in this area is the prospect of a digital gilt issuance. So this is going to be the on-chain issuance of a sterling-denominated government bond in the digital securities sandbox. And the UK government is following in the footsteps of other public sector organizations like the World Bank, the European Investment Bank, in experimenting with these new technologies. So it is the case that a new infrastructure isn't being built sui generis. There are kind of a series of experiments that build upon another, and I think that is going to be crucial, that we don't end up with a new set of rails that really doesn't meet business needs. I think the other thing to observe is that new technologies are unlikely to supplant legacy technologies overnight, especially when it comes to digital securities and wholesale capital markets. It's likely that we're going to see for quite a long time these different technologies operating in parallel. So for that reason, ensuring that there's interoperability between the different rails, that we're not siloing pools of liquidity, is going to be crucial. And again, that comes back to what do financial institutions need when they are looking at adopting new technology. It is, for instance, the fact that they can mobilize their bonds as high-quality liquid assets for regulatory and other purposes. So I think that the more that the industry can co-create with the public sector, with central banks and finance ministries, the more we're going to see what is, yes, an expensive infrastructure build be value accretive across the ecosystem.
I think that's fascinating. And Claire, I'd love your view on the interoperability piece and how we get that right. In my time in the sector, we have yo-yoed between standards set by independent bodies, standards set by regulators, standards set by legislation. What is the right way to do it to make this work?
Where it has worked successfully in other sectors is where there is voluntary adherence to standards across multiple participants. And that will always be more supportive. When you're trying to force standards onto people, then there are requirements to maintain the systems that perhaps get left behind after the initial investment in the technology infrastructure and build, ensuring when we move from payments to a more data-driven approach, which is where we are going with this, then we need to make sure that we're constantly populating and maintaining those data fields consistently and across multiple players. And the more channels we start introducing, then the more scope there is for a break in that system. And that's really where the challenge comes from. It's not so much which one do we adopt, it's which one can we maintain, which one can we consistently use and adapt in the future.
And I guess a big part of that comes down to incentives, right? Incentives of the participants to do those things. Ricardo, how do we get stuff done without legislative deadlines?
Well, of course, there are ways around, the market operates anyway, right? So things are coming up naturally. Legislation eventually will come. It's just about ensuring how we can bridge the gap and how we can ensure that we have a kind of regulation that, rather than obstaculating or stifling innovation, it sort of leaves enough space to experiment safely. So there are sandboxes, there are many examples that we can do. Or, to go back to the stablecoins thing, because it's a very hot topic and everyone asks us about it. We now have the statutory draft that was issued by the Treasury 2 weeks ago. And that clearly says that in the meantime that regulation comes, then international issuers can operate in the UK. They just are not under the scope of the payment services regulation. This is an example of how things can work. The problem is that it is not ideal. So what matters is that we do not have a regulation that's strongly against. So we need to ensure that all the secondary regulation or secondary legislation that comes in doesn't prevent the wider picture from happening. This is sometimes a concern, and it is right now, because we can see that some regulatory bodies, in this lack of clarity, of course, they just tend to protect themselves, which is absolutely understandable. But they tend to issue stricter rules that go against the bigger picture. So I think that the balance in there is quite the way where you can still go ahead, but slowly and sort of safely. I don't know if there is someone here from the FCA. No, excellent. Well, they know what I'm saying, but the referring is about this new consultation on stable coins. We see this coming out of a previous one that was itself a result of legislation that's now goes back 2 years. If we go ahead with these ideas of how it should have been or it could have been whilst the market is pushing for something completely different, then that's not a good outcome. So we need to fix this.
Yeah, absolutely. And I think we've certainly seen when we look at stablecoins and the growing adoption, there is a trend to move away from private networks to public networks. And Richard, how do we preserve trust in infrastructure to meet the expectations of the public, business, the authorities, privacy, security, resilience? It's a really hard question.
Yeah. So I think the classical binary or even kind of theological debates around public and private blockchains are evolving, and where we see that there is going to be in the future means to achieve on public some of the features that were restricted to private blockchains in the past. I mean, at the center of it is meeting the expectations of financial market infrastructure. So these are set out in principles for financial market infrastructure, for example, and really the end goals of these principles are not changing. It just may be that there's different technological means to achieve them in the future. So I think a kind of core part of this is ensuring that you have that trusted and neutral infrastructure that holds the confidence of authorities, of market participants, and the public, and the kind of differences between market participants and infrastructures include the fact that under the PFMIs we need to have a duty to the public in terms of how we discharge our activities. So I think as long as we have the kind of correct ethos, that partnership with central banks that of course scrutinize us in respect of operational resilience, in respect of cybersecurity, and so forth, we're going to end up with a system that while it may have technologically evolved, it won't fundamentally change the outcomes that are sought in the regulatory framework.
Thanks, Richard. And Claire, I think it's always tough because we sit in a bit of almost definitely do sit in an echo chamber of people who live and breathe this stuff, a room full of experts, regularly looking under the hood of the technology. They understand the regulatory framework very well. They've grown up as these theories have moved into practice and products being deployed. But what is it that what's the minimum that users need to know to just get the trajectory of adoption where we need it to grow, be globally competitive? How do we make it simpler?
So at the heart of it, the reality is your users are the average population of the UK, and the reality is that there is a literacy level of an 11-year-old across the broad population. And so concepts like the difference between a stable coin and money in the bank account are terrifically difficult to explain to the average person on the street. They care whether it's safe or not. They care about the stories that they've heard of any time that there's been a breach. And so it's very, very difficult to translate this highly technical, highly regulatory language into something that they feel they can trust. Whereas the coin in their pocket is a thing that makes sense to them. I think as well, I think they have a point. I think that privacy is fragile. I think that we assume that we put the regulations in place and therefore we are protected, but the reality is there is no system that is 100% secure. And we've seen, for example, just last month that the US government can backtrack and gain access to data that previously have been protected through OpenAI, for example. And so in this broader context where privacy is exceedingly fragile at the moment, and the risk is extremely high, it's very challenging to bring these conversations down to a level of comprehension that makes sense to the everyday person on the street.
And whose responsibility is it to lead that conversation? Is it private sector? Is it education?
I think it has to be the public sector because A, they're the ones who understand it, B, they're the ones who perhaps can have the greatest impact. But having said that, there is a limit to how they can intervene, and traditionally methods of intervention are incredibly slow to take an impact on the population. They can go through public campaigns, they can go through traditionally they'll always target the school-age population because they have a captive audience. That takes literally generations. And so I don't think we have caught up with how to have those conversations. Where you see adoption and people don't care so much about privacy, it's through totally unrelated means like WeChat gamifying payments to young children through the red packet system. You would never come up with that policy if you sat down with a group of regulators and said, we're going to gamify giving money to young kids, and that's going to encourage people to trust us. And yet, that's what worked for WeChat. And so we do have to come to the level where people are entering into this discussion and find ways that we can reach out to them, preferably intellectually rather than through lotteries.
It's fascinating, isn't it? And it feels like we really are leaping from one innovation to the next. I don't want to say we're running before we can walk, but you've got open banking payments, which is in theory a very simple account-to-account model. We're now moving towards commercial variable recurring payments, again allowing users to give authority to a third party within even wider parameters of a simple open banking payment. And now we're sort of at the dawn of agentic payments and various use cases coming to the fore. Do we really think the regulators, Ricardo, are going to let firms roll out these technologies without a bespoke framework wrapped around them? They're telling us that they want to be technology neutral. They're not going to specifically legislate for AI in financial services. Do you believe that?
Before that, I just wanted to launch a provocation to Claire. I completely agree that it's a public sector responsibility, but up to a certain point, because if we run a survey here now, I hope that everyone will know which kind of money they use to pay every day, but I highly doubt that everyone knows whether they're using e-money, commercial banking money, or central bank issued money. I mean, central bank issued money, everyone thinks they're using it, but they aren't, because the only ones who use it every day is the ones who use cash, and we know that not many people use cash anymore. So there is a point up to which it's about who has to make decision, who has to understand the differences. And the problem is that, well, it's not on me to say, but it seems increasingly difficult to see how knowledgeable these people are But I don't really think that the average consumer has to understand all the details and the technicalities. Once it's been safeguarded that it is safe and it works, that's fine. And to go back to the initial point, no one really knows which kind of money they're using to pay every day, but they don't need to because the system works and it's safe. Yeah. So this is another distinction. To go back to your question, well, so many people would like me to have a position on this, but officially I can't have one, and you perfectly know why. There's a huge lot of work that's going on at the moment with the FCA on open banking, open finance, and all of the viability of the commercial variable recurring payments. It goes back to general points, right? So how much do we want a detailed regulation, and how much are we trusting the system to work with minimal regulation that can allow innovation to happen? I would go on a sort of lighter touch. I think that when regulation comes in too early, it's too soon. So you end up blocking it. And we've seen this, for example, with recent EU legislation pieces like MiCA, like the AI Act. These are all, they want to be comprehensive legislations that are in the end pushing people away from those jurisdictions. So you need to have enough legislation to ensure that consumers can feel safe, but at the same time you need to allow people on the business side to sort of create the case for wider usage. So on this, I'm quite happy that the government hasn't adopted those kind of legislation here.
Yeah. And I think that's a great segue to what's everybody else doing? What other jurisdictions, nations are doing a good job of this, and we can look to and borrow ideas around building frameworks or promoting technologies, enabling firms. I think, Richard, what are the sort of the good things that you're seeing?
Yeah, so I can speak a little bit about our experience in the European Union, because there's a lot of work going on with the ECB on wholesale central bank digital currency. Many of you may be familiar with the 3 different models from the Italian, German, and French central banks about how that would work. We participated in a model with the Banque de France, a 100 billion euro issuance settled against wholesale central bank digital currency in France, which was a proof of one particular concept of how new rails might be structured in the future. We're also involved in a project, Global Layer 1, GL1, in Singapore, which is a consortium of banks, financial market infrastructures, looking at how a layer 1 ledger can enable interoperability between different ledger ecosystems. And this is a similar concept to the BIS Project Agora exercise, where a number of central banks and private sector institutions are working on something similar. So I think there's a lot of good work out there that is taking place on a public-private basis. I can also speak to the work that Euroclear has done together with DTCC and Clearstream around setting standards for the protection of digital assets. I think that linking major financial centers and their ambitions in terms of the next generation of digital money and digital assets is going to be an important piece of work to see the scaling that we need, because the reality is we're not there in terms of scaling. I'm keeping a close eye on how the Savings and Investment Union in the EU is going to progress. A big part of the consultation in that area had to do with distributed ledger technology, which European authorities see to be a means of harmonizing the market or the various markets within the EU. From my perspective, it's going to be important that that is also open and cross-border. So not least the bridgehead between the UK and the EU is preserved and efficient, and we're making sure that the major global financial centers can interoperate with each other in the future.
And Ricardo, what jurisdictions do you look at and think, wow, they're doing a great job at advocating for their sector through legislation or an appropriate regulatory regime?
Well, I think it depends very much on the sector we're looking at, right? So no one ever gets it right all the time. So it's about looking at where circumstances have allowed excellent systems to thrive. Innovation comes not just from the US, Singapore, China, or these jurisdictions that you would sort of expect to be always ahead of the curve, but it also comes now in particular from countries that we probably overlooked for too long. And I'm talking about the LATAM region, and we're talking about Africa. These are countries where the lack of legacy systems have allowed lots of experiments, and technology has been extremely helpful in this country to sort of build a new system from scratch, right? Our problems are because we're dealing with huge legacy systems that are extremely complicated. So every innovation sort of works as a patch on another one, and then we have this pyramid of unstable. There is an amendment here, another one there. It's all very complicated. In other countries where they didn't have this, they could plug in a new system that has its own reasons to leave without having to deal with the past. So this is where we have to catch up. Otherwise, our preeminence becomes an handicap because we cannot, get there soon enough to be competitive.
I think that's exactly the word I was going to use. Handicap was, we have 60,000 firms supervised in the UK. The regulator cannot take a hands-on bilateral approach looking at, you've got a particular use case, we'll spend resources on helping you develop that and experiment. They just can't do that. Whereas in other nations where there's a single large bank or a single large non-bank PSP, they get that special treatment, and then it elevates what they're able to build and deploy. So I think we need to be looking at some of those special cases where we can do that and have more flexibility in our system. I know sandboxes are fantastic, but again, I think they need to refocus a bit on getting the biggest bang for the energy and the effort in having firms go through those processes. And Claire, on data and AI, who's getting it right or getting it better than us if nobody can get it right entirely?
So I think sometimes when we look at the approaches of the European Union, which are building on top of systems that are already functioning and looking for modest gains, I think there is an obvious win there. But when we do look at countries that are taking a much broader approach to not seeing payments, but to see data and what can be done with the growing volume of data that we are acquiring, there is a lot more scope for innovation. Whether that is a positive thing or not, we will have to wait and see. We haven't really seen the use cases that we hoped we might see from when interoperable data was introduced in the UK in banking. We haven't seen huge innovation in that field here in the UK, but in other countries where it's not appropriate for us to copy and emulate their models, we have seen massive leaps forward in super apps and exceedingly complex AI models interacting over multiple different channels and services within the same app. Which approach is suitable for the UK is a really challenging thing to answer.
I'm going to ask another challenging question to you, Claire. We obviously talk about the benefits of working with these huge data sets and models, but what are the downsides of firms having all of this data?
A lot of it is just the day-to-day job of maintaining it, of ensuring that it's safe, ensuring that it's clean. Even really basic issues sometimes can still be frustratingly challenging to ensure consistency in that data set. And when we move to other nations, in particular, we work more internationally, then we see a very low level of skill and particularly digital infrastructure sometimes. So we might hope to expand payments, work with those countries, but the reality is there are challenges in terms of technical compliance and monitoring the standards and ensuring that we're not failing.
Yeah, and I'll ask one more question to the panel because we'd like to leave some time for questions from the floor. Richard, what's the killer use case in payments? What's your prediction?
So for me, if I can take that question and shift it slightly, the thing that we're really interested in the area of permission data sharing is around how we can use that technology to support retail investors to have a better picture of their finances. So we've achieved a great deal with open banking in terms of pioneering some of those concepts. I think moving that to open finance is going to need a lot of work on some of the hygiene factors that we have, not only in the kind of payments area, but also in terms of how securities, this shareholding framework, for example, works in the UK, where we still have paper shares in circulation out there, and it's taken a long time to try to dematerialize them because of the entrenched legacy processes we've been discussing. So for me, it is how do we take that next step where both assets and cash are mobilized in a system that empowers investors and consumers to share their data, have control of it, and understand better what the marketplace can offer them.
Yeah, I massively agree. And Ricardo, the same question to you.
Well, I think there are two main elements. The first one is failing to understand that our very modern system, like, you know, everyone who has a payment experience in the UK cannot really complain. The problem is that this is going to be soon out of date. So not understanding this is itself a problem, because it's a killer to the motivation. But the main problem we have now, and we haven't been able to solve it in the appropriate way, is fraud. At the moment, the rules that have come out are extremely punitive for the industry. I mean, I was part of one of the major uproar from the sector. We managed to reduce the threshold of mandatory reimbursement. The problem is that we are far from resolving this problem, and with new technologies coming in, with further innovation coming in, the fraud element will definitely increase. It is already increasing. So the regulator is sort of claiming victory because some of the fraud data is showing that reimbursement has sort of helped to reduce the number of frauds. The reality is that the fraud is only shifting to new channels. So from APP fraud account, we're seeing more crowd fraud. Like, scammers are ahead of the game and they use the rules to exploit the system. Until we do not understand this, we are killing the sector. And we cannot leave only businesses to have the burden of the cost. We need to ensure that social media platforms are brought into the perimeter. We need to resolve the problem of having 3 different definitions of consumer standard of care. And yes, we need to have consumers involved in this. Like, ultimately, I know it's difficult to say, there will be people who will always say, but the customer is always right. Yes, the customer is always right, but everyone plays a part in this game. And that there has to be an element of responsibility from consumers. You can't just allow everyone to click on something and then pretend their money back in 5 days without even going to the police. This is not tolerable.
Yeah. I'd love, Claire, for you to respond to Ricardo's last point there around responsibility of data subjects, essentially, and that the role they play.
I think it does take, these transformations are taking place in a background of erosion of trust in general. Anything mediated digitally can be fraudulent, and that is an issue that we haven't managed to catch up. That is evolving faster than we have been able to adapt systems, culture and attitudes towards, to be able to get on top of. So I think people are quite rightly fearful of anything that takes place digitally, and I think they have good reason. And until we can get on top of that and understand the role that we can play in protecting people and creating absolutely secure channels, then that will continue to be a concern for many people.
Yeah, it's definitely a long list of to-dos, isn't it? I think we've got a few minutes left if there's any questions or comments from the audience, I think also online perhaps. We've covered everything. Well done.
Excellent.
Well, that leaves me to say thank you very much probably go and grab a coffee with that 2 minutes that you have. Keep you going for the afternoon. Thanks for your time.
Thank you.
Thank you very much. It's a constantly evolving and innovative topic, and really appreciated all of the insights from your panel. So thank you very much. Super. Fantastic. Okay, so next up, we actually have a series of keynote presentations, which is looking at best practice for achieving optimal business outcomes with data and AI. So lots of fast and furious insights, which would be absolutely super. So the first one we have is lessons learned in supporting scaled adoption of AI in the retail banking business. And we're delighted to invite Arabella Arkuragi to take the floor. Arabella is an associate partner for enterprise strategy and industry transformation financial services at IBM. She specializes in supporting executives who are looking to invest in new technologies and capabilities while navigating the complexities of legacy landscapes and maintaining a focus on speed to value and creating enduring change. And I love it when somebody mentions legacy in their bio, because it's actually really important that we marry up the future and the present in which we're currently dealing at the moment. So, Arabella, there you are. Fantastic. Thank you.
Thank you very much for that great introduction, and good afternoon, everyone. I won't go ahead and reintroduce myself, but basically, I work for IBM Consulting in financial services, and the main thing to share with you is that my role is really helping retail banking executives on their planning and rollout of large-scale data and AI transformation programs. And over the last decade, those have primarily centered on data and AI transformations, whether singularly or actually together. And so I think, I don't work in a regulatory role, so it's a very different take maybe than some of the other conversations we've had today. But what I want to share with you are some of the business outcomes and the key challenges and lessons learned I've experienced working with clients in this space with you this afternoon. So the first one is that taxonomy is actually key. We haven't had an umbrella technology term yet, at least in my career to date, that has encompassed so much breadth of capability and also dynamic capability. The amount that AI has changed in the last couple of years and the amount that we expect it to change and shift exponentially in the next few years is very different to what we've seen before. And that's what makes it all the more important to have a unified and understood AI taxonomy, and also one that is regularly engaged with and takes into account these continuous shifts in the market. And as we all know, there's a large spectrum of what we mean when we have this ubiquitous term now, AI. We've experienced it a lot through the conversations today, whether someone's talking about even just machine learning algorithms, whether it utilizes unstructured or structured data, whether it learns self-learning and self-governing, or has to be guided. Thinking about generative AI and how to support colleagues on content creation, and now the entire topic of agentic and what that's really going to mean in terms of autonomy and being able to update as well as run processes in an autonomous way. So having key decision makers in the organization understand that AI taxonomy is really truly critical for standardization of approach to prioritization, to thinking about the systemic risk frameworks and appetite, and aligning those governance frameworks for the range of capabilities and geographies of application. And ultimately, how they're going to deliver top-line business benefits. So I want to share two examples to help frame this. One, looking at how important taxonomy is in really run-of-the-mill BAU planning that happens with all of our retail banking providers in the industry. And then one on the importance of classification and specificity in the face of interacting with the brand in the wider UK market. So the first example, take a hypothetical high street bank, and it's the usual annual or quarterly planning process. And you have executive representatives coming together, thinking about what they need in order to achieve their business commitments and their business outcomes for the year to come. And you have, let's say, a team from cards and another team from mortgages in their respective P&Ls. They will come together and create a roadmap of enablement. The first one saying, I know that I need some use cases in advanced analytics. I also need something that they're categorizing as AI. And they think they need something in the Gen AI space. And they list those out and discuss. Great. Then you have the next team come in, and they're doing the same type of exercise, but actually they put down an advanced analytics use case that they're categorizing this way that actually uses a lot of the componentry of what the other team was explaining as ML. And asking for an AI agent, which again was using some of the capabilities that the other team was mentioning for a Gen AI application. You can see then when you take a number of teams that are constantly trying to plan on how to use these capabilities and the breadth of capabilities to really look at their bottom line P&L, it is very difficult without that standardization of approach to do that prioritization and proper planning for accountability within the banking team. As a second example, if you take a tier 1 bank that's deploying machine learning algorithms to assist in credit decisioning on a personal loan application, and this was actually raised as a common theme in the Bank of England's AI public-private forum findings. Internally, they class this model, the data science team, as a statistical decisioning support tool. And that made a lot of sense rather than as an AI system. That made a lot of sense based on the fact that it was not fully automated use case and it was absolutely human in the loop to help support decisioning. And because of that internal classification, this specific model was excluded from some of the bank's AI governance frameworks. It was not registered in the AI model inventory and therefore did not undergo AI-specific explainability or bias testing. This opens the bank to issues during regulatory reviews and potentially leads to remediation requirements. So it really demonstrates the importance and a simple differentiation of classification in AI can cause both inconsistencies and challenges in creating internal economies of scale, but it can also cause reputational and significant outside-in issues with the regulators and also with partners. So how people are working with hyperscalers and other partners to provide these capabilities within their banks to change their ways of working and their outcomes. So ultimately, I think the point here is that we see the boards need to be talking the same language to investors. The business leaders need to be talking the same language about opportunities and priorities in AI. And the data science and technology teams that are working with the risk and enablement functions really need to be able to be speaking the same language as well in order to support delivering those outcomes. And as an addendum to this point on taxonomy being key, and I think it was mentioned in the previous panel as well, AI literacy is extremely important and an under-discussed topic in my opinion. Not everyone needs to be an expert in the least, but organizationally, there needs to be that common language and the high-level understanding of the buckets of capability in order to really support fundamental change and to realize those benefits, as well as the understanding the key aligning risk profiles, potential bias and ethical considerations, and again, one we haven't talked about loads holistically today, the operational resilience requirements for those different breadths of capability as they continue to be rolled out. So the second overarching lesson learned that I would like to share with you all today is understanding how the bank is going to measure success and value, not just functionality and usage. Let me break that down for you a bit. There's still a large emphasis on measuring the functional outcomes of AI implementation, which of course is mission critical and understandable in an environment where technology is constantly changing and enhancing and growing in breadth, and it has made a lot of sense now at this level of maturity to focus on how it's being implemented in the bank. You know, you have to understand the data, the complexities we've talked about being part of a legacy system, the platform strategies and aligning with the move to cloud, etc., the governance and risk profiles. But the time has come in the maturity of the AI curve where we have 75% of UK financial firms reporting that they're already using deployable AI, with an additional 10% deploying in the next 3 years, and this is a very sharp rise from 58% in 2022. This is from the Bank of England. That we now have to make a key parallel priority on how AI makes a difference to the business P&L. And this is really going to require a big shift in mindset from usage, uptake, and point solutions as success to how the business teams can use these capabilities to fundamentally change core processes, services, or experiences for customers, and to drive the end-to-end value and measurable change that can actually really shift the dial on cost-income ratio, because the UK market has been a little bit slow compared to some of the other jurisdictions in terms of thinking about how they can really shift the cost ratio in particular. Virtual assistants are a really good example here to bring this to life. So the actual AI in the implementation might have worked really, really well. It used NLP, understood a customer's query, and directed them to the right pages in a web experience to find an application form for, say, a joint account application or a loan. It might even provide prompts to tell a customer what information was needed in some of the more opaque fields. Well, functionally, that AI worked, and while the customer might have been contained within that channel, which supported the optimization and call center reduction metrics, if the customer was then still really unhappy with that service and process and moves to a challenger bank because they wanted to be able to authenticate and complete the application then and there with pre-populated information from a photograph ID in real time, some of the things we were talking about in the panel earlier, I would argue that that was actually not a success, and it did not drive a successful business outcome. Had the team started in the thinking about how to make that holistic engagement and experience seamless for the customer, then they might have moved to a completely different delivery and rollout model. So in the world of agentic AI, as another example, it's just not so futuristic anymore. It is here. Again, I know we've talked a lot about this today, but I want to give an example to really bring this to life. Metro Bank has been an early mover this year. I don't know how many have read about this, but they have put the first agentic AI system live in production in their commercial lending arm. It autonomously executes multi-step tasks across the lending lifecycle, and meaning that for a customer, the process for loan decisioning is completely transformed. So you take an old experience of what maybe we were talking about before, from waiting days to weeks for credit risk assessments, submitting or resubmitting documents, maybe even having to go in person, hopefully not, but that can still happen. Navigating fragmented comms from your different banking teams and your RM not giving you enough updates. To now, within minutes, they can compress the end-to-end process of data collection, underwriting, and a personalized autonomous agent works with you as a financial companion to walk them through the preliminary credit decision within the day, providing consistent experience. And Metro Bank are already looking at tailoring recommendations in the near future. So in other words, this is here. This is something we all need to be thinking about and looking at how we're going to apply that in the market at scale as more and more banks try and compete and keep up. So the lesson learned here is we need to reframe the approach on how business leads think about how AI can support them in top-line business goals and how they will measure the success of these outcomes aligning to top P&L commitments. You don't want to use AI to make a currently mediocre process a little bit better. You also don't want to automate a bad process. This technology can and will be used to fundamentally reinvent experience, process, and services. Maybe not tomorrow, but certainly in our banking lifetimes. And we need to be ready for the future and those customer needs. I just want to add here, of course, it is very important that there are going to continue to be point solutions of AI application that have great return on investment and do change someone's experience. And again, as capability continues to be rolled out, it needs to be tested and learned, and we all understand that. But the overarching thought here is that we're not currently thinking about the full breadth of capability to be prepared for this inevitable future. And building on the last point, operating models now, more holistically within retail banks, are tending to move away from very centralized that supported initial AI maturity and were more easily contained, governed, towards federation into the businesses and sitting with those that drive the business outcomes with the goal of self-service features, access to golden source data, and AI capabilities. This makes a lot of sense as an aspiration to support those that are closest to those core processes, closest to the customers, understand their needs. But there are a number of themes, closest and know what they need. But there are a number of core themes that need to continually be looked at to organizationally ensure that this federation strategy and approach is functional, efficient, transparent, and also continues to deliver value. We've touched on these in some of the earlier points, but to rapidly reiterate, their importance in the context of the expectation of which teams within the bank in the future use these tools, and it's embedded in their processes and day-to-day. There are a number of things that need to be thought through. So again, guardrails, very important to be aligned to those overarching governance frameworks. More federation means more autonomy. Doubling down on the point about taxonomy and classifications and ensuring everyone's speaking the same language. Common value frameworks for measuring outcomes and success. It's not just about functionality, but how do you look at the KPIs and how they actually roll up to holistic business outcomes. Maintaining some centralization in the model as new capabilities continue to come into development and need to be tested and learned within the bank. Thinking about reusability strategy and where appropriate for efficiencies of scale. And also partnership strategy and approach. Leveraging best-in-class capabilities that align with your ethos is very important. And even in the Metro Bank example we talked about before, they actually worked with a third-party service provider to provide them with those AI capabilities. The last lesson learned, and where I will leave you today on this whistle-stop tour of some of the key themes of challenges and opportunities in the market, is that we want to see more executives shouting from the rooftops about their AI plans and outcomes on LinkedIn, in investor reports, and in the media, because those are the ones, in my view, that we should be watching as front runners in the coming years. They're front runners because they are the ones that have a strong AI strategy that's linked to their core business outcomes. They feel confident enough in the enablers they've built around data, platforms, and security that they're ready to set up for delivery and scale. They have the aligning governance frameworks, common taxonomy, and ethical clarity. And they've already started to shift the thinking in AI strategy and approach from piloting point solutions to fundamentally thinking about reinventing processes. And on a final note, they have top-line sponsorship, that has taken on board an ethos of dynamism. They're always up for learning about continually developing opportunities and governed wisely with a proactive approach to updating those operational resilience plans and engaging regularly with the regulator and partners. So it's a really exciting time. I think there's a lot more to come. And I really look forward to seeing what the next 3 to 5 years will bring. I hope this was useful. I think this is a little bit of a different perspective, and some of the things that might seem relatively commonplace to us as SMEs and experts in this industry, such as thinking about taxonomy and operating model, might seem obvious. But I think some of those legacy challenges that everyone's been discussing today, I see as the day-to-day drudge with clients across the industry. So thank you very much, and I welcome any questions.
There's a microphone in case anyone has any questions.
All right, thank you so much.
Thank you very much, Arabella. Actually, one of the things that's really interesting that you talked about there was the importance of sharing from leadership what they've achieved and what they've done, because there's so much theory in this place, and actually having the opportunity to share your experiences, what's worked and what hasn't worked, is super important. Our next keynote speaker is Miri Hataja. Miri is the CEO, CPO, and co-founder of Saydot. Saydot is an AI governance company helping enterprises build safe AI-driven businesses. Mira's had a very varied career, and she's also the chair of the Ethics Working Group in Finland's National AI Program, and is the former chair of the IEEE's AI Certification Program and Impact Use Cases Initiative. So plenty of expertise there. Mira, over to you.
Thank you. Great to. Can you hear me?
maybe a little bit higher. Great to be here, and thanks for the introduction. I'm going to share some of the lessons learned that we have learned over the past 7 years, I would say, in AI governance. I founded Cited 2018 after having worked a couple of years in financial sector, leading AI strategy implementation at OP Financial Group and also GDPR program. And why I founded Cited was that it started to look at it's not going to be voluntary for enterprises to start thinking about AI-related risks. New risks started to emerge, and also we started to see regulators starting to shape or plan AI-related regulations. So with Cited, we are really a platform company, a SaaS platform, into an AI governance platform, taking care of really providing tool for AI teams, primarily those who have the everyday hands-on responsibility for AI governance, risk management, compliance, and also technical side of the safety. And in this short session, I just wanted to share a few points and experiences that we have learned over these years, and see how the sector is now moving on towards implementing the AI Act that has been now in force almost 1 year. I've been really following AI Act since the beginning, and from the beginning it was clear for me that we need regulation. Now what AI Act is, we still have a lot of questions, and there are a lot of opinions on how good a regulation that is. Here is like a short timeline about the key events. I believe that many of you know very well what the Act regulates. It came in force last August, and now the first milestone was this February related to prohibited AI practices and also AI literacy requirement. And like in the previous discussion, we heard how important AI literacy is. That's something that we have really seen on the market being in focus in financial sector and also other sectors. In AI Act, the guidance for literacy is really to make sure that the organizations, everyone who is involved with AI in the organization knows what is AI Act about and how does it govern the AI use in enterprises. Really, the hot topic now is the general purpose AI system related regulations. That's been really the discussion in the market, and still very much a work in progress and unclear. Code of practice is something that has been promised to the market, still not yet finally or finalized, but really. In preparations for the August timeline on that one. And then we will have 1 year for the mainstream AI users, enterprises, to still get ready for the high-risk AI system requirements that are to a large extent, and especially related to financial sector, coming in force or transition period is really like ending 26 August. There are a lot of big questions related to this whole topic. One, and talking about taxonomy in the previous presentation, the definition of AI system is really one of the key questions there. The Commission actually announced or shared a guideline for the definition of AI system, and I will not have time to go through all of this. But for the financial sector, one of the positive or weighted, welcomed decisions in the guideline was that, for example, the logistic regression based systems are not AI systems under the AI Act. So that was one of the details of this guidance on the definition of AI Act. who is regulated? These are all the different roles, like most importantly, providers and deployers. Those are the mainstream roles that apply to large extent of enterprises. The AI Act altogether, I think on our platform we have something like 130 controls for the whole regulation. And then when you start to look at what out of those fall for providers of certain types of systems and deployers and so forth, the most difficult or demanding requirements go for providers of high-risk AI systems, and the size of the template in terms of how many controls there are in the template is 67. So that's the biggest and most demanding template. Then we have everything between 2 and that 67 controls for various. But it's really important to remember that it's a very broad and comprehensive regulation, and you will need that granularity in terms of these requirements, understanding the requirements and how they fall to different providers and or different operators and the different types of systems. This is just a few, I think, most interesting and recent communications related to the AI Act. Like I mentioned, there was this AI system definition clarification that has been welcomed by the industry, also guideline on the prohibited practices. The hot potato is really the general purpose AI code of practice, and related to that, there is a really interesting, if there is someone who is super interested about this, read this second last one. It's really informative regarding what is coming. It's only a consultation yet, but there is a good draft document on the guidelines for the scope of general purpose AI rules, and it talks, for example, about to what extent GPI model requirements fall to those parties who have fine-tuned general purpose models for their own use. So a lot of further clarification. That's the I guess the side effect of the broad regulation, that you need to provide so much of further guidance and clarification, because the industry is having really trouble applying it without. Well, where has this led is really that we are seeing definitely a drive towards AI governance in the market. In the financial sector, we discussed with some people over the lunch, and I really see that financial sector is the most active sector in terms of enterprises practically working on AI governance and taking into use AI governance practices, and that's really something that companies are not only doing for compliance for AI Act, but more and more for managing business or controlling business risks. And I think for everyone in AI governance or governance in general, this kind of research that are highlighted here, McKinsey's latest State of AI noted that companies or enterprises where a CEO is overseeing the AI governance and related practices really correlates with the highest self-reported bottom line impact of Gen AI in organizations. Whose responsibility it is then, and that's one of the key questions that organizations who start to ramp up these capabilities in their organizations are asking. Well, governing body, that's typically namely led or owned by board of directors or executive leadership group or someone from there. The practical AI governance, and that's those are the people with whom I'm primarily working with, who get that, who are those product owners who get the requirements to really make sure that the products that they are building are safe and are meeting the compliance requirements. So that's the first line of defense, and this is a very new area for them. So definitely literacy, knowledge about various different sides of AI governance is really key for empowering these people to then act on the various new workflows and processes. Then, of course, in collaboration with the second line of defense, we discuss with a lot of and collaborate with a lot of lawyers, risk management professionals, different groups supporting in risk management. AI governance frameworks, that's how companies typically are starting this journey, putting in place some kind of a framework. What we really work on with enterprises who are putting in place these kinds of frameworks is that how do you align those new frameworks with all the existing enterprise governance practices? And that's really the typical situation that there are a lot of those current processes, and especially in the financial sector where there are very established risk management compliance related processes. It's really key to build on those and then make sure that the whole framework is clear for everyone who is working in AI governance, and there is a clear alignment with the existing processes. What I'm particularly excited about at the moment is how to tie the evaluations and the technical evaluation capabilities to the other parts of this AI governance. So how do we inform risk management with technical evaluations, and how do we tie that to then compliance related processes and evidence collection? Definitely something topical over there. But there is more to come to this place. Actually, when AI Act was launched or published, we were on the first step, of this whole flow, and this is kind of indicative what are the hot topics that industry has been seeing. But it was designed on the situation when, primarily companies built their own machine learning, in-house built machine learning models for use, and then came generative AI, and it has to be quickly adapted to that one. Then capabilities to really tailor those LLMs for your own data and really build these RAG systems. We've seen a lot of off-the-shelf AI products being introduced to the market, and procurement teams being a little bit puzzled with all of these new AI-based products, and going forward also establish platforms with new AI features. So AI is practically everywhere, and the problem of harvesting what are all those AI systems that we have in use is really one of the primary problems that organizations are having in this area. But now, really, I think the question of the year in AI governance is really AI agents, and how all of this needs to scale now, or how do we scale AI governance as we are entering the time where AI agents are taking relatively autonomous actions on behalf of us. And maybe my final or main message and what we are really focused on at the moment is this whole modular approach to AI governance. So if it was already earlier, before agents started to see that there is so much modularity, looking at the models, then data sets, how do you combine those, then introducing the different AI-based products, and these creating different kinds of AI systems. So governance really falls into these different entities in the a bigger sort of value chain of AI systems in your organizations. But agents are really scaling that, and I personally don't believe that it's possible going forward to govern your AI agent inventories without being able to modularly do governance on these different components, and then sort of inherit governance, inherit risks, controls from those different components of your entire system. So this is really something that I encourage anyone who is working in AI governance or thinking about how to govern your systems to to start thinking what are your capabilities to look at these different components, think about their governance aspect, risks, controls separately, and then pull all of that together in a scalable way to various different combinations of these entities. To summarize, what are the success factors that we've seen with enterprises who have been able to really move forward in preparation for AI Act and also putting in place solid AI governance frameworks. This modularity that I mentioned in the previous slide, but then alignment. Really don't build everything from scratch. Make sure that the AI governance frameworks align with the current processes and get the buy-in from those different various stakeholders in your organization who run these established processes. Integration from the also really important to look at who has the work on their table from AI governance, and really looking at ways how do you integrate these different aspects of AI governance for those people who whose everyday life is really being is around answering to those requirements and making sure that AI is developed and used in a responsible way, finding ways to integrate not only on a process but also in a platform tool level. And then finally, I'm really happy that a lot of organizations that we talk with, they start to, when referring to AI governance, companies have started to use these terms like acceleration or enablement. So more and more we see that governance is not something that is considered as a burden, but really as something that enables, really time to market of AI. And remembering what has been said about agents in this session or already earlier, I think we will see the difference on sort of smart ways to do governance versus those ways that stop the AI time to market or impact that negatively at latest with the introduction of AI agents. So really measure also the governance and how does that support and enable time to market in AI. Thank you.
Are there any questions? Are you okay to take a question if there are? That was very comprehensive. Thank you so very much.
It's lovely when you get visualizations and sort of how to structure things, and the modular approach to AI governance is incredibly helpful. So thank you very much, Miri, for that. Our next speaker is actually joining us virtually via Zoom, and I'm delighted to introduce Aika Ariyoruk, who is the Senior Fellow at the Center for AI and Digital Policy, and who is also a cross-cultural ethics advisor in artificial intelligence. Aika is a contributor to the AI and Democratic Values Index, which evaluates over 80 countries' national AI strategies against democratic values. She advises governments, international organizations, and startups on navigating AI risks and opportunities. So a genuine international perspective. So I will hand the screen over to Aika. Thank you.
Can you all hear me?
Yes, we can.
Great. Thank you for having me, and I'm sorry I couldn't be there in person, but I'm grateful to join you virtually today from New York. We had a slight change of plans. Given the scale of developments on this side of the Atlantic, I'll be focusing most of my remarks on the US national regulatory outlook. I will still touch on global trends and broader ethical issues as they remain our best compass for what the future may hold. But just a heads up, if I don't get to the slides you have in front of you, you know why. We are in a bit of a pickle right now, as we say in America. Less than a year after a major election And right in the middle of a technological revolution, we ended up with an administration that is not just testing the limits of executive power, but actively reversing policies of its predecessor. It feels like we're in a ship that is being turned 180 degrees with speed and force in the middle of a storm, and the numbers speak for themselves. In just 5 months, President Trump has signed 157 executive orders, nearly matching Biden's total from 4 years. And the president has revoked 97 of Biden-era orders. One of the casualties was the Biden-Harris executive order, which I'm sure many of you are familiar with, a landmark not only for substance, but also for the process behind it. The executive order situated the federal government as a role model in AI procurement. Some of you might know the federal government is a big spender, spent about $3.3 billion on AI label contracts just in 2022 alone. And that is not the total general IT spending, which exceeded $100 billion, half for military and half for civilian purposes. More importantly, the executive order created a space for voices beyond the tech sector, civil society, academia, and our international allies from Europe. We could trace the connection between the policy and public opinion, as one should in a democracy, but sadly, I can't say the same for the new policy towards AI under this administration. Interestingly, Trump's new executive order doesn't sound that different on paper. It even calls for identifying high-impact AI use cases, requires due diligence in 2 categories, right impacting and safety impacting, just as the previous executive order. The substance may appear minimal, perhaps not because it's anti-regulation, but because the heavy lifting on definitions and ethical framing, which this current EU depends on, was already done by the previous administration. But on AI and the new administration, actions matter more than words. Elon Musk may no longer be the de facto chief technology officer of the federal government, as some of you may be aware of the very public fallout last week, but the damage has been done with the way he went about firing federal employees and whether or how he used AI in the process very much put a dent in trust in public authorities. Labor unions, advocacy groups filed a lawsuit arguing that DOJ requests for private information from Department of Treasury, Education, Office of Personnel Management violated federal privacy law, but the Supreme Court just last Friday granted DOJ access to sensitive Social Security Administration information. And it's worth noting that 3 justices have dissented and said the Supreme Court's decision created a great privacy risk for millions. Now, a few words on financial services. The AI oversight landscape in financial services remain to be very fragmented, according to a U.S. Treasury report. The most recent one, a very comprehensive one, Outlook to date, I recommend you have a look. Multiple federal agencies, from Federal Reserve to the Securities and Exchange Commission, have issued their AI guidance. But very importantly, the National Credit Union, a high-risk area, still is lagging behind. The union doesn't have the tools or even the authority to properly oversee credit unions' use of AI. And this was just this month again reinstated by the Government Accountability Office, a government watchdog. The Congress was urged to act back in 2015, and it still hasn't. And we're not even talking about new risks that arise from generative AI here. This is predictive analytics and machine learning combo that has long been in the market, the most alarming when used in a way that impacts access to financial resources, resulting in discrimination in housing, education. Automated trading, also primarily based on predictive analytics and machine learning, is a concern. We have by now enough evidence and scandals to know these risks: gender bias and credit limits, racial bias in auto loans, housing discrimination, proxy discrimination. This is the kind of stuff that separates democratic AI from authoritarian AI. And regardless of which risk framework we're using, there's no real risk management if we're dancing around our fundamental rights and not addressing them. It's just a scandal waiting to happen. Just like the previous speakers have mentioned, the taxonomy is important. It is important to note here that not all AI is created equal. We have rule-based AI, for instance, that have been working just fine for financial services. Just like the other day, my bank alerted me to an unusual activity on my credit card, for which I'm grateful. But we have to face the problems from predictive AI, and of course, at the same time, look at risks emerging from new use cases from generative AI in customer service or using them in investment decisions. In summary, we have existing laws on the books, but they're not fit for purpose, and they're also being ignored. One bright spot on a federal outlook is the Deepfake Protection Act, more broadly on AI risks. Recently passed with bipartisan support, it criminalizes non-consensual use of AI to generate and share sexual images, but it stops short of protecting elections, and those are mostly handled at the state level. Speaking of states, this is where things get wild. In 2023, state lawmakers introduced 191 bills. This jumped to 700 in 2024, and in 2025, according to some sources, which has been incredibly difficult to track, now we're looking at potentially 1,000 bills. Now, they will not all pass, obviously, and very few of them are comprehensive AI bills, but they're all looking at risks as they intersect with our rights to employment, financial opportunities, education, healthcare, right to trial, right to intellectual property. This shows a trend that policy genie is out of the bottle, and states want to act and protect their constituencies. Now, a few words on the big elephant in the room. There is a proposed moratorium, what I call the big ugly, that would bar states from passing new AI laws for 20 years, and it's already deeply unpopular, and we have the hard numbers to prove it. Over 260 state legislators from all 50 states objected. 40 state attorney generals signed a bipartisan letter against it. Even Anthropic CEO spoke against it in a New York Times op-ed, and it's clearly the industry is no longer speaking with a single voice on this. And most importantly, there is no question that this big ugly moratorium is now before the Senate is deeply disconnected from public opinion. A recent poll found bipartisan opposition to the proposed 10-year moratorium. 78 Republicans, 86 Democrats agree both states and the federal government should be involved. Even Trump loyalist Representative Marjorie Taylor Greene threatened to vote against President's budget package, which this moratorium is a part of it. The Republicans oppose it because they see it as violating states' rights and chipping away their powers. Democrats oppose it because they see states as a way to build momentum for federal law, and that the states play an important role in experimenting with policy before committing the entire nation to a set of rules. So it is safe to say that the big ugly moratorium is likely to fail. Even the civil society, as part of the civil society, we have also mobilized against this moratorium. We are calling for and supporting a federalist approach to legislation, a cooperative federalism model, right-respecting federal legislation that preserves the state's ability to lead and experiment at the state level. We need this kind of state experimentation and debate, as we, for instance, saw in California, because we learn important lessons. For instance, we learn in California through the debate around SB 1047, which was around putting quantitative limitations on frontier models. We learned, for instance, that despite the fact that big tech companies have expressed support for government oversight in congressional hearings, they are actually against this kind of regulation. So zooming in on the states, I mentioned about California, a very important development in California. California State Assembly, which is like the state's equivalent of a Congress, just passed AB 316 unanimously, ensuring companies cannot use AI autonomy as a shield from liability. As my colleague Evelina Iraptian, who leads our California team, put it, the AI did it should never be a defense. Another important development in Florida, a judge let a case move forward against a chatbot company linked to a teen suicide, stressing that chatbots don't get First Amendment freedom of speech protections. These are important precedents as we brace ourselves for agentic AI and more autonomy. Colorado, Utah are worth mentioning because they're creating more comprehensive bills and protections in critical areas like healthcare, housing, and education. And of course, I have to mention, as a huge Elvis fan, I have to mention the Tennessee's Elvis Act, which protects artists' voice and likeness. And finally, a few words on the copyright wars. You have in front of you a slide probably showing some 40 number of copyright lawsuits against AI companies that is already outdated because the copyright lawsuits now have spilled over to Canada, UK, France, Germany, India, and China. Last month, the head of the US copyright issued a very well-balanced, thoughtful, comprehensive report emphasizing market-based solutions and protections for and protecting human-led industries, creators, and so on and so forth. But the president fired her. Then she sued the administration. So this is all to say that we can't set our light on every passing executive order or legislation or a lawsuit. You know, business cannot function, let alone innovate in this kind of chaos, unless you can afford to have a council for every state. This is really bad for startup environment, particularly. But the writing is on the wall. The genie is out of the policy genie is out of the bottle. The ethics frameworks are out there, and this is a crisis. This crisis is a perfect opportunity to come up with a comprehensive policy at the federal level that includes market-based solutions for human rights protection, such as licensing and clear liability frameworks. The challenge is now, as you know, AI is a horizontal technology, and we're trying to regulate it vertically. We're trying to cherry pick some risk management frameworks, what works, what doesn't work. But human rights are universal, and they simplify things for us when we look at when we establish human rights, right impacting assessments. We cannot outspend. We saw in China. We cannot outgun. We saw in China with DeepSeek. We cannot outgun. We saw the recent use of drones by Ukraine in Russia. All we have is the democratic values, and all we have are the universal human rights, and they kind of show us the way. And I'm glad that we are able to, with Europe, with our alliances in Europe and in UK, able to move forward towards making sure that AI innovation remains aligned with democratic values. I will stop here to see if we have time for questions.
Are there any questions in the room? No, I don't think we have any. I'll pop up here. Thank you very much. I don't think we've got any questions in the room, and I just wanted to mention that Aika referred to her slides. We do have the slides. I'm sorry they didn't make it on the screen. We were looking at you, Aika, rather than your slides, but they would be circulated.
What I said didn't quite match the slides.
Yeah, well, and actually they're really cool slides because they got a picture of ET in there as well. So, so we will actually circulate those slides. But thank you very much for a really terrific overview. That what's going on in the US is so incredibly complex, and it's really difficult to keep track. In fact, I'll be honest, I don't keep track. I keep waiting for the end. But anyway, that's been really useful to map what's happening at the state level, what's happening at the federal level, how it's being impacted by the political environment and so on and so forth as well. And it's certainly one to watch. It's such a hugely impactful part of the world, and so much of the AI is coming through US companies to the rest of the world. So thank you very much, Aika. That was hugely, hugely informative. And if everyone would like to just clap their hands and say thank you so much, that was super.
Thank you. Thank you for having me.
Terrific. Thank you. Great. So, That was a run of very interesting presentations. We're now going to change pace a little bit, and I'm delighted to welcome Munib back up. Munib is actually going to do a little fireside chat with somebody from the FCA, and I'll leave you, Munib, to introduce Kate Collier. For those of you who weren't here this morning, Munib is a partner at Alex Partners, where he leads the regulatory compliance practice, helping firms navigate complex regulatory and governance challenges. He has an extensive background in a number of different roles. So not only has he done work with global consulting firms, I couldn't think of anyone.
Thank you, Vivian. So normally the crowd stays when the FCA is speaking in the afternoon, so that's a good technique. So now. Kate, I know we've spoken before. Yeah, we've spoken before. Do you want to just quickly give a bit of your background to the audience?
Yes, certainly. Well, thank you very much for inviting me today. My name is Kate Collier. I am Chief Economist at the Financial Conduct Authority. I'm also responsible for our strategy work. So by way of background, I'm a microeconomist, which means I spend a long time of my career working in the competition field. And some of the debates that we find ourselves having at the moment around the appropriate regulatory approach to AI, I think, have been playing out in various different technologies over many parts of my career and are familiar from other parts of regulation as well. So particularly interested in how AI is manifesting within financial services, and of course today we'll be talking a bit about some of the regulatory approaches that we're taking at the FCA.
Great, well, it's a pleasure to have you with us over here. Thank you for your time. So shall we maybe just start with a bit of a level set in terms of the FCA's current approach to thinking about AI. We've heard today from the Dutch Central Bank as well, and we've heard about what's happening in the US. We've heard about the EU AI Act as well today as well. But just if you wouldn't mind just giving a bit of your view in terms of how the FCA takes to AI and what its thinking is around the regulation of it.
Certainly, well, good place to start. I think it's probably important, just by way of context, to acknowledge that, as I'm sure you've been hearing over the course of the day, a lot of the issues that we find ourselves thinking about with regards to AI and the regulation of AI aren't new. And I think that's an important starting point. We know, for example, that insurance markets have been grappling with modelling of risk and complex issues around that. So some of the challenges that we see around and the issues that emerge around AI have been present in one form or another in other ways, I think, within financial services. So our objective, just very simply, is to promote the safe and responsible use of AI. We want to make sure that firms and consumers are able to benefit, but also to make sure that we're aware of the balance that we need to strike with risks. So as we think about those potential opportunities, whether that's for firms being able to take advantage of more efficient data analytics, or consumers potentially benefiting from greater inclusion or more matching and so on, our approach is broadly to follow a principles-based and outcomes-focused approach, which means that when we think about the issues, the risks that we think exist within AI, we think our existing regulatory frameworks provide a good way for us to approach those. Now, we can go on and say a little bit more about what that looks like, but in practice, over the last few years, we've been doing a lot of work with the bank, with the PRA, with other regulators to understand those risks and then to explain how we think they can be met within our existing frameworks. So the two I would call out particularly is the Consumer Duty, which is an important regulatory framework that we introduced, which really means that firms are responsible for ensuring that the products that they design and introduce for consumers offer fair value. So that's a really important one. And of course, the Consumer Duty also talks to important elements of how firms need to communicate with their customers. So it speaks to explainability and fairness and important aspects like that. And then the other important element within our regulatory framework is the Senior Managers and Certification regime, which means that there's an important role for senior managers to play way in terms of accountability and governance. And of course, that speaks to the later part of the life cycle of AI and thinking about how we ensure that that's met. But broadly, we follow the AI, the governance AI principles, and we set out our approach, I think, last year in our document that supports all of that. We support for buying and using this new technology.
Thank you. And I think the FCA has said very much so in the past that it's open to AI, so and obviously it's running sandboxes and other instances to support the development and of innovation in this area. And you spoke about just there about existing frameworks such as the senior managers regime and consumer duty, which kind of govern how you expect firms to be thinking about AI. That said, there are of course some unique challenges and risks when it comes to AI, particularly when it comes to things like governance and skill sets within organizations, challenge, models, model sign-offs, etc., model risk management. When it comes to the FCA's supervision of how firms are adopting AI, do you expect that the supervision teams at the FCA will be looking at some of these things more specifically in relation to the challenges that come about from AI, rather than looking at just at the broad level of consumer duty and the senior managers regime and of course other parts of the regime as well?
So, I think the starting point for this is being clear that we think the existing approach that we have to supervision is fit for managing the risk. So we take a risk-based approach to supervision. We start by understanding how the risks might affect the objectives and the regulatory outcomes that we're trying to achieve, and that forms the basis of how we then supervise firms as they're looking to apply technology or in any other aspect of what we're doing. We are tech neutral, which means that we take the same approach. Obviously, it includes how firms are applying AI, but we take that kind of broad brush, risk-based approach across the piece. I think it is worth saying, I mentioned that I'm responsible for strategy, so it'd be remiss of me not to mention that we have just in the last few months published a new 5-year strategy, which sets out one important element of which is the being a smarter regulator. So we've set out the 4 different priorities. So we'll be supporting consumers, we'll be looking to promote growth, we'll be fighting financial crime, but also being a smarter regulator. And as part of that, we're looking at how we can be more efficient and effective, and that includes how we think about the broader supervision. It's also, I think, important to say that we have restated recently that we don't intend to produce any further additional regulations in this space, but we are working really closely with industry just to understand what the issues might be. Regulators within the UK, whether that's the ICO or Ofcom, to make sure that we're engaging with them and with firms to understand what the issues might be. So that all then supports our supervisory model and means that we're well placed to be able to sort of intervene and support firms as they're adapting and using these new technologies.
Interesting. And what about the FCA's own staff? So in terms of, one of the key challenges when it comes to AI is making sure that, we have the appropriate skill set within organizations to be able to, understand the risks arising from AI and its deployment and so forth. What is the FCA doing internally to ensure that its own staff are able to understand AI and the way it's developing so quickly? So today, for example, we were talking about how it's gone from, machine learning to Gen AI to reinforcement learning to now agentic AI. How is the FCA sort of keeping up with that?
I guess my flippant answer might be there's 2 members of my team sitting here today, so we attend conferences and make sure that we are learning from various different experts. But more seriously, the answer is, again, as we set out in our strategy, we're investing a lot in making sure that we're developing the capability within the organisation. So that ranges from ensuring that people have access to really good training. We've got curated pathways which allow people to build their capability and how to use AI themselves safely, but also to understand how it's being used in industry. So there's a lot of training and development. We're piloting off-the-shelf AI as well, so thinking about the products that are available to help us. as a regulator as we seek to become more efficient and effective. And then, of course, we are looking to collaborate and engage with academia and others to bring that expertise into the organisation. It's worth saying we have, over the last few years, hired experts as well. So we've now got, I don't know if this is the latest number, something in the order of 75 specialists in our data technology and innovation area who are helping us to make sure we've got the capability and the expertise that we need within the organisation to be able to engage really effectively with firms and to understand the risks and opportunities that are emerging.
Okay. And you mentioned, Kate, that you are yourself beginning to look at the use of AI. To what extent is the FCA utilising AI now, looking to deploy AI in relation to its own supervisory approaches when it comes to, for instance, surveillance of the markets, but also just more generally in terms of supervision of firms' activities?
Well, there's actually some really quite cool examples of how we've been doing this. So let me give you 2 or 3. So one, we have a contact centre where consumers can phone up and talk to us about whether they're having a particular issue and seek kind of our advice. As you can imagine, that is a complex role for our colleagues to do, given the breadth of our regulatory remit. And of course, they receive an awful lot of calls from people who are potentially in quite vulnerable circumstances. So one of the examples we've got there is we've been using some Gen AI to help with, for example, some of the scripts around the calls that are coming in. We're trying to pilot ways in which we can direct the calls so that we can make sure that the calls that come in that actually aren't best dealt with us, but might be best dealt with another regulator in the financial services family, so that we can very quickly redirect those people. So that's a pretty cool pilot that we're doing. Another one that's quite exciting is in our supervision area, where, as you can imagine, we have thousands, hundreds of thousands of cases every year, and that means lots and lots of documents that need to be reviewed. And of course, the old-fashioned way was to read all of those documents. We're now thinking about how we can use LLMs and other approaches to using kind of unstructured text review to help us quickly synthesize facts, pull out issues, and then of course human comes in and exercise their judgment and does the kind of the upstream part of that. But that's an example of how we think those tools can be helpful for us and can help us be more efficient and effective as a regulator. There are other examples and other things that we're piloting. We actually have I don't know if there's any colleagues from DTI here. Yes, there we go. They can tell you all about the really exciting stuff we're doing in our Innovate world. So we are we've launched something called the AI Lab, which is all about how we can engage with industry, but it also means that we get to hear all the exciting ways in which industry is using AI, and that of course means that we can think about what we can be doing for ourselves as well.
And does the FCA then have its own in terms of AI governance? So, an AI committee where different use cases are coming for discussions and sign off, like similar to other organisations in the industry? Well,
as you'd expect, we have our own policies in place and they're governed within our normal structures. So yes, AI is part of how we think about that. But obviously, as we're setting that up, it fits within our policy approach. We need to make sure that we're adopting it because we're a risk-based regulator, so we apply the same risk-based approach to how we think about how we use it, and we need to comply with all the rules and regulations just as everybody else does.
Okay, so to sort of shift to other players in the ecosystem, so other regulators. One of the things that we've been discussing here is the fact that if you look at the risks when it comes to AI, one of the things that the bad actors that use AI to commit fraud or financial crime in some shape or form, they know the rules very well, and they utilize weaknesses in the rules and weaknesses in chains of information to commit misdemeanors. So just in terms of the FCA's work around AI and other regulators, how do you collaborate with other regulators, or to what extent are you collaborating with other regulators when it comes to AI as a topic?
So let's start kind of, there are concentric circles, I think. We work closely with the bank and other members of the financial services regulatory family, and we have done actually going back over a number of years. We first published, I think, a discussion paper about machine learning like 3 or 4 years ago. So that's something that's been an ongoing partnership. We've just launched the AI consortium with the bank, which is about industry engagement and making sure that we understand and can engage with the sector, and that's also with the bank. So there is, within the financial services regulatory family, lots of close engagement. But of course, in this space, there are other regulators that are really important as well. And so through something called the Digital Regulatory Cooperation Forum, which we joined a few years ago, we work with the ICO, with the CMA, and with Ofcom, which it does, the DRCF does a variety of different things, but it allows us to work together on some common areas where we need to perhaps join forces and think about research. And so we've done some interesting papers that we've done with them as well. And then, of course, more broadly, there's international engagement where we've been at the forefront of leading quite a lot of the thinking around AI with our international partners as well.
Okay. And does that involve frequent meetings with other regulators? I'm thinking to outside of the UK as well.
Yeah.
So would you meet with the kind of European regulators, the US regulators, and others in the Far East, for example?
Yeah. So I mean, there's a plethora of fora. So let me give you just a few examples. IOSCO is the International Organisation for Securities Regulation and Coordination. So that's an important forum for trying to coordinate standard setting for financial services. That's a forum that we've been instrumental in being part of for AI. And IOSCO does research, working papers. It also facilitates good conversations amongst the constituent members. And helps to move towards some sort of coordinated and joined up standard setting in some instances. So that's one example, but there are parallels with the FSB, so that's the Financial Stability Board, where the Global Financial Innovation Network is an important part of the work that they're doing. And we've been a key part of many of these different international collaborating forums for a number of years and continue to be. And I think we kind of look ahead. I've mentioned our strategy. One of the things that we did as we were developing that strategy was spending some time doing some horizon scanning. So anticipating what are the issues that might affect financial services firms and consumers over the next decade, trying to think about what our regulatory response needs to be to anticipate those challenges. And obviously technology and the opportunities presented by technology was a really key part of that, and AI featured in it. But also, we're anticipating that there may be more challenges to global cooperation, and that we as a regulator might need to work in a different way on the international forum. So we may need to have bilateral relationships as much as we've been having multilateral relationships over the past few years. So our strategy sought to anticipate and position us to be able to engage in the most effective way in the face of the various different challenges that we think we might be facing as a sector.
Yeah, and one of the things which I note about these with the international regulatory frameworks around AI is that there are differences in approach. So you mentioned that currently the FCA does not intend to publish a detailed rulebook around AI.
Yeah.
And different regulators are taking different views and different approaches to it. And indeed, there isn't even a consistent definition of AI amongst the different regulators. And a lot of them are built around the OECD definition, but still there are differences in the definition, and then how the regulators are pointing to different parts of the definition to publish their approaches. So in the collaboration that takes place amongst the regulators, does that cause an issue? Is that an obstacle to how things are discussed around AI and how they are coordinated?
Interestingly, if you go back a couple of years, some of the early work we did looking at the potential risks and opportunities that might emerge in the AI space, we launched a discussion paper where we sought engagement from industry in the sector. And so one of the questions was indeed about this question of a definition. And actually a lot of the responses that came back to that were saying that the preference was not for a definition on the basis that actually being able to move and flex and update and keep abreast of the relatively fast-paced technology in this space could be was a really key driver of that, but also thinking about how we ensure that we continue to be tech neutral. So the respondents to that, first of all, were not in favour of a kind of a firmed up legal definition, which I think is in itself quite interesting. Now, obviously, there are going to be different views around this, but from the perspective of international engagement, it's natural that different jurisdictions will take different approaches, and I think that's always the case in any. It's hard to think of any area of our regulation where there isn't some important nuance that is driven by the own priorities of a particular jurisdiction. So that I don't think is particularly unique to AI, and I don't think it's a particular impediment to that international dialogue and the engagement that needs to take place. I think that functions. I think without that worry. You mentioned the OECD definition, and my understanding, like yours, is that sort of is how things are moving. But I think it's interesting that at least going back a couple of years, there wasn't a strong demand from people asking us to come up with a legal definition.
And just the last thing before we open up to questions, so please have a think about any questions that you may have. What do you see the future like in terms of AI and in terms of the regulatory framework around AI, from the perspective of the FCA, or indeed more generally in terms of regulation? Any sort of perspectives or points of view that you have in terms of how this is developing?
Well, actually, I was going to ask you that question, so I'm going to turn it back to you in a second. What I find really exciting about this is if you look at all the work that all my colleagues in Innovate are doing, and in fact the work that we're doing as well in the economics team, we're doing sort of interesting research about, for example, how you need to use behavioural science to try and understand and explore something. So there is a huge amount of work going on across the when we talk in AI sprints and various different engagements, the pace at which things are developing is the thing that's really exciting, and the opportunities that seem to be emerging are, I think, really very exciting. But maybe I could ask you the question: where do you think financial services firms may be going next with the use of AI?
Sure. So, I mean, we obviously do a lot of work with firms in the FS space in relation to AI. And I would say, generally speaking, so a few points I would make. One is, yes, there's a lot of excitement about AI, and most organizations have got a very large number of use cases that they are, thinking about. And there is, rightly so, over the last, I would say, 6 to 9 months, a lot more focus from boards around the return on investment. And that's because all firms work within defined and limited capital that they can invest. So as there become more opportunities with the development of AI and kind of more excitement, there's more use cases that firms are thinking about. But I think the boards are naturally beginning to now starting to filter them more effectively compared to, say, 12 to 18 months ago. So that in itself is a bit of a sort of control there. But I think generally speaking, firms are they're progressing, but still a little bit nervously, I would say, because they want to make sure they stay within regulatory guardrails. And a lot of organizations are looking for, more, I suppose, certainty in terms of, if we do this, is that going to work for the regulator? But, that's kind of where we often are giving advice on that. But I think, and I actually presented earlier today, I think there is an imperative to adopt AI relatively quickly, and that's partly because, and I've said to many people who I've spoken to over the sort of coffee breaks, lunch break, the criminals are using AI without any guardrails, and they're moving very quickly. They are adopting the new technologies as soon as they become mainstream and they're open to people to use in the public. So for that being one very key reason, firms need to move quite quickly to use AI to counter the risks of financial crime, fraud, cyber attacks, etc. And there's some big examples we see. So there is very quick movement, but potentially an imperative to move even quicker, I would suggest.
It's interesting you say that. We did a survey quite recently that quite a lot of people who said they wanted to use it more, particularly around offering consumer support. You mentioned financial crime, another element of our strategy, and that does seem to be a place where kind of the focus might move to. It's another area actually where we're doing some really cool stuff. We've got we're working on synthetic data to allow us and firms to identify patterns around AML. So there's some interesting use cases, I think, there for regulators as well as for firms. But yeah, watch the space, I guess.
Yeah. Great, thank you. Well, I know we've got about 4 minutes. I was going to leave about 10 minutes for questions, but let's try and get. I would love to continue this conversation between us and have a question and answer between us. But let's open it up to the audience. I think we have a question over there. And maybe if we take 2 or 3 questions in a go, then I think it might be more. We'll try and respond more effectively given time constraints.
Thank you. I will be quick. So today is actually a very interesting day for FCA because you guys announced that you have a big partnership with NVIDIA to collaborate on this new supercharged sandbox. So the question is it just the beginning of FCA engagement with big tech? And if isn't it a bit odd that you just engage with one particular big tech, given that so many other banks are collaborating with other big tech brothers? So what is the pattern here, and what kind of message you are trying to send here to the broader financial industry? Thank you.
That's a big tech question there. Any other questions before we come to that?
So, I mean, the Supercharged Sandbox is a really, really exciting example of the work we're doing under this kind of broader AI lab work that my colleagues in innovation are leading. I think more broadly, we've been working with big tech in lots of different ways for a number of different years, whether that's through the work that we need to do to act on financial promotions, for example, and how those are propagated through the internet. So our engagement with big tech is not sort of specifically tied to one particular organisation, and indeed, kind of taking that as a launch pad for one of the areas of potential issues and concerns. Thinking about the role of critical third parties and concentration risk is really important. So one of the areas that we're particularly focused on is ensuring that there is operational resilience, and that I guess collectively as an industry and sector we're not finding ourselves in a position where that concentration risk that could be harmful.
Any questions? We have an opportunity here. No? Okay. Well. Okay, thank you so much. It's always very insightful to hear from you and from the FCA, and it's a big attraction, I think, for people to be able to hear from you. So thank you so much for that, and maybe we'll continue our question and answer exchange, after the day's events.
I would like that very much. Thank you very much.
Thank you.
Thank you. Fantastic. That sounds like an ideal opportunity to remind people that there's drinks afterwards, so we can continue the discussion then. We're coming up now to our final session of the day, which is a panel on what does the future hold for AI in financial services in the UK and beyond. So this is our forward-looking piece, and I'm delighted to introduce Gabriel Lakeman, who is a partner at Latham & Watkins and advises clients on the intersection of financial services, technology and regulation, which is exactly what we've been talking about today. Gabriel, please come up with your panel, and I know you'll introduce your panelists, and we very much look forward to hearing from you and your panelists and their insights for our final session. Welcome.
Thank you very much. Yeah, do you want to come? Shall we do it? Well, thank you very much. So I think we're sort of finishing the day and the sessions with a panel sort of looking a bit more on sort of what the future holds for AI in financial services. So we're going to have a look, talk about some of the kind of key blockers, key opportunities, the role of government, regulators and industry in doing that, and sort of what some of those opportunities are in the future. We're joined by sort of a really great panel here. We've got people from industry associations, from industry, from service providers, and from regulators to give that kind of supervisory view of it. And we'll have opportunity for questions towards the end. So please do think if there's anything you want to question or raise with our panel. So I'm conscious this is the kind of last session before the closing remarks and the drinks. So without further ado, we'll get started, and I'll just sort of hand over to the panel to briefly introduce themselves. Arabella, do you want to?
Sure, absolutely. I think everyone was in the room earlier, but I'm Arabella Arkaraji. I'm an associate partner at IBM Consulting. I sit in our financial strategy services, financial services strategy practice in the UK, and I work with a number of the large high street retail banks here.
Okay, Adam?
I'm Adam Jackson, Chief Strategy Officer at Innovate Finance, with the Association for FinTech and RegTech in the UK. So we are a membership organisation with about 250 members, covering everything FinTech, from consumer financial services to B2B to infrastructure providers. And I lead on all things regulatory, policy and public affairs.
Great. Natalia?
Hi, hello, I'm Natalia. I am AI strategy lead at Lloyds Banking Group. I'm based in AI Center of Excellence, where we are overseeing a number of projects, including the most recently launched financial LLM, which is the first LLM specifically tailored for customer banking. And also we are developing in-house set of guardrails and governance for GenAI use cases, including agentic AI and multimodal AI and all these buzzwords of the recent times.
Okay.
I'm Onur Koltukcu. I work for the Nederlandse Bank, that's the central bank of the Netherlands, as a policy advisor at the technology strategy department. That means I work cross-sectorally and horizontally on upcoming and emerging technologies such as digital assets, AI, and open finance. And within this role, I'm looking at regulation and supervision of these technologies.
Great, thank you. And I thought we'd just sort of start with the kind of current state and thinking about sort of what some of the key blockers and opportunities there are there for all the kind of institutions that the panel sort of work with and for. I wonder, sort of, Adam, if it's worth starting with you to give that kind of industry perspective on what you're seeing of the key blockers for adoption of AI at present.
Yeah, I mean, as we just heard from Kate from the FCA, I think around 75% of firms in financial services and fintechs are using AI. I think about 17%, this was a Bank of England survey, I think about 17% are using foundational models. And that's kind of up from 58% about 3 years ago. So, majority of FS is using it. But again, and it was alluded to earlier, tends to be in the back office. So it tends to be around the how do you improve productivity of your own operations. I think more of a nervousness around customer-facing AI, and probably some of that about customer responses and consumer trust. So there's definitely a sort of consumer confidence element, but also the approach of the regulator. And in a way, I think, the great message that Kate gave from the FCA has still to kind of ripple out to everyone in industry. The FCA really is, and the bank as well, very positive about AI, but I think people are still concerned about what that means in practice. How does the consumer duty apply precisely, and how do different regulators impact? And maybe a bit of nervousness as well around, it's all very good hearing the FCA encouraging sandboxing, being supportive, but if something goes wrong, we're going to end up with the FOS, Financial Ombudsman Service, and as things stand, albeit they're currently being reviewed, they have been known to kind of take a completely different approach to the FCA. So I think that's sort of nervousness about potentially the approach that regulators and the Ombudsman in particular maybe might take.
Yeah, I mean, that's certainly based regulatory regimes like Consumer Duty and SMCR, where facts can be challenging. And Arabella, I know you were talking earlier about sort of some discussions you've been having with boards in banks, these kind of issues.
Changes and risks in the highly regulated industry. But I think it's really interesting because they can actually use AI to think about how you can have more information more easily and readily available, whether the board or actually within the organization, to be able to make informed decisions. And so I do see that more people are asking for that and looking for that as an opportunity for the future. If you sit in a board discussion or even an ExCo, it's really interesting because people get 60 to 90 minutes to understand a really big opportunity about how that's going to be actually implemented in the bank. That's not a lot of time, and not everyone can be an expert in everything. So I do think that AI literacy is very important. And also thinking about how we can utilize these tools to actually make those better informed decisions ourselves as leaders that are looking at future business outcomes.
Thank you.
Yeah.
Natalia, I think that's quite a good segue to some of the work that you've been doing in Lloyds with AI. Can you sort of talk us through, I guess, some of the board level decisions about how to do that, and then some of the learnings you've had from that project?
Yeah, absolutely. Thank you very much. So I think, we quite pride ourselves at Lloyds that we are very proactive in AI, Gen AI area, and we decided that, it's kind of one of our strategic objectives that we are kind of implement different, having a very critical approach, first of all, to AI across different business units, but also it's a multidimensional strategy. So as Arabella mentioned, it's quite important that we upskill our, not only leaders, but also our colleagues across multiple tiers and multiple levels. Secondly, we also crowdsource information about how AI can be utilized across the bank, because it's absolutely gem of an information. So you cannot get this information out of, the consultants, etc., because have quite, prepared book of, of potential solutions, etc. So it's very dry theoretical type of approach. We actually like talking to our colleagues and thinking, okay, how we can help you with AI, but also it's absolutely, it's like a treasure trove of innovation there. So it's literally coming up with ideas every day for new apps, of new dashboards, etc. So something we cannot outsource from elsewhere. So that's one thing. But also we in this environment of working with AI, learning with AI, what we can do with AI, then crystallized in this strategy which we developed, which is called FinLLM. So we are thinking about, this this dilemma banks usually have, so build versus buy, obviously. So are we buying and procuring LLMs? Because so many of them, some of them are super cheap, some of them are extremely expensive. However, none of them is actually fully, prepared and tailored to tackle all the use cases financial services have. And obviously, we have have a massive customer base, and we would like to serve really, really well, of course. So, as you mentioned, of course, we don't have use cases right now which are Gen AI use cases which are customer-facing because it's an extremely risky area. However, we move it into that area because it's not something which is going to stay forever. We will have customer-facing Gen AI applications. We will be exposing our customers towards a technology. However, before we get there, we made a number of solutions which, for example, which allows us to develop and start onboarding those use cases. So FinLLM is we pride in that model because it's our baby, and we call it a double aligned type of model. So first of all, what we need from the model to make it more or less secure or more or less controllable, first of all, we want it to be trained on our customers' data. So it's if we're serving our customers, it has to respond to the customer's expectations. Also, there's a certain culture, microcosm. So because different banks, they have different customer base, so they will have this alignment element as well. So so this is alignment with customers, but also we have alignment with the regulators as well. So we have regulatory number of documents like vulnerable customers, etc. So this double alignment can allow us hopefully perform much better than any of the third-party procured solutions. So there's been an announcement about FinLLM, I think a couple of weeks ago. Please check it out. It's been widely disseminated and picked up by multiple news outlets. But I think it's quite an interesting approach and quite creative as well. So Lloyds didn't do it on its own. So we partnered with Nationwide. Of course, banks don't do things on their own. We still we try to be quite careful here as well. It was an additional element of guardrailness here. But yes, we put our kind of money together and decided to create something which is quite unique and unusual for financial services.
Good, thank you. And I know, I want to turn to you and hear from you about what you're seeing in the market and also in the EU.
Yeah, from an EU perspective, or more specifically from a Netherlands perspective, what I can attest to what Adam was pointing towards with the regulatory uncertainty, and I think this is the main thing that we saw and also that we report often on. One example that I can give to illustrate the severity of this regulatory uncertainty is that we were in an interview with one of our traditionally major banks of the Dutch sector, and they had a creditworthiness assessment AI system built up, so it was state-of-the-art, really good, and they showed us the statistics of the outcome. So they were expecting, for example, I'm just putting it very simply here, of course it's more complicated, but for example, if the traditional model has a 98% accuracy, this new model that they want to use is a 99.8% accuracy. So it's like clearly better statistically and it's clearly better prudentially for them to use it. But because this creditworthiness assessment is a high-risk application under the AI Act, which will be coming into force next year, the high-risk applications, they were not sure whether the system should be deployed now or should not be deployed now. So they had built a system by in-house, it wasn't bought, nothing, it was an in-house built system that was better than their own systems, and they were not using it because of this uncertainty. And I think this shows very clearly the severity of this regulatory uncertainty when you cannot use a system that is clearly better and that you built yourself, that you know the risks of, but you just don't know how regulation will respond to it. So as a result of these types of conversations, because this was not an outlier, we hear these types of stories many times. So as a result of these types of conversations, we went to organize roundtables with our sector. So we had the major parties all there, and we said, let's come together, let's see what are the biggest obstacles in regulation and how can we answer these as regulators. So it wasn't just us, it was also our conduct authority, our data privacy authority, the three of us together with all the major institutions in financial institutions in the Netherlands. And we came to certain topics such as definitions and the scope of the AI Act, certain topics that we tried to answer, which we tried to get to an understanding towards, and which was also very much valued by them. And we will work this towards guidance at a European level, from Frankfurt, from Brussels, to incorporate some of our findings. But there are also things that we could not find an answer to. And one of the major points, talking about AI, often, not in your case, as I just heard, but often we're talking about third-party software that's being bought in, especially when we're talking about these generative AIs or these AI agents, when we're talking about the more sophisticated, more developed AI systems, then we are really talking about something that is very hard to replicate in-house. And when you are buying it from some of these parties that know that they have some kind of monopoly power, or at least an oligopoly power, it's very hard to get a hold of them or to negotiate contract terms with them. And this is what the sector also signals to us. They have to buy terms and not on their own terms, which really creates engine hood, how the car is working, but you have to drive the car.
Yeah. Arabella, I'm kind of interested in hearing you on that.
No, absolutely. This is also fascinating. I actually just wanted to add something to Natalia's point on, I think one of the challenges is not wanting to be a first mover in the market. And that makes it really difficult because then you're having to come. And when you are legacy infrastructure, and I know that Natalia and I might have some differences of opinions on this one as well, but it's very hard to change and respond. If you do have lots of old data that's maybe in, not completely in line with your platform strategy to move to cloud, it's not ready, it's not prepared in the way that you think would be easily consumable and usable by the people within your bank. And so if you're having to constantly react and not wanting to push and be that first mover in the market, it just is adding more complexity to something that's already quite difficult. And I think the Lloyd's use case is really amazing to show that, you know, you can have that proactivity of trying to push to do something new in the market, and those are the banks that are going to be rewarded, in my opinion.
And do you see people moving to do more sort of in-house models in the future, or do you think it's going to maintain very sort of outsourced and third-party service provider dependent?
I mean, it's a really tough question, right? Because everyone has their own ethos on the build or buy. I think in terms of keeping up with innovation, I would probably assume that there should be more and more partnerships and ecosystem plays looking at purchasing those models rather than just focusing in-house. But I think if those, you know, if there are banks that are ready to take that leap, make that investment, make that priority, then the in-house models can actually be very, very, you know, lucrative in that you are using your own customer data, as Natalia was saying. Right?
Yeah.
And so you have that competitive advantage that you can actually utilize that you might not have if you're looking for something outside the market. But I think fundamentally the real question here is about speed and whether someone wants to do something quickly or maybe not as quickly, or taking that priority and challenge and saying, I'm going to go ahead and take the leap and try and move to be a front runner in the market.
And I guess sort of talking about use of customer data, I mean, one question, Adam, we were talking about before was around sort of how you can build trust from consumers to have their data used in that way, and to what extent that's a blocker on adoption. So I'm just curious as to your thoughts on that.
Yeah, I suppose I have my example of how not to do it, which is Otter AI. I don't know whether any of you have come across it appearing when you're on a Zoom call, or taking a transcript of, so not in financial services, but it's an application, takes transcript of Zoom, but it's one that kind of spreads like a virus. It then automatically sends all the attendees a note to the meeting. You kind of go, oh, that's great, AI is now doing my meeting notes, I'll click on it. Only to discover that in clicking on and downloading the meeting note, you have kind of unconsciously, I think, or not very clearly given your consent for it to access all of your data. And the next thing you know, you get an email from it saying, oh, I noticed you've got these meetings coming up in your Google Calendar this week. So an example of how not to do it in the sense of no kind of obvious consent or clarity, no kind of clear trust framework. But probably the nub of a use case there, and you know, the shame is there's a lot of really good products out there that do the same thing, but without this strange marketing approach. So I think, you know, some of that is about how you roll it out. Clearly, I think as ever, you know, you think about two things around trust. So one is people trust a product that's really good, that serves a need, and that works. So really just getting the design right, just, you know, what Lloyd's are doing really is just build a good product. That's probably fundamental to trust. In rolling it out, you know, basically apply the principles within the UK, the consumer duty, which says you provide clear information up front and you ensure good outcomes. Again, that would, if you applied it outside of financial services to something like Otter AI, would probably have kind of made sure that they did it a different way. I think then the third thing around trust is always the kind of reputation. And reputation is very easy to take a hit, and trust is quickly destroyed, but it's built up very slowly. And I think that's where regulators can help, and probably all of us in terms of education can help. So we know that financial education and financial understanding is low in the UK. The sort of scores on financial awareness are lower than maybe a lot of other countries. The same applies to digital skills and therefore AI. So the more we can do to help people and educate them around AI, hopefully educating them that products like the ones you've described are not high risk. You know, these are not the high risk of super intelligent AI. But I think the other part of that is ensuring that when things do go wrong, and here's kind of an action for the regulator, when things go wrong, the first thing in the press notice, the FCA enforcement action, isn't AI product is being closed down for causing consumer harm. You know, if bad actors, we heard about bad actors before, bad actors are using AI, the thing that's wrong is they're being used by bad actors, and they're usually being used for things that are as old as the hills. You know, it's just you using AI as a technology, as a tool. So I think that when it comes to whether it's FCA enforcement cases where anything does actually go wrong, or FOS, it's not described and put out there as an action against an AI product. It's, you know, action against something that wasn't compliant with consumer duty, that didn't provide the right consumer information, that was providing bad outcomes. So I think that's the other way of building up trust. You know, in the same way that we, you know, it's very easy to say crypto scam. Well, the important bit in that sentence or that is scam. The scammers are using a technology, but they would use whatever technology is available to them. So I think the more that we, when things do go wrong, that we talk about the root aspect of it and not the technology, that can help support trust as well.
Natalia, I mean, just because obviously Lloyd's a very large sort of retail-focused client base. I mean, have you done much work on looking at how much your customers trust use of AI?
So yes, good point. We have model, but we don't have a customer-facing applications yet. So obviously, the majority of use cases are still kind of inwards colleague-focused, colleague-assistant types of applications. So I think it's I think kind of with this model again. I keep talking about this model. I'm so glad we finally released it so I can talk about it. Before I couldn't. Although it's been kind of been discussed for so long time internally, I think the kind of the thing about this model, why I quite like that our leadership made this decision to follow this path, is what we've done. I mean, if you go, because I'm a technologist, I'm a computer scientist, so I'm going looking at those models as from perspective, what does it contain in its belly, right? Data sets, right? In this composition of data sets. But they're not just data sets. They are different semantic spaces. And I mean, all those models like GPT-4 and Gemini, etc., they've been designed to serve the broadest possible semantic spaces. So for finance, for politics, for kind of very generic anything, because their kind of purpose was AGI, so this kind of universal artificial intelligence. So they are kind of almost universal in their design. As a consequence, not. So what we wanted to do is we wanted to, sounds horrible, bias. We wanted to bias this model for finance, and this is what kind of reduces this risk. So I think it's kind of a very simple design, as you mentioned, Adam. Kind of design is the key here, and you're absolutely right. For example, I agree, we built a great model, but model for ourselves again. It's not necessarily going to work for all other banks. Like, it can't be translated directly to other banks, and not simply because of the customer base, but also by the kind of business models of other banks. Are they investment banks or are they, customer? So there are different types of financial models, and those different financial models they will require a different type of bias required in those models to be good for those. So I think as a trust, trust is a very, very tricky kind of space here to discuss, and obviously. I personally believe that customers will trust models which are tailored specifically for them, specifically for this for this jurisdiction as well. But I mean, it's quite difficult to measure before you actually release use cases into the wild. Obviously, there will be different indicators of how customers respond, and also customer sentiment, etc. But we don't have those metrics yet. Hopefully next time.
Next time.
Yeah.
Just interested in your views on what regulators can be doing to feed in on that and help build trust.
Yeah, I mean, during my presentation earlier today, I gave this example of the household survey that we did, which asked 10,000 households in the Netherlands, what do you feel or what do you think about your financial institution using AI to provide your financial services? Which got like 25% positive, 25% negative, and like 50% not sure or no opinion, right? And then the next question was, how do you feel about your financial institution providing a service to you with AI if it's under supervision of the central bank or the conduct authority? And then it's like 70% positive. So I think the role of the regulator in this story is basically enabling the innovation by creating this trust or by creating legitimacy. And I think this is also the point of the AI Act or these regulations, which sometimes can be experienced as obstacles for innovation, right? But on the other hand, especially if you look at a global scale of competition, I think it doesn't seem very likely that European parties are going to be able to keep up in terms of pace of the technology with the USA or with China, which are the leading regions of the world. But I think the AI Act and also the supervision that we have in place here can create like an alternative to it, where we have AI with legitimacy, we have AI with a certain type of quality and personal values, European values ahead of everything else. And I think this creates a very important role for the regulator, where we can actually compete on different measures.
Yeah, I guess it just occurs to me as a bit of a theme there, isn't it, in terms of lack of certainty being a barrier for adoption, both in terms of firms trying to understand the expectations, and then also in creating an environment where consumers can feel that firms are sort of properly supervised and acting in accordance with regulatory expectations when providing the services.
And I think in a broader scale, this is also where the open banking and open finance story goes towards, right? I think it starts with open banking, which creates like the trust for the payment data to be shared, and goes towards open finance. And in Europe, we have the Financial Data Access Regulation coming up, which is the FIDA regulation. I'm not sure how familiar everybody here is with FIDA, but it's a roller coaster. I will give you a little recap of the story. It starts with, well, basically after PSD2, which is our open banking initiative. After its relative success, where now it's commonplace to share your transaction data, it moves on towards open finance. So now the European Commission wants to create a framework where insurance and banking and pensions can all share their information with each other, so that you can get personalized services from your financial institutions. The first big major hurdle was this got very big lobbying organizations against itself, because there was a fear of big techs. Yep. What if a Google or a Microsoft comes into Europe, gets all this data, and then offers the financial services themselves? At that point, the financial institutions would be out of a job, and this would also be a big risk for financial stability itself, for our supervision, etc. So then FIDA got amended, the proposed regulation got amended with lots of, I should say, guardrails or safety nets for gatekeepers to join. Gatekeepers are these big techs.
I still agree with that, yeah, absolutely.
So they created like this big safety net of gatekeepers not being able to join FIDA, or at least only being able to join FIDA if they are under very heavy supervision. So basically making it impossible for a different company to come in and change it entirely. Well, after this, when this happened, they got like backlash from, of course, the big techs this time. And then the whole wave of simplification that's now going through Europe, I'm sure you're also experiencing it here, simplification amendments came, and FIDA was one of the regulations that were dropped. So at that point, financial data access was immediately dismissed, and as a regulation didn't exist anymore. So we, as colleagues, as a team that works on open finance, were like, okay, so our job is done. Like the regulation is dismissed. And a few weeks later, we heard again from like the big institutions that they were pushing for FIDA to be included again. And now we had a completely new text for FIDA, which did not have these obstacles for the gatekeepers. So the amendments that they had made earlier were removed, but now the regulation was back on the table again.
Yep.
And when this happened in the entirety of banking and insurance industry in Europe, so the European Banking Association and European Industry Association, which has all banks and insurance basically in Europe as members of it, they published open letters towards the Commission of, if FIDA goes through, we will not participate. So they were basically openly saying they will not comply with the upcoming regulation. And that's where we are now. So it's like a big stalemate kind of position, where the market would have to come up with standards for the FIDA implementation. And they are basically saying they will not come up with the standards, which means that the Commission either has to withdraw the proposal entirely, or they have to try to force some standards externally, which will obviously not work. So you see this how complex this regulation can get, and I think this also plays into the trust thing, because the entirety of this discussion is about receiving consent from customers to use their data, and this is what it ends up being.
Yeah, and it's an area where actually we need regulation to open up the market and to build trust, because as you say, AI depends. It's about data. It's about using your data. And one of the things that will undermine trust is if you're kind of using rubbish data, maybe scraping it. You know, smart data, when it's quality data, and it's with the consumer's consent. You know, it's kind of the gold standard of data that should therefore, put into AI models, generate the best outcomes. So we should be looking at how we open up smart data, open finance, open banking, to plug it in with AI, and that way, and therefore we need to look at the two. I think in the UK, we've taken because it was competition and CMA driven, on open banking, we took a more mandatory approach to open banking. That has its downsides certainly in the CMA 9 banks feeling a bit done to and regulated, but it has created a framework where there's consistency, there's a really clear trust framework that everyone's had to abide by. And if anything, there's a momentum, I think, with fintechs of saying actually that needs to be applied to everyone in open banking. And I think we're in the UK, therefore, at the point of we now need to take that approach and apply it to open finance. We've got our equivalent, the data bill, going through Parliament at the moment, which gives ministers the powers to mandate data sets to be opened up. I think the more we talk about that as being consumers taking control of their data, because it's ultimately the consumer's data being held by different players, including some of the big techs, and the consumer being able to say, I want that data and that data to be shared with that person for this specific reason, because I can then see that will deliver a better credit scoring for me or full picture of my finances. So I think there's a real lesson there. We have to combine smart data with AI, but that does require the regulator to potentially be quite active in ensuring that happens, and for us to constantly point out that's a way of consumers taking control of their data. It's not about giving any big player or big company access to data. It's always rooted in the consumer's consent.
Exactly, and not to hijack too much of the conversation, but I think that the point you're making here is exactly the point why the regulator has the role of enabling innovation, because this opening up of the data sets and open finance is not going to happen by the market coming together and agreeing with each other, because there are clear competitive disadvantages to doing that. So I think it's the regulator who has to open up the financial data sets in order to create this innovation. So it's impossible in any other way.
But also, sorry, if I can just keep on this thread, I think it's a really interesting one. But looping back to the consumer trust aspect of this, I think it was actually really, really interesting hearing from the panel earlier about digital identity and IDs, and the fact that, people are already happy to give biometric data in order to link into their banking data to be able to, get that personalized credit risk assessment quite quickly, to be able to do things digitally through a few clicks instead of taking a long time and a long process. So I think that, what I'm seeing, at least in the market, is that, when we talk about consumers and whether they trust an AI agent, it usually is that kind of like virtual assistant interface, or whatever we want to call it, saying, I don't want to talk about a mortgage application because it's quite personal with an agent that's artificial intelligence. But if AI is integrated into core processes that make a digital engagement easier and more accessible, people are happy to do it because it's utility, right? It's making their lives easier. We have such a digital generation now that I think that that's just the way that things are going to continue to go. So as long as we see in the future that people understand that actually their data is being used for AI to help enable these digital processes, that will just become more and more the norm until we do get to this almost financial companion world where we do integrate agentic AI, etc., and where people are getting that kind of holy grail of hyper-personalization that everyone's been talking about for a decade. And I don't think we've really even scratched the surface of that.
No. I mean, did you want to come in?
No, I just absolutely agree. Yeah, absolutely. I think it's like, kind of the question is also about AI. We talk a lot about AI, but AI is not only an end game here. It's about the problems we're trying to solve with that AI.
Exactly.
So try not to overdoing AI when it's not required. I think this is where we can lose trust very quickly, because overdoing AI, over pushing AI in places where it's not necessarily even needed. I think this is how AI in the right places in right amounts can do a lot of good. It's done properly, right?
Yeah. I was going to say, just also on this thread, it's interesting, it just occurs to me some of the kind of most interesting customer-facing sort of AI deployments in financial services I've seen, like things like doing budgeting and budget planning using data from open banking, and that's a clear case where budgetary advice is not a regulated activity in the same way that investment advice is, depending on the guardrails you keep it in. And the availability of the data and the structures that enable you to share that actually means people can move ahead with products like that in a way that you just can't in other customer-facing deployment of AI in, say, investment advice or straying into that kind of area. So it does seem like that's availability of data is key to it.
Yeah, and that's some of the good stuff that I think a lot of financial services did with the cost of living crisis. We talked to a lot of our firms, some of the challenger banks and others, and it was budgeting tools that were using AI, and sort of particularly come to the fore in the last few years. I think on the investment side, the FCA work on the advice guidance boundary is really kind of critical. And I suppose that's the point about then the regulators. It's not just the regulators saying we're supportive in the sandbox of AI and we don't regard in the UK AI as high risk, or we want to see AI products coming forward. But I think the other aspect is then the regulator reviewing their rules to see are there any things that get in the way of AI-enabled products. Advice guidance boundary, I think, being the classical one. And that's also about the regulators' kind of risk appetite of if we can, with AI, extend to 90% of the population the sort of financial advice that's currently only available to 10%. But there is a risk that therefore with more people getting advice, a few cases will go wrong.
Yeah.
Are we comfortable with the benefit far outweighing, a small but new risk on the other side of the equation?
And that those kind of, I guess, big questions. I'm conscious I want to have a bit of time for questions at the end of this, but maybe if just ask the panel to kind of consider, say, what they think are the key opportunities looking forward in the kind of medium and long term over the next few years in AI. Ono, should we start with you?
Sure. In the coming 10 years or 20 years, I think there are many opportunities for Europe to reposition itself as an innovator, as a more competitive market. I think that's something that, especially the Draghi report from last year, that's especially something, the innovation gap that's always being pointed to, but also the investment, lack of investment in Europe. And now we are seeing that from Europe some capital being put into innovation, some capital being put into AI specifically. And I think there are big opportunities to position ourselves again on top of the market. But as one of my favorite philosophers, Slavoj Zizek, often says, the one thing that Europe is the best at is missing chances. So I wouldn't be surprised if we missed that chance as well. But I think, especially with the process of the FIDA regulation that I talked about earlier, but also the AI Act and the way the implementation seems to be going right now, it seems like we are creating obstacles where we could be, especially where we could be using these very same things as enablers and as facilitators of innovation. And I think that, especially looking at it from a strategic autonomy perspective, when we're looking at these big LLMs, when we're looking at these big giant AIs, which will move towards these Copilot type, universally used applications that will be as ubiquitous as Word and PowerPoint are now, but more impactful, of course, because Word is, of course, only an application where you put text in, but Copilot will be pointing you towards certain directions. And if the entire industry, not only the financial service industry, but the entire horizontal markets are using the same 2 or 3 applications, which are not European, then you are obviously open for a very vulnerable market. And I think this is something that we need to be approaching as a strategic autonomy and sovereignty type of discussion, instead of just about innovation and regulation. And I think as long as we don't approach it at that level of emergency, then we will keep missing these chances.
It's a positive note. Natalia, where do you see things going?
I mean, it's also kind of aspirational as well. I think that in financial services area, I would see that, or financial institutions in general, I think the change of business models, I think, would be probably inevitable. And I quite like this kind of idea and witnessing this transition of financial services and big fintechs. So we are changing our models, not necessarily as provisioning. So we will be able, hopefully, to provide more as a service as we're moving away from this AI mostly kind of language to as something as a service. What was as a service would be data as a service, insights as a service, analytics as a service. I'm quite excited about what I'm witnessing, at least at Lloyds, is that we are understanding that we're sitting on a huge masses of data. We must do something, unlock some value out of this data in the digital economy as well. So outside just serving our customers well, we can also develop new suite of products which we can share with other partners, with other clients. So transitioning incumbents fins into fintechs, big fintechs, massive fintechs, other than letting technologists, kind of traditionalists, Googles and other big techs, I'm sorry, IBM mentioning here, big tech taking advantage. I mean, it's not really advantage in a very negative way, but kind of taking advantage of other kind of traditional data of other institutions, appropriating it and using it for their own benefit. I personally prefer the trend go in other direction, kind of more ethical direction. So those who own the data and serve their customers should be making kind of, benefiting from that type of service. Yeah.
Adam?
I think the opportunity I see is it is combining AI with other developments like smart data, digital ID, digital assets, and stable coins. So it's kind of, we tend to talk about the full tech stack in financial services. I think that then will create huge opportunities in payments, things like agentic payments, and combining it with wallets, digital ID, in combating fraud, really kind of developing data sharing around that. And then I suppose it's about giving the individual the full picture of their balance sheet, and that potentially really making a big difference to individual financial resilience and financial inclusion. And I suppose the other opportunity I see is the UK as not taking the EU approach of its high risk, but equally not taking a completely laissez-faire approach. And I think there's a real opportunity here with a positive regulator to develop an environment that can build trust but innovation as well.
Arabella?
Brilliant. And again, taking a little bit of a customer lens, I think that we're going to see customer expectations continue to grow exponentially, probably a lot more than we've seen in the previous decade and the next decade. And I think that organizations are going to have to respond. So I hope that, Natalia's prophecy comes true and we can help larger incumbent banks keep pace with these expectations and changes. But, I think even how you interact with your financial services provider will be very different. Voice and being able to ask, personal questions will certainly be here in the next 10 years, in my opinion, and what I'm seeing in discussions in the market. Super apps, I think they were mentioned previously, but having more of integration with your full life cycle and having that kind of cradle to grave relationship with your bank will become more and more common. We hope, because that means we're doing something right. And again, I think it's really important. Like, we've talked a lot about these challenges, and these are monumental challenges. This is not going to happen tomorrow. But there are use cases of these things starting to happen and starting to change in the market. There are fintechs that are starting to eat, incremental pockets of revenue for the large retail banks that we have to look at. You look at the market in Asia, this lifecycle integration has become, it's already happened as part of the banking experience. So I think it's really important for us to obviously take the ethical approach, a guarded and governed approach, but to also understand that speed to value is really, really necessary. And we have to start thinking about, not this being this futuristic view, it's how are we going to be prepared to respond to this in the next 10 years, because it is coming.
Cool, thank you. Much more optimistic take than Zizek. So I think we've got 5 minutes for questions. So does anyone have any questions for the panel?
Can I add one more thing?
Yes.
Whenever I come to events like this about AI, or to lectures, discussions, roundtables, whatever, I always leave kind of disappointed, because one big concern of mine is never mentioned, and I would be hugely hypocritical if I was on the stage twice and did not mention it either. So I think I have to mention it. The environmental impact of AI is huge, and this is definitely going to play a bigger role, I think, towards the future as this is going to gain more traction.
Yeah.
It's completely in its infancy right now. It's just baby steps, and we are already talking about 2% of the world's water supply being used just by Google, Amazon, and Microsoft for their AI purposes. So you can imagine if the expected AI transformation of the entire horizontal economic market takes place, what we will be talking about by then. I heard a statistic earlier from the graduate student over there that one image generated uses as much energy as your entire phone being charged from 0 to 100. And also there's a statistic about every day ChatGPT uses more fossil fuels than the entire automotive industry in Europe in 1 year. So we are really talking about huge numbers here. And right now it may not seem as impactful because even though I think 2% of the world's water supply already seems pretty impactful, when we're talking about this transformation and the bigger AI revolution that's about to happen, I think this has to be one of the topics that is top of mind.
Thank you.
Everyone wants drinks.
Sorry?
Everyone's ready for drinks.
Cool. Well, thank you very much.
Thank you.
Thank you. Well, that was absolutely super duper. Thank you very much for that amazing panel and conversation. We're actually at the end of the day, so I have a few things to do to wrap up. I'm going to just give you a quick overview of some takeaways from today, and then I will go through some other issues with you as well. But while I'm talking you through, I think, some of my takeaways for the day, I'll encourage you to fill in that questionnaire. I know I filled in mine. I'm always up for a chance at a bottle of champagne, so go for it. And even if you don't fancy the champagne, actually your contribution and your responses with any suggestions and comments would be most welcome. So today's been absolutely amazing, and we've heard from a broad range of speakers. So we started the day with an overview of the laws, regulations and codes in this space, just in the UK and the EU, and it was really most impressive. But my takeaway from that is actually we need to tailor our compliance. We need to incorporate compliance into our tech development, and we need to leverage compliance as a differentiator. So how can we make that as a competitive advantage for our firms and not as a drag on our investment in ROI? We then heard from the UK ICO, and the UK ICO is definitely not the Department of No. Instead, we heard about all the areas where the ICO is collaborating with the FCA to provide and enable organizations to better utilize data while respecting data protection. So there's a coming together, a sharing of the objectives, but in a compliant way. And so we heard a lot about there's new guidance coming out in relation to blockchain. There is guidance just been published on the AI strategy and biometrics. There's lots coming out of the ICO. And the tagline there was data is the fuel, but trust is the engine. So really interesting there. We also then learned a little bit about AI and how it operates within our business, particularly in relation to supply chains, and had a really good discussion about how do we identify AI in our supply chains, and particularly when we think about governance and risk management structures. And then another topic we discussed was around ethics and bias. Who decides what's right for an organization? Does it sit with legal and compliance, or does it sit with the central department, or is that shared over many stakeholders? We then had a really interesting discussion and a learning from the Dutch Central Bank in terms of decisions that were made about certain innovations and actually the learnings they achieved when they were challenged. So yes, that obviously it did seem to make logical sense that KYC performed within the space of 3 minutes was unlikely to be of perhaps the same quality or rigor as KYC that took 2 weeks, but it was going through the experience of justifying why they felt that they came to their learnings and to a much better understanding of what are the questions that we need to be asking in relation to AI. Part of the point of AI is that it speeds up processes, that it can process data at scale. And if it can do that in an effective way, it can do that in a way which actually addresses the risks and is in a compliant way, then actually there's more to be welcomed than to be feared. And then I think one of the other interesting things I thought there was actually their fairness metric depends on context, social, and technology factors. So taking a multifaceted approach to understanding risk and compliance was really useful. Another one that was really interesting was about traditional trust, which is earned over time and has been very much rooted in conduct and controls and regulations and audit, versus what we're seeing in innovation and blockchain now, which is emerging trust, which is characterized by automation and coding and real-time transparency. And I hadn't really thought about that real-time bit. The transparency bit seems obvious, but real-time transparency can really make real inroads in relation to emerging trust and how that's actually exemplified. We then looked at agentic AI, which is actually really just another level of scale beyond generative AI. So again, we need to be thinking about agentic AI comes with its own risks and opportunities, but it's at a whole different scale yet again. So quite a lot to grapple with there. I was fascinated to hear that Metro Bank is already using agentic AI, because most of what I've heard is people playing with it and exploring it, and that it's very much at its early stages. So fascinating here that it could actually be being used in reality as well. We had a really good discussion about digital identification and digital verification, the importance of being able to verify identity in order to build trust in the digital economy. And that supports both individuals and corporates, so they can be clear with who they are and what information is required of them. And it also delivers trust to those organizations that are seeking to rely on that verification. And we seem to have gone through those stages of not wanting to go down this road. And now with the innovation that's available, we're able to explore digital verification and identity in a way that is not overly intrusive, but protects confidentiality as well. And how important that is in terms of the fight against fraud and financial crime, and also the interoperability and international recognition that is required. Other things that we listened to or learned about was the US, for example, absolutely huge. The proliferation of state laws that are coming out, particularly in relation to copyright and liability in the AI space. And a couple of numbers stuck with me: 157 executive orders already this year, and 97 executive orders have been revoked, including those ones in relation to AI. So there's a lot of activity in the US taking place. It's not really clear, and it's not necessarily coordinated, but it's certainly one to watch, and one that's very, very leading as well. And then we heard an awful lot from the FCA as well. Well, you heard it here first. No new regulation intended. They're clearly taking their mission quite intentionally there. And also that the new sandbox with FCA and NVIDIA, that cooperation in relation to innovation. What has been interesting is to see a number of regulators here today, a lot of reference to the Digital Regulators Cooperation Forum. Our regulators are very interested in financial services, data and AI. They're looking to learn, they're learning themselves, and they're using themselves as well. So that our regulators are often seen as some of the most advanced in the world when it comes to innovation, and also having a very pro-innovation approach. So it was actually good to see them here looking and learning from everyone at the event today. I know that you've probably got other insights and learnings that you took away, but hopefully those will help you to check off some of those that you may have missed as well. So it now rests with me just to do a few things for you. The first is to thank our sponsors, Latham & Watkins, Alex Partners and TLT, for their support today. Also to thank our supporters, who are absolutely amazing. I'd love to invite you to join us for some drinks around the back of the London City Wall, just around the corner. I think I've asked you to fill in the questionnaire, and also to thank all of our participants online. I understand we've had over 100 people joining us live throughout the day, and it's been absolutely amazing to have you as well. And then to thank our speakers and you yourselves, the participants, for bringing your full selves to the event, and for participating through your questions and your networking today. I hope you've enjoyed it. Katerina, is there anything else I've missed? Oh, it's upstairs. It's not behind the London Wall. Thank you very much, everyone. I mean, it's now past 5 o'clock. It's time for a drink, and a big thank you. And I look forward to seeing you next time. Thank you. Bye-bye.